Sir. Welcome Nitin Gupta sir. I also welcome President of ICI, Vice President of ICI, Past President Praful Chajed sir. Can we have a huge round of applause for all of them? Yes. Good morning, ladies and gentlemen. I truly welcome you to this wonderful program organized by Center for Audit Quality and Pune branch of WRC of ICI. Distinguished guests, respected members of the profession, industry leaders, regulators, my friends from media, and all other participants. A very good morning to all of you. It is indeed a privilege to welcome you to this first ever program of ICAI and NFRA being held jointly. So, yes. Today's program particularly is significant to bring together two important institutions, NFRA and ICI, which are playing pivotal role in nation development. It will be session to deliberate on strengthening of the financial reporting, enhancing the audit quality, and reinforcing public trust in the financial information reporting sector. So I'm delighted to welcome all of you. Today we have none other than NFRA Chairman Sir, Nitin Gupta ji. I welcome you, sir. We also have presence of CA Prasanna Kumar D, President of ICI, CA Mangesh Kindre ji, Vice President of ICI. I'll request President sir and Vice President sir to escort Nitin Gupta ji to the dais, please. It is indeed a pleasure. This program is also been telecasted across the nation on ICI TV as well. So I welcome all the participants, those who have joined virtually. I recognize the presence of Shri Shyam Tongji, Executive Director, NFRA. I also recognize presence of Shri CA Arun Kumarji, Executive Director of NFRA, Past President of ICI, CA Praful Chajed sir, Vice Chairman of Center for Audit Quality, CA Pramod Jain sir, and the person in the first row. We will start the program with ICI motto song. I'll request all of you to please rise for ICI motto song.
यैषस्सुप्तेषु जागृति यैषस्सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तदेवामृतमुच्यते अस्मिन् लोकः अस्मिन् लोकः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता
Thank you. The lightning of the lamp symbolizes removal of ignorance and elimination of knowledge, wisdom, and ethical values. So we will start off this program with lightning of the lamp. I'll request dignitaries on the dais, as well as CA Pramod Jain sir, CA Sham Tongji, CA Arun Kumar ji, and Pranav Apte, and as well Praful Chajet sir, to please grace the occasion for lighting of the lamp. Yes. I'll request now Honorable President Sir, CA Prasanna Kumar D, for this for his inaugural address. Sir has been working for this program since last 1 year, and you can see the program has fructified now. So congratulations, sir. The seed which you have sown last year, now it's been converted into a plant. Yes. So I'll request you to please give your inaugural address.
Most respected Sri Nitin Gupta ji, Honorable Chairperson of the National Financial Reporting Authority of India, and the chief guest for today's function, and respected CA Mangesh P. Kanare, Honorable Vice President of the Institute of Chartered Accountants of India, and Sri Sham Tong, the Director for this program and Executive Director of NFRA, and CA Arun Kumar, the Executive Director of NFRA, and CA Pramod Jain, the Vice Chairman of the Center for Audit Quality Committee of ICI, CA Praful Chajet sir, Honorable Past President of the Institute of Chartered Accountants of India, and Regional Council members, CA Pranav Apte, the Chairman of the Pune branch of WAS of ICI, and all the Managing Committee members of Pune branch, participants in the program, ladies and gentlemen. So good morning to all of you. Good morning. So I am very happy and delighted to participate in today's inaugural function for the first ever program which is conducted in Pune branch. Like it said, there are two ways I am so happy today. Number one, as a vice president, I visited, even as a council member, I visited Pune branch many times. I used to come here. I had one meeting here also regarding Chartered Account Benevolent Fund. We had extensive meeting. And I had some other meeting conducted by ICAI, that is head office. This is the first time that I got an opportunity to address the Pune members as in a program organized by the Pune branch. Yes. So that's one thing I'm very happy today. And second thing, and this is the first program which is organized, so by NFRA in collaboration with the Institute of Chartered Accountants of India. This is the first program which we conceived, Shyam knows that last year we thought of it, but it has come now. So we're also happy about that. And today's topic, creating a better financial reporting ecosystem, is a very great topic which has chosen. So which is akin to each and every chartered accountant, be it in practice or in employment also. Today's program, this entire outreach program has been conceived by NFRA just to see that, their perception is also taken to the auditors, that is chartered accountants in practice. Nitin Gupta ji, as you know, so a short introduction, they will be making anyway formal introduction. Before that, so he's he's IRS officer and is the former chairman of CBDT, which is close to all our hearts. Yes. So he has been in CBDT also. He is a reformist. Many reforms have been brought in during his tenure, not only as a CBDT chairman, be it in investigation and much before that also. That he's a positive thinking person and techno-savvy. He himself, if my memory goes well, he's an engineer, basically. Then came into IRS, then income tax. Very, very technology-savvy person. And we are all aware, when data analytics was introduced, that big data, we have spoken in many forums, what income tax department is doing. The entire thing has been initiated by him. And also in line with the thinking of the government of India, the faceless assessment, which each and every one of us are enjoying that one. Looking, sitting in an office, so we are able to practice, particularly the young women and the senior women who are seeing here. So they never used to go to income tax department. So, but today they are practicing, sitting at home or sitting in the office. So the entire thing is enabled by face assessment. He is also a pioneer in implementing that one. It's not that easy to bring such changes, but Sir took an initiative and saw that it is staying there and it has grown very fast. And it's going to be, we understand from the government that they're going to implement this system in many other enactments also. The assessments or procedures also they are going to introduce this one. So that's the way that AI introduction and also the pre-filled income tax return, which you are thinking about, and collecting the data from GST, banks, and wherever public source of information is there, the entire thing has been initiated. But that's why I am telling you these things. We're all beneficiaries out of the initiative taken by Nitin Gupta, sir. That is the reason I am just telling you all these things. so when he became, when we came to know that he became the chairperson of NFRA, we're all happy for the reason that he is one person who knows what is audit, who knows who are auditors, what are the auditors about. Both the things he knows. That is the reason why on 23rd July 2025, the moment he took as the chairman of NFRA, he started performing that. Because it's not something new to him at all. Sir, so we're very proud of you. We welcome you for this program and welcome you to ICA with this year. Thank you so much, sir. Friends, coming to audit, we're all aware, any commercial establishment or a business establishment, wherever it is, the foundation for the entire thing is financial reporting. Financial reporting is that's also foundation for transparency, accountability, and trust also. We're all aware that in the complex business environment which you are seeing today, so where geopolitical situation is also having a role in the entire thing, and also the gone are the days when we used to have a single location business, and now it's multi-locational businesses and multi-product and jurisdictions. In this complex environment, which is dynamically changing almost every day in and day out, financial reporting is very, very important here. The financial reporting is so important that investors are sitting somewhere in a corner and somebody is running the business. And gone are the days when you used to have proprietary concern, partnership forms, and now limited liability partnership in the companies, particularly closely held companies, no problem at all. When public interest entities are there, the financial reporting is very, very important for us. That is the reason why we have seen the development over a period of time. We used to have annual accounts only once in a year, but slowly it has come to half-yearly. Then it has come to quarterly. Now, given the technology, there is a thought process going on that why don't you make it monthly? That's how things are happening. So that is the expectation of stakeholders. They want to know 3 months period. They feel it's too long a period to assess, because every day something is traded in the market. So they want to know what is happening. That is the way this entire financial reporting pattern is growing. It has started with compliance. We used to prepare accounts only for the purpose of Companies Act or Income Tax Act, or maybe those days General Sales Tax Act. Only for that purpose. But this is not, those days are gone. That will continue to be there. But we are aware today, the investors, the shareholders, the stakeholders, they want to know what is the performance of this particular company or the entity. That is the reason why is compliance, it has gone something beyond that one. So we are all aware that financial reporting is not only auditors can perform that. Financial reporting starts with the management, particularly those who are charged with the governance, and also regulators, and also standard setters. Everyone has got a role to play here. Auditor role comes at the end only. We come only after everything is done, we come into the picture. So where we conduct an audit and give opinion. We're all aware that chartered accountant profession stands on 3 pillars. That is excellence, independence, and integrity. We have got excellence because by virtue of education, by virtue of the curriculum that we undergo, by virtue of the excellent training that is being given, we have got excellence. Independence is the one which is required for giving a fair opinion. That is ensured by our own self. We have got that code of ethics which is there in the blood of each and every chartered accountant. The integrity is an integral part of us. That is the reason why the independence is always ensured. If there is any little conflict of interest also, we don't accept that audit. So it has been taught to us in the curriculum also. We practice day in and day out also. So now, we know that this excellence independence is also one which is carried on day in and day out through our continuous professional education programs which are conducted. So to see that every chartered accountant is up to date in what he practices. Every chartered accountant skills are updated. So that is the reason why CPE program which is conducted by the Institute of Chartered of India is appreciated across the world, not only in South Asian Federation countries, but across the world also. It has been held by everyone. We know that stakeholders, that is the public or the investors, they do not know one thing, that is what is emphasis of matter, what is a qualification, what is the opinion, what opinion, adverse opinion and a positive opinion. Disclaimer, they do not know. They know only one thing. If it is signed by a chartered accountant, it is sacrosanct. Everything is done. That is the public presumption, assumption. That is the reason why our profession has got greater role to play to see that public trust is not only ensured, it should be continuing also forever. That is the reason why the gap, the expectation of the stakeholders, the expectation of regulators, day in and day out is growing. That's why sometimes we feel there's a gap. That gap is nothing but there's a scope for improvement. It's not that audit is not there. It's not that audit quality is not, it is there already. Nobody denies that. But there's a scope for improvement given the today's expectation of the stakeholders. That is the reason why programs of this kind is required to see that, so we excel in whatever we do. So gone are the days when we used to give a opinion that true and fair. People are very happy. True and fair means they're very happy. Oh, fantastic, everything is going on well. But today it's not that. Expectation has changed. True and fair is no more. They say if chartered accountant signs something, it's true and correct. They don't differentiate between audit and a forensic audit. They want anything certified by him is as good as it's 100% verified. If there's a fraud, they see the chartered accountant missed to see this fraud. It may be out of scope at all. You may not know. There's accounting fraud, something has happened. And some other, proprietary angle, something has happened. It's very difficult for a chartered accountant to find. But no excuse. People say, we expect you to do that, but that's what is expected from a chartered accountant because he has got excellence, independence, and integrity. If he doesn't give, who else will give? That is the expectation of society, that is the expectation of stakeholders. Keeping this in view, ICA has been doing a lot of things. We are the standard setters. be it accounting standards or standards on auditing or many other standards have been set by Institute of Chartered of India. Recently, you are aware 3 years ago we came with the forensic accounting and investigation standards also. As early as some 4 months ago, we also came with information systems audit standards also. This has been the requirement of many regulators. They said systems audit is going on in this country for quite some time, but there's no regulatory mechanism for that. There should be some standard. An engineer gives a report, a chartered accountant gives a report, another technocrat gives a report. They are on different formats. There's no standard. The standardization required, that has been the requirement of stakeholders. That's why Institute came with ISAS also. This has been appreciated throughout the world, and everyone is discussing about these particular standards in the world. Friends, you are all aware, as I told you, CPE, in the part of CPE, artificial intelligence is being taught to all of us. This is a new thing which has come. Irrespective of the age, the great thing about the ICI is we have got 803 programs have been held in artificial intelligence till now. I think today, 804th program is being held somewhere. I have seen somewhere in the brochure also. So many programs we have conducted. Close to 50,000 chartered accountants, they underwent this particular training program that know the thirst of chartered accountants keep learning. Do you think that when the AI was taught to chartered accountants, do you think all are 30 years below age? All are 35 years below age? No. Even somebody who is age 78 years old, they came and learned. Level 1, level 2. Now we are going for level 3 also. It has been approved by the council, and we are coming with the level 3 course also. Thereby, each and every practicing chartered accountant in artificial intelligence, they are able to develop their own code. You need not know the code language today. That is also done by AI only. You should know what you need, and AI does the entire thing. That is the way reaping the benefit from the AI, and all our chartered accountants are also getting trained in that one. And the DCMM, Digital Competency Maturity Model, first time it was introduced by us, just to see what type of digital competency each chartered accountant has got it. That's a good initiative, ICI. AQM, Audit Quality Maturity Model, we had version 1, now we came to version 2 also. CAQ is a great job in this connection. It has also come, and this is a good model. It's also appreciated by everyone. Other software countries, they want to, take this particular source from us, and they want to implement in their jurisdictions also. Peer review board, we are coming to new peer review guidelines. Same peer review in a modified version to see that today's requirements are also met. It's also we are going to introduce. It's going to be the peer review new portal, which is automated, 100% automated portal. We are launching on 1st of July 2027 on the CA day. We are going to launch that one. Our idea is, be it a practice unit or the reviewer, no pendency. If somebody is coming with the pen, we don't permit them at all. Everything is driven in the system itself. You'll have great experience. You'll all be happy. Those who are going for peer review after 1st July is going to be there. And FRRB, sir also, when I met sir, we met sir in his office. You are telling your financial reporting review board is a great job. So they also follow whatever the pronouncement to get. We have got a guidance note also. So frequently found mistakes like that is there. So I also appreciated that is a good thing that being done by ICI. See, similarly, we've got TAQRB, and QRB is also there. That's how ICI is doing a lot of initiative to see the audit quality is maintained. Audit quality is so, even CAQ, they also equipping all the practicing chartered, particularly small and medium practitioners with audit tools, some utilities. Every year they are getting it. This year they are planned to get an audit tool for the purpose of tax audit. Very soon they are going to give it. And next is going to be bank audit, corporate audit, and small and medium practitioners will certainly benefit out of the initiative taken by CAQ. We all think about audit quality because audit quality is the buzzword in the entire world. Quality, somewhere is there or not, this is the one way that in the commercial world, audit quality is there, that leads to public trust. As long as the public trust is there, the professionals survive. That is the reason why audit quality is a must for us. Before I close, what is the aim? What is the objective of NFRA? Why that NFRA has come into picture? By virtue of the new Act, 2013 Companies Act, why it has come? It is only for ensuring audit quality in certain sectors. What is the role of ICI? Audit quality. Objectives of both NFRA and ICI is only one objective, audit quality. That is the reason why. What has been shown in the brochure, NFRA in collaboration with the Institute of Chartered Accountants of India, that is only a beginning. Very soon you will see NFRA and Institute of Chartered Accountants of India, we launch all the programs in future. That's it, we'll do it. So these are young. So nice that we have got, Nitin Gupta ji as the chairperson, during his tenure as a chairperson, many things will happen, which will, when audit quality is maintained, which is the aim of the NFRA, who is the beneficiary out of that? National may be the beneficiary, but I am telling you, the benefit goes to the profession of chartered accountancy. Our values go up if these things are ensured. That's the reason why we made a good beginning in Pune. I think this will grow further and take it to greater heights. With this, have a great learning, very good program today. Excellent speakers have been identified, and you don't leave the hall till the end, till the closing. If you leave the hall, you'll be missing something definitely. Don't leave. Have a good learning. When you go with a lot of knowledge and do a good audit from tomorrow onwards also. Thank you so much. Wish you all the best.
Thank you, sir, for your inspiring address. And more importantly, you have shared the initiatives of ICIF, which in line with the audit quality. So I really thank you, sir. And it is indeed your first visit as a president of ICIF, but we are looking for one more visit where we would like to felicitate you, sir, as Chitre sir is not here. So we are holding that back. And accordingly, when you and Mangesh Kindre sir will be there, we will like to felicitate on behalf of Pune branch. So going further, we have visionary personality amongst us, Nitin Gupta ji. So I'd like to take this opportunity to introduce him. Sir, Prasanna sir has already given a little introduction of Nitin Gupta sir, but I would like to again make a mention that he is officer of 1986 batch. He has joined IRS and he is currently NFRA chairman. He was earlier CBDT chairman also, where Institute of Chartered Accountants of India has interacted lot many times with Gupta sir. Also, he is a visionary personal. What he has been into, working into faceless assessment, data analytics, as well as how the financial governance can be improvised, how the compliance reforms can be improvised. So he has played a pivotal role in his entire tenure as a chairman of CBDT. He has also worked as Director General in Competition Commission, that is at New Delhi. At CBDT as well, he has led various roles such as member investigation, where he oversaw the large-scale investigation into financial irregularities and tax evasion. He worked closely on policy level related matters, including the tax reforms, bilateral agreements, regulatory framework impacting cross-border taxation and corporate reporting. So I'll request all of you to please give a huge round of applause for Nitin Gupta sir, Honorable Chairperson of NFRA. Sir, before we call you to the address, we'd like to felicitate on behalf of Center for Audit Quality as well as on behalf of Pune branch. So, yes. Pranav, please. Yes, so I'll request Gupta sir to address the session. Thank you.
For our benefit, we'll sit there. Yeah, that's just to see the
Good morning, everyone. CA Prasanna Kumar D, President ICAI, Mr. CA Mahesh Kinre, Vice President ICAI, CA Prafullit Chajed, ex-President ICAI, eminent speakers for the today's workshop, the participants here, distinguished guests, including those who are, because I'm told that it is virtually conveyed, so those who are joining the session virtually, I wish you a very good morning. At the outset, let me express my joy of coming together of NFRA and ICAI together for conduct of this workshop on the topic of creating a better financial reporting ecosystem. Thank you, Prasanna Kumarji, for your nice words and introduction. The objective of both of us, the organizations into this audit quality who are looking after the ICAI and NFRA, has been common, and we are striving for a better audit quality in the country. It's a historic day. We forge a collaboration towards achieving the common objective, improving audit quality, as I said. I deeply express my appreciation to the ICAI President, Vice President, and the officers of NFRA for the participation made, the role which they had for conduct of this workshop. I recollect I was talking to the President, Mr. Prasanna Kumar, and I recollected 12th February when we met in the evening for a dinner, and Chajed Saab was also there, and that was the thought which was there on that day is culminating today in this workshop at Pune. So thank you everyone for making it happen, making it successful. I believe by the evening we will come to know how successful it has been and what has been your views, because the participants has to be ultimately benefited by all this. इससे आ जाएगा ना? चेयर्स कर दीजिए साइड. So coming back to this momentous occasion, I would like to quote one famous saying: coming together is the beginning, keeping together is progress, and working together is success. So with this objective in my mind, I would like to proceed, and with the disclaimer of an regulator that whatever I am discussing here are my personal views. These are not that of NFRA or that of the executive body of the NFRA. Friends, NFRA and ICAI are the two sides of a coin. How? First, the coin is the same because both organizations share identical objectives. They aim to improve audit quality and strengthen India's financial reporting ecosystem. Both firmly believe, as President has said, that audit quality is of paramount importance and the independence of the auditor cannot be compromised. But we are the two sides. Why two sides? Because the goals are different. ICI is a self-regulating professional body, builds quality from within through training, the continuous professional education, the examination, and technical guidance, which keeps on issuing, which is highly appreciable, as the reference was made to certain standards which are being issued. NAFRA, on the other hand, is a regulatory body, independent one, and the focus has been on the enforcement of quality from outside through independent oversight and monitoring, which includes enforcement mechanisms as well. So NFRA and ICAI can create a complete audit quality framework with professional guidance and regulatory enforcement. There is no competition, as Mr. Prasanna Kumar has said. It is complementarity, and if we do together, it has to be for the benefit of the country as a whole and for the audit fraternity in particular. Coming to the work which we perform, slightly about that, Companies Act mandates that NFRA and ICAI shall come together for the purposes of standard setting. We receive proposals from the ICAI which are examined at the full NFRA authority, and then we recommend the proposals, or the recommendations are made to the Government of India for their notification, be it accounting standards or for the auditing standards. Now, why we say the audit quality, as Prasanna Kumar has rightly said, that the audit quality is of paramount importance, and the signatures which you make on the audit report is seen. The contents are very important. What are the contents you have made in the audit report are seen by the investors, the creditors, the stakeholders, and more particularly across the globe. India, what is India, where we are, and that is very necessary to be understood. Before that, if I say how the chartered accountant is important, not today, but right from the early part of this century, in 1925, a parliamentary committee was set up by the British government. It was called the External Capital Committee. That committee recognized the role of the chartered accountants and as one of the two professions which is essential for the growth of India, economic and industrial. What were the two aspects we talked about were taxation, and the second was the audit and public interest. As you know, taxation is the lifeblood. It is the money which runs the country and the money which is used for the socio-economic development of the country. Direct taxes over last 25 years or so have risen manifold, maybe around 40 times, to touch to around 23 to 24 lakh crore now. Direct tax to GDP ratio has also risen from 3.25% in 2000-2001 to 6.64% in 23-24, and now it should be around the same level. So that is the importance of taxation, which we do understand. And the second is the audit, which is truly a public interest duty, and therefore your profession is called public profession. Among the top 250 listed entities by market cap, around 40 large PSUs and financial institutions including Maharatna, Navratnas, etc. are audited by non-network Indian firms. That is the role which Indian firms, I'm not talking of big six or big four, They are also Indian firms. Let us not think that they are outsider, but I'm saying not non-networked Indian firms. Now, why we are talking that the audit is gaining importance, and it will become more and more important in the coming times to come. We should understand that at a policy level, at a broader perspective. As of now, as you know, the world is moving, but there are growth-starved economies. India's economy is going and growing at a very fast pace. The GDP, what has been the estimates, it is one of the highest which has been consistently being achieved, the growth of GDP, and which is nowhere seen, be it any developed or underdeveloped or developing country. Morgan Stanley projects India's GDP could more than double from 3.5 trillion in 2022 to 7.5 trillion by 2031. Often, Honorable Prime Minister has said that we want to be 5 trillion economy very soon, and maybe in a couple of years or in a year or two, we achieve that target. India is to become the world's third largest economy by 2027 or 2028, surpassing Japan and Germany. Our capital markets are vibrant. We aim to be third largest market by 2030, where market capitalization has doubled over 5 years from 22 lakh crore in 2021 to around 45 lakh crore today. The money raised by companies has been gigantic, probably around 80 to 90,000 crore was raised in the last year itself. Now, this is the era, what we are talking of is the future which we are looking at. And the public interest entities, the listed companies where your role is very important for auditing, is therefore of great significance for the investors, for developing and continuing the trust which they require, the financial institutions require, the stakeholders require, the supply chain requires. That trust can be developed only through quality auditing. It is often said that efficient capital and financial market are necessary for growth. Capital markets are at the heart of modern, transparent, fair economies. We want to improve the participation of retail investors, which is rising, and therefore what we require is a sound corporate governance at the corporate level and a globally comparable, compatible, high quality financial reporting standards and the framework for this purpose. We talk about 5 lines of defense, and let me say the external auditors or the statutory auditors can be said to be the guardians of public interest, and they are at a critical line of defense for all the stakeholders and for integrity of the market. Now, coming to the audit quality, audit quality is a thing whose assessment is very difficult. Who will assess what is the quality of audit? And therefore, some parameters have been drawn, which includes firm-wide inspections, which NFRA undertakes, the deficiency rates which we identify. There are certain audit quality maturity models which have developed. And then there are enforcement measures through which we come to know whether there has been the due process is followed for auditing or not. And then the ultimate test comes through the failures of the corporates. And now this slide is hall of shame. Lots of corporate failures have happened. There could be many causes, but one can say, apart from corporate governance, had the auditor pointed out the deficiencies at the right point in time, probably the investors and the others could have known about those failures, about the likely failures which could arise. And that is the importance of the observations, the declarations which you make in your audit report. Now, in the US, like, see, today's era is where India is, could have been what in the beginning of the century, last century, the USA was. And in the beginning of the last 1920 to 2000, two major cases happened, Kruger and Toll and McKesson and Robbins. And then in early 2000 of the current year, of the current century, Enron, WorldCom, Arthur Andersen episode happened, which paved the way for lot of reforms in the USA, including Sarbanes-Oxley Act enactment and creation of PCAOB. Now, as I was talking about the audit quality, one of the parameters is restatements. Now, this is the data from the USA of the financial restatement of financial statements, and over a period of time, if you see, there was decline in the total number of restatement of financial statements starting from 2005 onwards, and then all of a sudden there has been increase now in the recent past in 2022 onwards. An indicator, just an indicator that yes, there is something missing in the audit quality, could be more improvement is needed. Now, taking a cue from the USA, what we see in India. Now, Indian position is, this is very important for us to know, and corporate scams and failure which happened, which do not rule out the audit failures as well, starting with Haridas Mundra scam in 1955, Harshad Mehta scam we all know about, and other scams which took place. So this also shows that we are not aloof from this sort of problem. About a decade back, we were struggling with twin balance sheet problem. The non-performing assets surged to 14 lakh crore during 2010, 2012, 13 period. And then there were a lot of fraud reportings, the Nirav Modi scam in 2018, collapse of Island FS, and certain banks like Yes Bank, PMC Bank. So all this was witnessed in the initial part of last 2010 to 2020. And then in Companies Act 2013 provided for creation of the National Financial Reporting Authority as an independent audit regulator, similar to the PCAOB, and NFRA was constituted in 2018 in the aftermath of the PNB scam. Now, coming to the audit market, India has a growing audit market. There are about 18.5 lakh companies in all, and our data, MFI data, these suggest that there are about 6,000 listed companies, and majority of the market capitalization resides in around 250 to 500 top companies. NAFRA domain is on all listed companies, and there are several other public interest entities depending upon the other parameters available in Rule 3 of the NFRA rules, based on turnover or type of the activity which the company is taking, like insurance or banking or power generation, like that. There are around, I think, 90,000 audit firms, but around 2,600 to 2,700 audit firms are auditing the NAFRA domain entities. So there is a lot of scope with the capital market flourishing in India and likely to flourish. There is a lot of scope for the auditing of such listed entities and for the quality audit which you perform. Now, in the present era, which is a global churn, there is a lot of disturbance, geopolitical. The COVID-19 happened in the recent past, then the crisis in the West Asia, the Eastern Europe. So, but India is growing, and that's what I would like to emphasize upon. Now, few cases I would like to talk about just for illustration purposes. How do we learn about them, and how can we generate trust and public confidence in the reportings which audit fraternity is making through the audit reporting about the financial statements. One case which is very commonly known is DHFL, and this part of the country has seen this case, you might be aware. There was alleged siphoning of about 11,000 crore by the promoters, and they created fictitious branches, and these branches got fictitious loans. This is compiled from the SEBI's order, and there are 83 fictitious branch entries, Bandra branch entities which they used to say. Now, what we found in our disciplinary findings, that there was a complete disconnect between the principal auditor and branch auditor. The auditors did not look at for what purposes the money was being flowing regularly across the entities, whether the entities were at all existing. So this was something like a fraud which happened in Satyam Computer case in 2008, and what happened in 1930 in Mackison and Robbins fraud, which I had talked about briefly in 1930. Another case is Cafe Coffee Day. A lot of enforcement orders are available on our website. Please look at them. The accounting jugglery which was done to issue check without adequate funds among the group entities near the year end to mask the related party borrowings and loans. Again, it goes back to 1968 in the case, famous case ICAI versus PK Mukherjee, where auditor failed to report loans taken by Anand Bazar Patrika from its employee provident fund account. See, all cases trace back some other case to the which has happened earlier. I would request to read this decision, of famous decision ICAI versus PK Mukherjee. Another case which is in news these days as well, of Reliance Group, the Reliance Capital, bankruptcy of whopping 1,76,000 crores. Look at the web. You should be careful. And suspected related party lending without creditworthiness. These are just illustrations, and illustrations to just sensitize you what has gone wrong, which you should not repeat. The carrying out of the due audit procedures, non-identification of the related parties. If you have identified the related parties and there are financial transactions, not analyzing why these huge financial transactions are being taken, is there any justification? So all these sorts of things which we say professional skepticism, please try to see that you keep on follow that two words always whenever you're doing the audit. And for this purpose, I would like to quote the one of your past presidents, CA H. Dalal, what he emphasized way back in 1989-90, and I would like to quote that, which is so apt today. The society has conferred distinctive status upon chartered accountants who, as auditors, examine and report in organizations in which millions of people have a stake, should endeavor to maintain high standards in auditing. These words should remind each one of you whenever you are doing the auditing. Coming to NFRA, like what we are doing, we are taking lots of stakeholder engagement, inspections, enforcement, and identify the systemic gaps across the three top line of defense, which is management, audit committee, and auditors. And we are adding new tools to serve you and to guide all the participants. The first one is Auditor Audit Committee Interaction Series, which was launched in 2024 with a view to create a dialogue between the audit committee and auditor on complex accounting areas involving significant judgment. And we have come out with 6 advisories so far on complex topics of importance, such as expected credit loss, impairment, RPTs, taxes and provisions, etc. Circulars, so far we have issued, I think, 6 circulars. The latest one was in January on effective communication for TCWG, which is, I think, lot of appreciation I heard wherever I have gone. There is appreciation from at least from the auditor side, that this circular has made their task much easier in terms of 7 January circular. And really I'm saying that the effective communication between the auditor and those charged with governance is one of the fundamental features which will improve corporate governance and better financial reporting. This is already been embedded in the standards on auditing. We have not done anything new. We have just put together all the threads and woven in a fabric which is before you and for the entire corporate ecosystem to follow. Webinars, we are organizing webinars through which is open to all, and I think 6 webinars were conducted last year. We are in process of identifying. Amitesh has been a regular speaker on the webinar, and he has been supporting us all along. Thank you. Recordings are available on NFRA website. You can anytime visit those recordings. And we planned webinars last year in such a manner that these were coinciding with what way the auditing function was being performed, and ending with inventory, I think. And then there was last webinar was something else, that onto the drawing conclusions and all that. So we will plan a series of webinars for this year as well. And then audit workshop, face-to-face workshops across cities. Last year we had 4 workshops across India, which benefit small and medium practitioners. I think there was a lot of tremendous success, and like this year we have started with Pune, and we intend to hold more, many more. Today's workshop, as we see, the topics are very critical, like audit strategy documentation, risk of material misstatement, accounting estimates, and summary of audit conclusions, and a panel discussion as well. So I urge the participants to take full advantage of this opportunity at your doorstep. to know from the eminent speakers and panelists. And then we have issued audit practice toolkits, which are already available. 2 toolkits are available, and we would like to come out with more. You can benefit yourself from the disciplinary orders which are available on the website, and the inspection reports also. So this is the, so far as the standards are concerned, we try to be at par with the international standards, and because trade and commerce has to be at the global level, and therefore regular amendments to standards are being proposed. And recently we had proposed the amendment to Ind AS 118, presentation and disclosure. Then there are a comprehensive set of 40 standards which are pending with the government for the auditing standards. So we are quite prompt in taking up whatever is the changes, and the the ICAI has been chasing us for these. I think we had planned a meeting on 24th of this month, full authority meeting, but let us see whether we can conclude that or not. So we have been at your service for the benefit of the country and your benefit, and urge you that you should follow the standards and keep on improving the audit quality, so that the goal which has been set out is met. Our Honorable Prime Minister on the foundation day of 1st July 2017 had said, and I'll quote, "Follow the path of integrity in discharging the critical societal role of auditing financial statements." NFRA looks forward to achieve collaboration with auditors, which is one of the most critical line of defense in protecting the investors' interest, the public interest, and overall the capital market. Together we can rejuvenate the epithet partners in nation building conferred upon the chartered accountants by none other than Dr. APJ Abdul Kalam. Let NFRA and ICAI join hands to contribute to realizing the vision of Viksit Bharat as laid down by Honorable Prime Minister by 2047. I take this opportunity to warmly wish ICAI in advance for the Foundation Day celebrations. Once again congratulate both NFRA and ICAI for coming together for such wonderful journey which is continuing, which shall continue. Thank you and Jai Hind.
Yes, thank you, sir, for the wonderful address. Can we have a huge round of applause for... Sir, you very well explained about the term competition and complementary. Then you also explained about in future how the accounting profession will be having more responsibility on public profession duty as an auditor. Yes, we definitely look forward for more workshops with NFRA jointly with ICAI, and I'm sure the vision which you have laid down, there is 100% once ICAI and NFRA joins the hand, I'm sure the dream of Viksit Bharat will be definitely come true through that. So with this, I would like to invite Honorable Vice President C. Mangesh Kindre sir to propose a well-deserved vote of thanks.
Good morning to all. Honorable Chairperson of National Financial Reporting Authority, Shri Nitin Gupta ji, Honorable President of the Institute of Chartered Accountants of India, C.A. Prasanna Kumar D. Sir, the Executive Directors from NFRA, Shyam Tong ji, who is actually the pillar of this program, Arun Kumar ji, or a past President of ICI, C.A. Prafulla Chhajer ji, the Vice Chairperson of Center for Audit Quality, C.A. Pramod Jain, the Branch Chairperson, Pranav, Abhishek, Rekha, and other regional council members, branch committee members, and dear professional colleagues. Today marks a very historical day for this collaborative program between the two arms of the central government, designed and established for the same common goal. And therefore, it's a great day. And sir, the beginning is marked in the city of Pune, which is in Marathi called as Vidyeche Mahergar. Vidyeche Mahergar means the hometown of education, or it was also called as Oxford of East. So naturally, the educational program, or the program in which the knowledge dissemination is a main thrust, is starting with the right city, I think. And thank you, sir, for initiating this with ICI from this city. Friends, as has been rightly said by Honorable NFRA Chairperson also, that Chartered Accountants have been called as partners in nation building by none other than past President of India, Dr. APJ Abdul Kalam, sir. And realignment with this thought, ICI has been doing such activities, and audit is something which is again instrumental in developing the nation and also reposing the trust of the entire nation in the financial system of the country. And therefore, as I said, coming together and having the very important program in this regard is very much important in order to have a complete clarity about the concepts of this important function of the audit. And therefore, I must thank from bottom of my heart, on behalf of the Institute of Chartered Accountants of India, Center for Audit Quality, and Pune branch, to Shri Nitin Gupta sir for coming here and giving a great keynote address and igniting our minds and starting this program in a right note. I must not forget the efforts done by Executive Director of NFRA, Shri Shyam Tong ji, and of course our own past President Prafulla Chhajer ji, who in fact actually started this first thought when I think in 12th February when they met. And it was taken over further by Honorable President sir, along with the Center for Audit Quality. And sir, we assure you many more such programs we can do, and definitely it will help the entire fraternity and the ecosystem of the financial reporting framework. So thank you very much, sir, for being here and sparing your valuable time. Thank you, Shyam sir. Thank you, Praful sir, for initiating this. Thank you, Pune branch and Center for Audit Quality, for hosting this program. Thanks a lot. Thank you very much.
Thank you, Mangesh sir. We'll have a group photo on the 4th floor. I'll request all of you to please join there with President sir, Vice President sir, and Chairman sir of NFRA. So I'll request all of you to please gather on 4th floor for a group photograph. It will be then followed by immediately next technical session, which will start immediately after the group photograph. Thank you so much. I'll request Managing Committee members of Pune branch to please stay back. I'll request CA Rekha Dhamankar and Rajesh Agrawal to please stay back. And also Pimpri Chinchwad branch. I request Pune branch managing committee members to please come on dais for a photograph. Ex officio members are also invited. Here.
स्विच करायला सांग त्याला. हॅलो मॅम. हॅलो.
चलो भाई जा. बंद ठेवायचं.
Hello.
किधर? हाँ ठीक.
यहाँ से म्यूट है सर. इसे इधर. हाँ वही पे म्यूट है. ओके ऑन.
Good morning, everyone, once again. Now we move to our first technical session for today's day, which is audit strategy documentation. A well-planned audit is the foundation of a high-quality audit, and effective documentation of the audit strategy plays a pivotal role in ensuring that audits are conducted systematically, efficiently, and in accordance with professional standards. This session promises to provide practical insights into planning documentation and best practices that contribute to audit quality. It is my immense pleasure to introduce today's session speaker, CA Amitesh Datta. Amitesh Datta is partner in the Price Waterhouse and affiliate firms in India with 29 plus years of professional experience. He has also experience in audits of large MNCs and domestic listed companies, IPO audits across various sectors, and multiple accounting frameworks such as India's IFRS, US GAAP. He has played key role in driving transformation and innovation in audit and has also been instrumental in setting up quality policies for the firm, primarily complying with auditing standards and internal financial controls principles. He has also been a speaker in various forums, including regulatory bodies. He guides and mentors a large team of experienced and young professionals in the firm and works with them to transform the way trust solutions are delivered to clients. Using a suite of next-gen audit tools and bots such as RPA bots, Power BI, GNI tools, etc. With I would request all of you to welcome today's speaker, CA Amitesh Dadda, with round of applause. Not taking further time, I would like him to please come on stage and take the charge of the session.
Okay, it's still morning. Good morning, and thank you so much for giving me the chance to speak at this session. Many of you may have seen this practice toolkit already. It's actually on the NFRA website. This was published in November of 25. Before I start this session, just a couple of points. This toolkit was developed actually more as a illustrative tool, educational tool, primarily to enhance audit quality as well as to promote compliance with the relevant auditing standards. Why I say that is because it's very important. All of us as auditors, I'm assuming there are lots of auditors in this room. All of us as auditors know that no one audit is the same. There's no one size fits all, right? So what you see here is illustrative. It will have to get customized to your particular circumstances, to your particular audit. And at the end of the day, finally it comes down to your professional judgment, right? The idea here is just to provide some pointers as to what could be a sample documentation template. And I have some examples while I run through that audit strategy memorandum. It's just to show you an illustration. It's just to show you what could be a sample template. Ultimately, it is for you to take that and use it in your audit and customize it for your audit. I hope that's clear, because that's very important to understand when you go through these the slides. Okay. Do you want a little interactive, or do you want just me to speak? Show of hands. All right. Audit strategy versus audit plan. There is an auditing standard, and no points for guessing it, SA 300. Both are required documentations that need to be there in the audit working papers of any audit. But both serve very, very different purposes. You see this slide. If you look at this slide, can you tell me what is the difference that you see between both sides, the audit strategy documentation and the audit plan? Very high level, at a principle level. Any guesses? So, absolutely. That's actually the absolute appropriate way to describe it. So SA 300, as I said, requires both sets of documents to be in the audit file. The audit strategy actually shows the scope, overall direction of the audit, and to some extent the timing of the audit. It's more directional in nature, more macro, whereas the audit plan, it actually complements the strategy, because that's a preliminary document. The audit plan is far more granular, far more micro. That is where you put down your audit procedures that you want to do. For every business process, for every financial statement line item, essentially the controls testing that you want to do, the substantive testing that you want to do, and any other procedures that you would like to do. So it's really between an overall approach, a preliminary high risk assessment, as opposed to a more detailed risk assessment and audit procedures. So this is just an example of revenue. I thought this is the simplest example to understand. If you look at the audit strategy side, it will show you it's very broad. It is talking about industry, it is talking about trends, and therefore giving you an idea of the audit that you're going to start for a particular year, maybe what should be the focus areas. Whereas the right-hand side, the audit plan side, goes more into details. It's talking about audit procedures. So it's just an illustration, just to show you what the difference is with taking revenue as an example. Okay, so what I'm going to do now is, I'm going to go through, because this session is on the audit strategy memorandum, I will go through the essential components of the audit strategy memorandum as it comes out in SA 300. What are those essential components that need to be documented in the audit strategy memorandum and which needs to be part of your audit file? And I'll go through all of those components, and what I've tried to do also is try to bring out certain examples of working paper templates for each one of them. So let's start with scope of the engagement. Easily understood, right? Standalone financial statements versus standalone and consolidated financial statements. What's the applicable accounting framework? What's the applicable auditing standards? Typically when you're doing a set of consolidated financial statements, and if you've got foreign components, if you've got foreign subsidiaries, associates, JVs, there could be another accounting standard framework that's applicable. So then you will typically have to also think about the gap differences when you're doing consolidation. So all of these actually typically will go into the scope, the appointment formalities, when were you appointed, what's the 5-year term, what's the second 5-year term, to track the rotation. And then of course, other reporting responsibilities, for example, CARO. CARO will pretty much be applicable to every company. There are very few companies today where CARO is really not applicable. And then finally, of course, at a very high level, what is the overall audit approach? Okay, so this is like a sample document. Again, as I said, illustrative. You will have to customize it to your audit, but it goes through those areas that you need to capture. So as I said, if you look at the line for scope of the engagement, typically what it's talking about is, in this particular example, it's talking about the audit of these standalone financial statements and the consolidated financial statements as statutory auditors under the Companies Act. It's talking about the applicable framework. If it's a listed company, obviously the SEBI LODR will also come into play, because there will be quarterly reviews and there will be quarterly results as well as the annual results, which will be presented in the SEBI format as well. Please stop me if you have any questions. As we said, we want it to be interactive. If you've got any questions, we'll take it. We've got an hour. I'll make best use of that, but stop me if you've got any questions as I go along. Yeah. So as I go in, absolutely, I agree with you. It's only an audit professional who will pick that up, because that's our biggest struggle. How do you spot that risk or material misstatement? So there are a few more slides, so maybe it'll answer your question as we go along. Yeah. Yeah, please, go ahead.
Quarterly reporting, or one view is that the quarterly reporting or reporting for the shorter period, it results into taking only short-term view. The long-term view cannot be taken unless the broad vision and this say with help of artificial intelligence and all this, you form some long-term policy. What is your opinion?
So look, it is a regulatory mandate. Today it is the law of our land that you need to have quarterly results. So I don't think we have a choice as auditors to issue our opinion on whether it's limited review, whether it's an audit opinion for the quarter, on the quarter. And there is an Ind AS 34, which talk about interim financial reporting as well, right? Your point on short-term versus long-term, if that is in the context of material misstatement, let's say, right? Now there could be situations where something is a material misstatement when you just look at 3 months. But when you take a view for the full year, based on your knowledge, based on your experience, you might feel that it will not end up in a material misstatement. That's why I said it's an area of judgment, because it's a little bit of a dilemma. And actually, it's a great question. It's a little bit of a dilemma if it's in the context of material misstatement. Because you have 3 months profits, 3 months revenue. I'm just taking those two parameters to keep it simple. And if you have material misstatements based on your materiality, based on that, do you qualify at that point in time? Because you probably think that for the full year, it may not be material. It's a big judgment area. If you ask me, the earlier sessions, Chairperson Sir was also talking about, President was also talking about, we have to think about what is the expectation from the market. Ultimately, our opinion goes out in the market, and therefore there could be a view that the short-term view is also very, very important. You cannot ignore the short-term view. It's a little bit of a qualitative assessment as opposed to just a quantitative assessment. Because that's going out to the market, people are going to read that, people are going to supposedly react on that. I'm not an expert on why stock prices move, but supposedly react on that when we put out our opinion. But yeah, so I think short-term view, if you ask me, is equally important as the long-term view, because that's what the law requires, that's what the SEBI LODR requires in today's date for listed companies. Okay, so the next step is planning meetings. Now, typically when you do planning meetings, you will have planning meetings within your engagement team, within the audit team, and you will also obviously have planning meetings with the client. Now here I'm just assuming it's not a first year audit, just to keep it simple. First year audit, you could be doing lots more in your planning meetings because you yourself are learning about the client. Just to keep it simple as an illustration, I'm saying, let's say it's not first year audit, you're doing maybe second year, third year audit. So there is some experience in that audit team and knowledge about the client. The first thing that is very important, because all of us have shortage of time, right? So when we have these planning meetings, attendance of the engagement partner, the signing partner, the most senior members of the audit team is very, very important. Typically, the quality which needs to be ensured will only get addressed if senior members of the team participate in these meetings. And that is something which is very important. If it's a listed company, it's a public interest entity, you will sometimes also have a quality review partner. So the quality review partner should also participate. Why am I saying this? Because the knowledge transfer to the more junior staff, to the more junior audit team members, will have to come from the senior audit team members. Otherwise, you cannot, at least from a process and design perspective, ensure that it will be a quality audit done to the requirements of the accounting and auditing standards. So that's one part of it. The second part of it is very important for those senior members to reiterate use of professional skepticism, reiterate the Institute Code of Conduct, the professional ethics values, and independence. Because as we heard in the morning, that's the cornerstone of everything that we do. It's very important to reiterate that. Then there will be other pieces like materiality. The entire audit hinges on materiality, and that's an area of professional judgment. It's an area where each one of us will have our own judgment, each one of us will have our own point of view on what is material and what is not material. That needs to be discussed. The rationale for that, as to why you choose a particular materiality, there are slides later on materiality as well, that also needs to be documented at a very high level. And then finally, of course, what are the responsibilities for each one of them? Because you will have, in a team, you will have responsibilities of team members who will perform the audit, right, who will prepare the work papers, then there will be a reviewer. In certain cases where it's complex areas, there could be second level of review as well with more senior team members. So that's something which needs to be, the roles and responsibilities also need to be laid out upfront, and the expectation from each team member needs to be laid out. Now this is very important because, as all of us as auditors know, an audit cannot be delivered just by the engagement partner. It's not possible. It is teamwork, and the engagement partner will have to carry the team to be able to deliver a quality audit. Similarly with the client management, again assuming this is not year one audit, obviously you will go and sit with the client. Typically you would want finance team members. Sometimes there could be even non-finance team members if there have been significant, let's say, if there have been a lot of change in the operations. New products have been launched in the market by your client. You might want to meet the operations people, you might want to meet the business heads of those divisions as well. So typically you will have meetings not only restricted to the finance people, let's say CFO, controller. You may need to, depending on the developments in that year, you may need to go to other functional heads and have meetings just to enhance your knowledge of what has been going on in the company and to understand the business a little better. Because that's always the starting point of understanding the business, therefore the business risk, which will ultimately culminate into identification of audit risk and risk of material misstatement, and where could there be a risk of material misstatement. Obviously you will discuss the financial performance, whether it's quarter, whether it's half year, whether it's full year. Typically you will look at budget versus actuals. You will ask for what has been the performance of the company. Have they met the budgets? If they have not met the budgets, if they have not met the profit margins that were there in the budget, why not? What is the company's view? What is management's view as to why they haven't done it? And then obviously we take it back, we document that, and we use that for our risk assessment. Just remember, most of what you're doing now actually feeds into the SA 315 risk assessment, because that's really the starting point of identification of where could there be a risk of material misstatement, and then you pinpoint your procedures, you focus your audit procedures in those areas. Any questions? Okay. So again, this is a template, just a simple illustration of what I was talking about. Maybe just take 30 seconds to have a look. So I've just put bullet points here. Obviously you'll have to put it a little bit more in narrative form, a little bit more elaborated, because I think what is very important, and what we also hear from some of the inspections that happen, there isn't enough documented to show the thought process of the auditor. Because as I said, it's a matter of professional judgment in many places. So if the rationale, the thinking as to why we did something, why we performed the audit procedure or why we did not perform an audit procedure, if that is not documented in enough detail, there is no way that, forget a regulator, there's no way a third person with reasonable knowledge will be able to make out why we did what we did. So it's not going to serve the purpose. And then the conclusion is going to be, oh, okay, there is a gap. It's not a quality audit. So it is very, very important not to have cryptic working papers, but to have, as they call in legal terms, and I'm not a lawyer, but a speaking working paper. It needs to be elaborated. The thought process, the rationale of the auditor has to come out from the file, because ultimately that is what an external party will see and should be able to understand why we did what we did. Ultimately, that's what we stand up for, right? We say we've done a quality audit because this is what I thought, this is where I think the risk is, we are professionals, we are trained to do that, and that's how we've implemented the audit. And just another template for when you have meetings with the company management. Okay. Moving on to overview of business and the industry. Again, as I said a little earlier, a very, very important part of understanding your client, understanding the industry in which the client operates. Who are the competitors? What's the market position? The products that are sold in the market, how are they doing vis-a-vis the competition? Because as an auditor, either with public knowledge or with knowledge gained over the years from the audits, you are going to have an expectation of what those numbers should be like. because you will have benchmarks. So if this particular sample template was made keeping automobile industry in mind. So if you look at that, there is a comparison to say that the competitors haven't done that well. Actually, the competitors' revenue numbers have shown degrowth or lesser growth, whereas your audit client has shown significant growth in a few product lines. Now that immediately will raise a red flag. Not necessarily a problem, maybe they've done good in the market, but it should raise a red flag, it should raise a question in your mind, let me put it that way, as to how did that happen? If the market was not conducive, how did that happen? And that's the reason why it's very important to understand the market changes, the trends that are there, the peer comparison, as I was saying, competition, and obviously the laws and regulations which will impact it. So for example, we've all seen the labor code which has just come in, right? It's pretty much impacted every company. At least I don't think anybody will have a company where it didn't impact. Could be small, could be very big. It's pretty much impacted everybody. So that will be a topic of discussion. We will have to see whether the company is thinking of it in the appropriate way. Whether the company is also thinking of addressing it, and how are they planning to address it? Will they do an actuarial valuation, or will they do just an estimation and then they say, I will top it up later? So those are the kind of discussions that you would have already had, and obviously we've already closed March 26 for at least the listed companies. So there are points of view that has been taken. And then of course, when you're talking about that, this is the first point in time also with meeting with the client and out here, you start talking about the communication protocol. I think we are very fortunate now that that 7th January circular is there. I actually told Nitin Gupta ji sir earlier that thank you very much. First time you have addressed a circular NAFRA also to the company. Right? Therefore, they have no choice but to read it and implement it. And it's helped immensely. At least it has triggered, at least to my knowledge, it has triggered a lot of discussion, lot of interest, and people are thinking about it. They're thinking about it, they know they need to do something about it. And I think that two-way communication protocol, I think as was put by the president also earlier, I think it was always there. It's just that maybe in execution and implementation of that two-way protocol, maybe it got diluted over a period of time. So we have that, please use that. And I would definitely say don't use that as a deterrent for the company. Encourage them to look at the spirit of that circular and to say ultimately it will enhance your financial statements. Right? That's the ultimate objective. It will enhance your financial statements, it will enhance your financial reporting, your credibility in the market. Yeah.
Sir, in recent times, there was a lot of discussion regarding HDFC Bank paying some additional amount. In fact, that was the English to obtain the higher deposits. That they are making the interest and debiting the different account. So what other banks are doing, and that is the environment, business environment, and I also don't know its allowability for income tax purpose. But
income tax, I'm not going to answer.
that is correct. No, income tax will be a part. But regarding that lot of gossips and the falling of the HDFC prices, but that is not correct, sir. But what other banks are doing that to attract the additional deposits? They may be also doing same things in some other form by debiting various accounts or doing other things.
Yeah, I'm not a bank auditor, but sorry, pardon that. But I think if I understand your question, it's more on governance.
Yeah.
It's more on governance. Now, there could be points of view. Ultimately, the bank is also doing business, right? And if a particular bank is able to offer a rate of interest which is higher than the other, this competition is business. Maybe what is important is, if I've understood your question, it's more about, has the governance process been followed
Yes.
when they were determining these policies and procedures? as an auditor, at least that's what I would look at, because if my client is a banking client, and if my client is offering more interest rates on deposits than the other banks are not able to, or don't have the wherewithal, or don't have the balance sheet to be able to offer that, that's a business call. For me as an auditor, what will be important is, has it been done in an appropriate way? Are there policies and procedures? Have those policies and procedures been followed? If there is a policy, if there is a governance function that needed to happen before those got approved, those higher rates got approved, that's what I would typically look for as an auditor. Because a
Because in
business
this- in this
decision,
case-
I cannot, typically I will not be able to challenge.
So in this case, RBI's view has also not come. That
Yeah.
what exact
So-
ultimate view they have taken, we don't know.
Yeah, so maybe that's something which
Yeah.
probably you'll have to take up with banking experts.
Okay. Thank you.
Okay, so another, just a template. So if you look at, again, these are, as I said, illustration. Just look at what this is trying to show. You've understood the business, you've understood the industry, you've enhanced your knowledge, you've updated your knowledge for that particular year of audit. Ultimately, the objective is a very high-level preliminary impact on the audit, an assessment of what is the impact on the audit. That's the last column, on the impact of the audit. So if there are movements in, let's say, raw material prices, and that's what the client has told you, right? In today's day and age, anything which was based on crude oil, prices have gone up. Freight rates have gone up pretty much for everybody, right? Because of the geopolitical situations. One would go into and expect, especially if raw materials are based on crude, that raw material prices would have gone up. If it has not gone up, it's a question in your mind. It should be a question in your mind to say, why hasn't it gone up? Why haven't your margins got impacted? Have you raised your prices to be able to counter the raw material cost increase? So a lot of times it's also the knowledge that you gain based on what you see in the external world, and you've got to like overlay that with what you hear from the client as well. It ultimately needs to make common sense when you're doing this risk assessment. When you read SA 315 as well, it has got a lot to do with your own professional judgment, your own assessment, but a lot of common sense as well needs to be applied. It's not mechanical. It's not mechanical. I can tell you that's probably one area where AI will find it difficult, right? Because that will need human intervention. You might have templates from AI, but it will definitely need to be fine-tuned for risk or material misstatement. Okay, moving on to the next step or the next component. You will need to do a very, very high level preliminary assessment of the financial performance. This is like some sort of an analytics. So you could do profit and loss trends, you could do ratio analysis, you could do working capital trends, you could do a budget versus actual or forecast versus actual trend. Just to look at, the idea again here is to pick up inconsistencies, to pick up anomalies, and then look at that a little more deeper and try and see why that has happened. Why does that stand out as an inconsistent item, an anomaly, or maybe a high risk area? So it's like a rebut that you need to do, that if there is something which stands out as unusual and abnormal, ideally you will need to rebut that no, it is normal because there are reasons as to why that has happened. If you leave something which comes out as unusual in your file and do not address it, do not answer it, or do not rationalize in your file as to why that is, again it will become an issue of a lack of adequate documentation, a lack of adequate representation of your thought process when you were doing the audit. And if you're doing consolidated financials, ideally they should be done at the consolidated level and also at the standalone level as well. Just a very simple template. I'm sure many of you would already have this in your files. Typically, as I was saying, you've heard from the client, you've understood what has gone on in the year, what are the business objectives, how have they performed in the year. Maybe there were some quarterly results that have already been published. So you will typically look at the previous year's actual, audited actual, and maybe compare, let's say if you're doing this after half year, you will already have the half year results for listed clients at least. You'll have the half year results that have been published. Maybe you extrapolate that to 12 months and then look at the abnormalities if there are any unusual items that are popping out. And that's what then gets captured in this particular template. And then this then goes into a more detailed risk assessment analytics, which is a requirement of the auditing standards in your audit planning document and in the audit planning phase. Any questions? Yeah.
By some other auditors, maybe from India or outside India. So what level of involvement should be of the group auditors in the risk assessment with respect to components?
I have a slide on that. Just hold your thought. Just hold your thought. I'm sure you'll have more questions around that. I'll try and address it. Anything on analytics? Okay. Internal control systems and IT. IT as in information technology. So as you all know, there is a statutory auditor is required to render an opinion on audit of internal controls over financial reporting. That's a requirement of the Companies Act. So therefore, there is a need to understand the design and operating effectiveness of controls. There is a need to understand the internal framework of the company. If you're doing a year 2, year 3 audit, it's very important to understand if you had control deficiencies in the past, what has happened to them? Has the company remediated those? Have they implemented new processes, policies to be able to remediate those? Have those control descriptions itself undergone a change? And then we would typically understand what is the remediated control, and obviously in the audit procedures phase, you will need to test that remediated control. So a very thorough understanding of the entire internal control framework. There is a guidance note issued by the institute, and that's something which one can use because it's very descriptive. It gives a lot of information on how this audit needs to be done and what level of understanding the auditor needs to have of the entire internal control framework. The next part on this is the IT systems. Almost every client today is very, very heavy on IT. The usage of IT, and I'm not just talking about AI, Gen AI and all of that stuff, that's just come now, just complex, sophisticated ERPs. Pretty much all large clients, even medium clients for that matter, will have some sort of complex ERP. I mean, for that matter, even Tally today is reasonably complex, which we all thought is an off-the-shelf package, but it is reasonably complex. You will still have a lot of listed clients probably who are on Tally, probably a lot of them. So there needs to be a very, very thorough understanding of the IT environment per se, the IT infrastructure, the IT environment, and then more importantly, once you understand that, how does it interact with financial reporting? Is there an accounting software? So when I say ERP, ERPs could be it could be operation softwares, it could be something to do with manufacturing, production, marketing, customer relationships. ERPs have a number of modules. But if there is an accounting module, if there is a software which is doing accounting, all the large ones have various modules, large ERPs. We will need to understand how that happens, how is the general ledger generated, of thorough understanding of how the general ledger is there. If there are other business processes, let's say payroll. A lot of companies have standalone systems in which payroll is accounted for. There are a lot of companies who use service organizations. Service organizations use standalone systems and other IT systems to process payroll. So there will be a need to interact with the service organization and get those, what we call as a service organization reports on the controls on that IT system. Automated interfaces, automated controls, IT dependent controls. Can anybody tell me what are IT dependent controls? Yeah, so typically IT dependent would be, it's like if you have reports, system generated reports that come out, which now you are going to use for either your controls testing or substantive testing. So you will first need to be able to rely on the IT system, on the completeness and accuracy of the IT system, to be able to then use those reports for your audit procedures. So it's kind of foundational. You have to first do the procedure on the IT system. If the IT system is all encompassing, all pervasive, you will obviously have to address that first, and then get on to what you can rely on. Because as we all know, every IT system is garbage in, garbage out, right? So we will have to test the IT system, get reliance on the completeness and accuracy of the IT system before being able to rely on the output, whether it's the general ledger, whether it's automated controls, whether it's system generated reports, any of them. Okay, this will not, so to your question on risk of material misstatement, this will not address it entirely, but it's too complex a topic to do in this period of time, and it's judgmental, completely judgmental. But one can think of it in terms of, once you've understood the controls, once you've understood what is the inherent risk for a financial statement line item, one can actually do a combination of saying that, okay, what is the inherent risk, which is really likelihood of magnitude of a risk of material misstatement of a particular financial statement line item. What's the control risk? Control risk is typically the risk that a control that an organization has designed and built is not going to prevent a risk of material misstatement, whether that's due to fraud or error. Right? So there is a control risk. So very simply put, this is just an illustration again. There is no science to this. It's just a way of thinking, just to put it in a particular manner. You can do it in any way which suits you, which makes sense to you. You might have your own methodology to be able to do it. The ultimate objective is to come out with your assessment, your judgment of what is a risk of material misstatement. You could use inherent risk, you could use control risk, you could use external factors that you know which give risk of material misstatement. So for example, if you're looking at goodwill, and you know that the goodwill relates to a subsidiary which is not doing well, and that's a big number on the balance sheet, you are going to have to look at the risk of material misstatement for that impairment of goodwill. That's why I said that I always tell my teams that don't lose sight of common sense approach, right? Or what you hear in the external world, there has to be an overlay of that into the audit. Just a sample document. The first box that you see, all of this is actually in the guidance note issued by the Institute on Internal Controls. These are the original COSO components actually. COSO has moved on since then and they've got many other components, but these are actually the main components of COSO: the control environment, risk assessment, control activities, information communication, monitoring activities. So you will need to be able to document across each of these components of internal control your understanding and your assessment of how robust they are. And then obviously the second table, that also talks about, here the assumption is that there is SAP. SAP, as we all know, will have a lot of automated controls which are configured in it. If you are able to get IT comfort, then actually you are able to then rely on those automated controls that are there in the IT system within SAP. So you were talking about the three-way match. Three-way match is a typical example because that's actually an automated control, right? Where the matching happens within the system. But then to be able to rely on that automated control and configuration, we have to first rely on information technology general controls, the general IT controls. Okay, yeah. Moving on to the next component, an understanding of significant accounting and auditing matters that are relevant for that particular year under audit. With respect to the financial statements, what are the key accounting estimates? Are any of those accounting estimates significant? Have there been changes in estimates year over year? Because typically you would expect that estimation process, the assumptions that go into estimation would be consistent from year to year, unless there is a reason to change that estimation. The labor code is a classic example where everybody had to top up on the actuarial valuation. And that estimation went up because the definition of remuneration changed for the purpose of calculation of gratuity and few other retirement benefits. So if there is a change in estimate, if there is a change in the assumptions to compute estimates, that understanding is very, very important. And then that throws up a very critical question. Is it really a change in estimate or is it an error of the past? And it's a dilemma, right? And therefore one will need to be very careful, and that's where documentation comes in to say, what did I understand? What was done earlier? Was that information available earlier? Then probably it's an estimate, but if that information was not a change in estimate, if it was not available earlier and it's available today, then maybe it's not an error. It is truly a change in the estimation which is required because something has changed. So that is very important. Then moving on to accounting developments, if there are MCA notifications, ICI notifications, NFRA notifications, NFRA press releases, in the banking industry, in the financial services industry, I think this happens pretty regularly, where you will have notification circulars which are coming out from the RBI. So that's something which the audit team will have to keep abreast of, will have to make sure that they are up to date, because all of them could or could not have any impact on your audit client. Listed client, obviously you will have to keep track of, has anything changed in the SEBI LODR? Has SEBI taken out any notifications? Related party transactions, talked about I think everywhere in every company. SEBI has come out with a lot of guidance around that for the company and the audit committee. So therefore we will obviously have to look at all of that. Auditing developments, changes in auditing. If there are new standards or if there are updated standards that come out, which are released in that year, implementation will need to come in. Very soon we are going to have Ind AS 118. That is going to change the entire complexion of the financial statements, which is going to be new for all of us. I actually see it's an opportunity for all of us, right? Because that's something which will actually, what you see today is not what you're going to see tomorrow once in 118 comes, when those financial statements are published. So when that happens, that's something that we will have to really prepare for, probably from today, and encourage our client, because the client has to prepare the financials. Encourage our client to understand. We cannot do it, it's an independence issue, we cannot do it for them, but at least, okay, maybe educate them. Say, go and see this, go and see these publications. There's enough literature. Understand it. Okay, yeah, sorry. माइक दे देना प्लीज. टैक्स का क्वेश्चन है, आप आंसर कर दो. I'm not a tax expert.
So,
Yeah. Okay, if the question is whether we have to see the changes, yes, Pillar 2 changes definitely has an impact. If you're going to ask me beyond Pillar 2, I will look towards somewhere else beyond that. It's not my area of expertise.
No, sir, within Pillar 2 only.
Yeah, no, so that is going to have a significant impact, especially if you have foreign subsidiaries, foreign components, various jurisdictions. Some jurisdictions Pillar 2 has got implemented, some has not yet been implemented. There is a minimum threshold for Pillar 2. I think it's 15%. There's a minimum threshold for Pillar 2. So obviously if you have companies, operations in just jurisdictions, it is, whether it will have an impact or not is a different matter. You will have to make an assessment and then document it in your file. Yeah, exactly. Right now it is no disclosures are required, but I think that will come. Right. Then once Pillar 2 is implemented in India. Right. Thank you. The expert is sitting here if you want Pillar 2. Okay, another very important area, and in my view, sometimes we miss documenting this robustly. Have we even engaged with the internal auditor? Now, as you know, most companies beyond a certain threshold under the Companies Act requires an internal auditor to be mandatorily appointed. Now, whether that is internal to the company or an external firm, but somebody has to be designated and appointed under the Companies Act. Now, it's very important to be able to interact with the internal auditor, to understand what the internal auditor is doing. In any case, we have to comment on it in Caro. So frankly, now we don't have a choice. But it's actually to our advantage to be able to interact with the internal auditor, understand what they're doing, what is their scope of work, what are the areas that are going to get addressed in the year, and actually leverage that work for our benefit as statutory auditors. Because, you know, we are not testing 100% of everything. Yes, I know in the morning there was this thing about once the auditor is signed off, everything is supposed to be perfect. Yes, that is the expectation, unfortunately. But that's not the auditing standards today. It's a gap. It's a gap, and I'm sure it's talked about a zillion times. That's a gap. It's a gap in expectation. So therefore, it is important that if another auditor is doing something, and another auditor has a process finding or some sort of, maybe it's an immaterial finding, it could indicate to other issues. So it's very important to see their reports. Those reports will be issued formally. We need to be able to have access to those reports, right? In fact, we have a right to have access to those reports. Internal audit reports have to come to us as statutory auditors. We will have to look at that. We will have to look at the competence of the internal auditor, the independence of the internal auditor, right? Very often you will find that internal auditors are reporting to the finance team. I mean, it's debatable whether that's independent or not, right? But from a governance standpoint, typically you will find most companies today say internal auditors reporting to the audit committee. So very important to understand their work. There is a full auditing standard on that. If you are going to leverage their work, the auditing standard lays out the conditions on whether you can leverage. So that's something one should definitely look at. The information systems auditor, as we spoke about, if the IT systems are critical, if the company's financial reporting is heavily dependent on IT systems, and if you yourself are not an information systems expert, you will need to have information systems expert as part of your audit team, and they are actually part of the core audit team. You could call them specialists under the auditing standards because they have a special skill which is beyond probably auditing and accounting, because it's an information system skill. But typically, heavily reliant IT systems, which if the client has, they will form part of the core team. It will be the same team which will have to work together to be able to get all that understanding of the system, the IT risks, what could go wrong in the IT system. Because if something goes wrong in the IT system, your financial statements are in any case gone, if it's heavily dependent on the financial systems, financial reporting, if they are dependent on the financial systems, which are IT. Yeah. So, Mike, please. How much time do I have, sorry? 15 minutes? Okay.
Like you rightly said, IT systems are critical, right? So as an auditor, would you rely on SOC reports provided by the software company who is actually providing the accounting software to the company? Or as a medium-sized audit firm, we do not have an IT team as such in-house, which the Big Fours or Big Six have. So how do you recommend that such audit firm addresses the issue, especially when the clients are using heavy softwares from a financial reporting perspective?
Okay, so I think there are two questions which you asked. First one is where you're getting SOC reports, which means you have some outsourced IT processes, and therefore there is a SOC 1, SOC 2 type of report which the company is obtaining, which you may need to rely on. Now, my personal view, a SOC 1, SOC 2 report is not so easy to read. You need to be able to have expertise, not only IT expertise, even controls expertise, because it's basically controls work, right? In the IT domain, sometimes it happens in the non-IT domain as well. Because if you have outsourced a business process, it could have IT and non-IT controls. So a reading, understanding implications from a SOC 1, SOC 2 report, you will need a fair bit of expertise on that. To your question on, can I rely on it? You will have to look at the person, the auditor who's issuing that SOC 1, SOC 2 report, the competence of that auditor. Typically in India, if it's India, and you know that it's a chartered accountant who has issued that, you have that first level reliance. because that competence is given. Now, sometimes it is not always the chartered accountant who is doing this, especially when it's coming from outside. So you will have to assess the independence. So that's the first part. I think the second part which you said, where you're talking about not having an in-house IS expert, information systems expert, that is a risk if you're auditing a company which has very high level of and sophisticated IT systems. In my view, it's a risk because it's very difficult to, you can do a manual audit, but if the way in which the company is running is heavily reliant on what the IT systems are producing, and you don't understand what's happening in that box, it's very difficult to audit that company. Very, very difficult. So that skill will need to be enhanced. If you aspire or if you have a client which has very, very complicated, sophisticated ERPs, IT systems, based on which financial statements are getting drawn, the general ledgers are included there, sub-ledgers are included there, I personally don't think there's much of a choice. That upliftment in the skill set will have to happen. Yeah.
Since we are collecting a lot of information from the client and entering that into the audit software, since we are collecting a lot of information from the client which is confidential in nature and uploading in our audit softwares, running the calculations, processing the data, etc. And a lot of junior staff is knowingly, unknowingly using AI also. So there's a lot of information which is getting uploaded on the cloud server which we don't know where it is. And what would be the risk of DPDP for an audit firm perspective, considering a lot of personal data of the client is getting stored in our servers, in our softwares?
You are completely exposed. Completely exposed. I mean, every piece of data that you acquire from your audit client, you have signed a confidentiality clause in your engagement letter. You don't have a choice. You will have to have systems, processes, that comes in the QMS process actually. The entire QMR and all of that a audit firm is required today to build under the auditing standards. You will have to ensure that. Because actually your engagement letter, you have told the audit client that you will make sure it is confidential. So let's say you're talking about DPDP, sensitive personal information, payroll, we have to audit payroll. We have to acquire payroll data. Once it comes into your file, it is our responsibility to ensure that it remains confidential, remains within the audit working paper, and user access restricted only to the audit team. Now, whether that is an accounting audit software documentation software that you're using for your audit, or whether it's manual work papers, whatever it is, that confidentiality you will have to maintain. I don't think you have a choice. Okay, experts. Actuaries, valuation experts, tax experts. Tax provision will always be there, profit-making companies who have litigation, it will always be there. So you will need tax experts to be able to feed into the audit. Companies more often than not will use a tax expert. So you will need to then make an assessment of the competence and capability of the management's expert. And that also then needs to get documented in the file, because the auditing standard says that if you are going to rely on something which the management expert does, you will need to assess the competence and capability of that management expert and document it in your audit file. So again, just a sample document. So very quickly, what is the scope of work? So if it's an expert, or whether it's, let's say, if it's also a specialist, what is the scope of work that you've agreed with that expert or specialist? What is going to be the output that they will give you? Who is reviewing it? Who is going to take responsibility for it? It will have to be the signing partner finally, but the signing partner, if the signing partner does not have the full competence of, let's say, very complex tax litigation, you will have to take that support. You will have to see whether that's a reasonable conclusion that has come, because ultimately it's reasonable assurance, right? Competence, capability, a lot of, and this is required under the auditing standards. If you want to rely on an expert, you will have to bring in documentation around competence and capability. and integrity and independence of the expert. Materiality. Can't do without it, right? It's the starting and ending point of an audit. An assessment of materiality is an auditor's judgment, professional judgment. But as I said right in the beginning, that professional judgment, that thought process, that rationale has to be documented in the file. So typically SA 320 will tell you that you need to have certain thresholds, right? Typically you will have a benchmark based on which you will determine your materiality. You'll have a percentage of that benchmark that you will take. You will have overall materiality. Typically what that means is anything above that threshold would generally be a material misstatement and would then go to, if the client does not correct it, then it goes towards a qualified report. Then you have something called performance materiality. In the earlier days in the standards it used to be called planning materiality. Typically that's for scoping purposes, right? And there you take a little bit of a haircut from your overall materiality because of something called an aggregation risk. And then you will also have a threshold which is called inconsequential, typically trivial. So these are required by 320, and then of course 450 talks about evaluation of the misstatements as well. So materiality, again, if you're doing a consolidated set of financials, you will have to determine materiality at the consolidated level, and then typically you will also have to determine materiality at the standalone level. And more often than not, what will happen is if your consolidated materiality is coming up to be higher than your standalone, and if you're issuing an opinion on a standalone, which you will, because in India every company needs an audit, at least as of now, it needs an audit. So then you will have to determine that do you need to have a lower materiality based on the standalone threshold. So again, that's a judgment call. And all of this needs to be very, very clearly documented in the audit working papers. The thumb rule here is actually that if you are able to articulate your thought process of how you got to materiality, because it's a matter of professional judgment, right? Those are the thresholds that you're going to use for misstatement, you're going to use for your testing, for your scoping and everything. And then finally when you come up with misstatements, evaluation of those misstatements under 450. You will again use these materiality thresholds.
So you spoke about this 3 months audit versus full scope audit, full year audit. So one thing which when we take a materiality, it is 3 months, but the balance sheet remains for the full year, because it is a constant number. But the P&L number is 3 months, 6 months, 9 months, 12 months. So have you seen in your experience having a 2 materiality for the P&L and balance sheet? Because right now the standard actually speaks about the overall materiality and some specific materiality for specific caption.
Particular class of transactions.
But when you do a limited review, this is a common thing, when you see for whole year it will not be a material, but for 3 months it is a material.
So actually if you go back in time, maybe my age is now going to show. If you go back in time, and maybe Prafula sir might remember, the earlier materiality standard actually spoke about balance sheet materiality separate and P&L materiality separate. Earlier, right? That actually went away with SA 320. Now it's just one threshold that you determine. Now to your question of that disproportionate between balance sheet and P&L, that again is a judgment call, right? What will be material for the P&L, because that's just 3 months, balance sheet is as at, may or may not be material. It's just not quantitative, it will also have to be a little qualitative. It will also have to be qualitative, right? But I don't think in today's day there is a choice to have 2 levels of materiality. At least I'm not aware, unless any other firms are doing it. I don't think so. It used to happen. When I was an article, I know I have used 2 levels of materiality. It was there at that point in time. Yeah, again, just a simple template, again to document. What is important is the fields you see here. What was the benchmark obviously the amount that will come from the financial statement. What is the calculated materiality based on your percentage? And what is the basis of determining? If you're taking PBT, why are you taking PBT? If you're taking revenue, if you're taking total assets. Because the standard allows you multiple benchmarks, right? But it has to be appropriate for your audit client and for the business of the audit client. You'll find a lot of these asset-heavy companies, so let's say AMCs, mutual funds, typically they will be, the balance sheet is very heavy. Another situation of very disproportionate balance sheet to the income statement. A lot of people look at total assets in that situation. NBFCs, huge loan book. Interest income is very small, right? So then they will look at maybe the loan book. It's a complete matter of judgment to say how are you going to do that assessment. Okay, consolidated financial statements. I think there was a question. So I think on consolidated financial statements now there are, if you ask me, in India there are 3 pieces of literature. SA 600, which was always there. There is an NFRS circular that came in to top that up, which is like a bridge between SA 600 and ISA 600. ISA 600R actually, right? And then there are in any case SEBI LODR expectations. Right? So I think today if you are looking at consolidated financial statements, and your question I think was more on what do you need to do on the components, what level of supervision or direction or review that you need to do on the components. Actually the NFRS circular talks about that. NFRS, where these components are material and you are not the auditor, ultimately the responsibility of the consolidated financial statements is the auditors, the statutory auditors, whoever is signing that consolidated report. So you will have to have an understanding of all of those components, especially the ones that are material, the ones that are significant, because otherwise you could have a risk of material misstatement on your consolidated financial statements. So typically, even when you read SA 600, SA 600 actually talks about, right, there is a concept of divisional responsibility, but that does not mean that you don't have some supervision over your components. I mean, you don't have to be intrusive and go and sit there and do the audit for them. Once you've determined that that auditor who is doing that component is competent, you will have to have that discussion, you will have to have that oversight, you will have to have that review process and understand what are the risks that are there in that component, how does it impact that component, and therefore the correlation of that to the consolidated financials. Right? You will still, divisional responsibility will still be there because that's there in SA 600. But divisional responsibility does not mean that you wash your hands off and don't look at the components. So I was saying in the morning in terms of, I think the Yes Bank example, where I don't think in a very large group where you have number of significant subsidiaries, associates, JVs, whether it's foreign, whether India, really doesn't matter. You will have to have oversight. You will have to, should I say, demonstrate that you've had oversight and you actually understand what's going on there, what's the risk out there, how have you covered it for the consolidated financials. So that would mean sending out group instructions, at least independence. They will have to, the component auditor will have to say that I'm independent of the company, right? Otherwise, how are they auditing that company? Right? What are the significant risks that they have identified? Because you may not be that close to that component as much as the auditor of that component. That auditor of the component has done all of this that we discussed and may know risks better than you do as the consolidated auditor. Right? So therefore that supervision, oversight, review is very important. And I think the circular, actually the NFRA circular also lays out some of those things to say how do you implement that? How do you implement that and ensure that you have a full group-wide view and you've done enough to be able to support your consolidated financial statements opinion. Does that answer your question?
So basically, as a group auditor, I may have to do a risk assessment at a group level, but again, it needs to be recalibrated after discussion with the component auditors. and it may undergo a change based on inputs received from. So
Absolutely, because you are looking at it at this level. The component auditor is at that level.
correct.
Is more on the ground.
Yeah.
That is why at least communication, interaction with the component auditors, making the component auditor understand what are you seeing at the consolidated level, and then the component auditor transparently telling you that, by the way, I have this intangible in my books which I think is a risk. You may have saying at consolidated, you may think that's a small number, right? So then that's a discussion to say, okay, why do you think it's a risk? Maybe it's a risk at the standalone, maybe not at consolidated because of the size of the number. It's possible. But all of that direction, supervision, review, risk assessment at the consolidated level needs to come into the file on an overall basis. And then you roll out instructions, you communicate with them, you keep in touch with them during the course of the audit and gain that knowledge.
Thank you.
Sir,
Again,
sorry, just as a top-up question to what sir was saying.
Yeah.
So when we say review, whether that review includes review of work papers at some times, because globally people are sort of aligned to that kind of a practice.
absolutely. You're asking for my view? Whether it should include? If it is material enough, if it is significant enough, you need to request for that. That's why I said, I think there is a very fine line, right? When you ask for review of working papers, you're not doubting the work of that auditor. That's not how I see it. You're wanting to collaborate. You are wanting to collaborate and you are wanting to understand and actually leverage the knowledge that that auditor has, because the auditor himself or herself is competent enough to do that audit. So when you say review of work papers, right, it's not like to say, okay, now you've done the audit, now send me all your work papers, I want to sit in my office and review it. It has to be collaborative, to sit there, have a discussion and say, okay, you told me intangible was a problem, why do you think it's a problem? Right, please tell me what have you done? I mean, it has to be a professional conversation, right? And then that conversation gets documented as to that is your understanding of what has been done. So I think sometimes when we say review of work papers, it's almost like we always take it that I am going to challenge that person. Does not have to be. Does not have to be. Right? And maybe that's the mindset. Maybe that's the mindset. When you say globally it happens, because they may have got to that level, right? And then it's a question of collaborating, right? We are all chartered accountants, we understand each other, we speak the same language, that's most important, right? Yeah.
Regarding actuarial valuation, the normal practice is to accept it as it is, na?
Sorry?
Regarding actuarial valuation,
Yeah.
on which we depend or various provisions are made, a normal practice is to depend on that valuation only, na? That we don't question it, na?
No, so, okay. The actuarial valuation is a complex science, right?
Yeah.
We are not actuaries. Now, there are two things that we do. As I said, actuary is an expert, management expert, competence, capability of that actuary. That's point number one. We have to make an assessment. We will always test the input data. The data that is fed to the actuary to give the output of what are the provisions that need to be carried in the books. We will have to test that data. Now, so insurance company audits. You probably will have an actuary on your team. You don't have a choice. Everything is to do with actuarial valuation. Again, I don't do insurance companies, but I know that insurance companies heavily use actuaries, and they are going to have actuaries as part of the audit team as well. Right? So the idea is that you're not blindly relying on it. It's given to you, take it, put it in your file. No. Read it, understand it. You don't understand, you're not an expert, ask the question. Ask the question. I mean, the classic example is this labor code, right? Different actuaries said different things, at least in my experience. Different lawyers said different things. You have to come to a reasonable ground. Okay, very quickly, I know we are running out of time. Just 2 more slides. Once you've done all of that, 1 to 9 that I explained, there will be a preliminary, the document or a strategy document will have a preliminary risk assessment, very preliminary, very high level. This then feeds into the audit plan. Again, this is just illustrative, the points that are put out here. Yeah, again, just a template that you can use. If you look at it, what was the risk? What is the risk factor? Financial statement assertions, you're mapping the financial statement assertions and then concluding at this point in time, do you think it's a significant risk? Do you don't think it's a significant risk? And then finally, of course, what I spoke earlier, the roles and responsibilities of each member of the engagement team, the level of effort, the time that it will take to do the audit, is that time adequate? Are you going to be able to do a quality audit with the time that is there? Are each of the team members, do they have the skill sets to do the areas that are allocated to them? Those are the things that go into this planning document, engagement team planning document and timetable. Just another template. Yep, that's all that I had. Thank you. I hope it was useful. Thank you.
Very good afternoon to all the members and the dignitaries present in the audience. I'm here to give a formal vote of thanks to Amitesh Datta ji for his excellent deliberation on audit strategy, deliberating right from the macro level of audit strategy to the micro level of audit planning. He has covered most of the all the pointers to be kept in the working papers and our audit file. So on behalf of Pune branch of ICI, I thank Sri Amitesh Datta ji for his wonderful deliberation, and he was today's opening batsman for the day and he has set the tone excellently. So thank you so much. We will not break for a tea, but tea is there. Yeah, tea is there outside. If anyone wants to have tea, they can have tea. We'll continue with the session, but before we go to the next session, we have to felicitate Shri Datta ji. So I request the managing committee member of Pune branch, CA Sarika Dindokar, to join for the felicitation. Thank you.
So good afternoon, everyone. With this, we are looking forward for the next upcoming session. I am CA Sarika Dindokar, Vikasa Chairperson of Pune branch. Welcome you for the upcoming session for the workshop, Creating a Better Financial Reporting Ecosystem, organized in collaboration with National Financial Reporting Authority. We are privileged to have with us CA Milan Modi, an eminent professional and a distinguished faculty, for today's technical session on risk of material misstatements. It is my privilege to introduce CA Milan Modi sir, an all India rank holder in both CA intermediate and CA final, and a practicing chartered accountant with over 28 years of experience. He specializes in statutory audit, management audits, due diligence, reviews, and IFRS and Ind AS. He has delivered 70 plus technical presentations across ICI, BCAS, WRC, and other leading professional forums. He has also served as a technical reviewer for ICI's Excellence in Financial Reporting Awards for 5 consecutive years, besides contributing extensively through professional publications and committee memberships. We are honored to have such an accomplished professional with us today. I invite Managing Committee member. Okay. So, on behalf of Pune branch, I would like to felicitate our today's speaker, CA Milan Modi sir. So please come on the dais. We are certain that today's session will provide valuable guidance and practical perspective and actionable insights that will help us strengthen our professional competence. With these words, it is my privilege to invite CM Milan Modi to address the gathering and commence his session on risk of material misstatements. Sir, the stage is all yours. Thank you.
Yeah, good afternoon. Good afternoon, and thank you for this opportunity. I think a lot of time when the first speaker was speaking, this question did come up about a risk of material misstatement. And I think it's a very, very important topic, or it's the heart where the audit lies. Today, as we saw about materiality, as we talk about sampling, as we talk about large organizations, large data, it is not possible for auditor to check each and everything, each and every voucher, each and every transaction. And hence it is very, very important that we understand where the risk lies so that our resources are directed towards areas where there is a risk, and our audit procedures. See, risk of material misstatement is a dynamic and a continuous process. As you progress in the audit, you will find new information. Once you find new information, your risk assessment may undergo change. If your risk assessment undergoes a change, your audit procedure will undergo change. You may extend your audit procedure, you may extend your sample, you may do additional steps which are required. So it's a continuous process as one thing leads to the other. So keep that in mind, but it's a very, very important part that you channelize your limited resources to the right areas, do the right type of audit, ask the correct questions, look at the correct documents, and based on that and the outcome, you form your audit opinion. So risk to response journey 315, what does it say? It says that you have to identify the risk. So first step is identification of that risk, and then you have to make the assessment about that risk which you have identified based on your audit test, audit procedure, whether it is analytical, whether it is observation, whether it is physical count. Do the audit test, and based on that you will come to know whether the risk is appropriately controlled by the enterprise or not, to ensure that the financial number which are getting generated at the end are true and fair. So it's a risk to response journey. We will look at it a little bit. I was told to make it interactive, so I've made it extremely interactive, but let people come in. I'll try to ensure that you give the answer rather than me giving the answer. So I will pose a question and request you that you try to answer that. There is no right or a wrong answer, so don't worry. there are no marks and your CA certificate is intact. Yeah, so there is a joke. Sir, there is a joke in a CA community that after 15, 20 years, if you were to appear for your CA exams again, will you really pass or will you not pass? And all of us are really skeptical about the final outcome. Sorry, I'm making this environment a little more lively so that before the people join me for the session. So this is a joke, and there is another joke. I don't know, most of you would have heard. CA means come again. Exam dene ka hai, come again and again for exam. Yesterday the CA results were announced, and it is, that's also one of the major areas for an auditor a concern, whether the quality of chartered accountants, we are talking about audit quality, but the quality of audit would also depend on the quality of chartered accountants. And that's an area which the institute and all the stakeholders will have to address to uplift the standard of chartered accountants, because not many people are getting enrolled, the real good ones, because the options are more at this point of time. So anyway, that was slightly off the track discussion. We'll talk about key learnings which are there. As everybody has mentioned, there is a lot of data available. It's there on the website, it's there on the NAFRA website, it's there on the QRB websites, it's there on the FRRB. Peer review doesn't issue anything, but common mistakes or common errors in financial statements are booklets which are available. I have gone through many of them, FRRB as well as the common mistakes. And some of them are so silly. Some of them are so silly that what was mentioned by the earlier speaker, it seems like common sense was kept outside. And that is where the problem starts. We will talk about the practical tips, the risk register takeaway, and a question and answer session. I think we will try to do the question answer throughout the period. Okay, sorry. Just to set the context, businesses are becoming more and more complex. When I first did my first audit, I had a pen and a physical paper through which I used to do a lilac tick mark. There was a lilac pen which was given to each and every article trainee, and there were tick marks, and the tick marks had to be defined. Those days are definitely gone. Today, the whole way in which you do your audit is undergoing change. And that is where understanding the complexity of the business, understanding the IT system, reporting has become more judgmental. Your knowledge is something which you have to use, because a lot of things are being done by robotics. There are robotic automation of accounting entries. Robots are passing accounting entries. So you pull a bank statement, it will directly pass the accounting entry. You generate an invoice, multiple entries will be passed in SAP from there. So your understanding of those, at least the basic understanding, even if you are not an IS auditor, is very important. And what is it that chartered accountant has with him? Trust is the only asset besides time, which is the most relevant asset. It's an intangible. You cannot let that intangible deteriorate. It has to appreciate. So please make efforts to ensure that your trust is never doubted. There is no deficit in terms of trust, and that can happen only if you do a quality audit, and you can do a quality audit only if you have understood the risk correctly. Well assessed, I've already spoken on the last 3 bullets. Well assessed risk, concentrate efforts where it matters and avoids unnecessary work. Major failure stems from incentives, structures and estimates, which is non-arithmetic. So why does a fraud happen, or why does a wrong happen, or why does an error happen? If we understand that, automatically we will be able to control some amount of that. Detection risk is something which is within our control. We will come to that again. What are the different types of risk and how are there interplay between the various risk? Audit risk is a function of, and whether you say it is an addition of or multiplication of risk of material misstatement into detection risk. Yeah, there is a risk of a material misstatement and you were not able to detect it, that led to the audit risk. That leads to the audit risk. And the detection risk you can control by way of changing your audit procedure. But the risk of material misstatement is something which you identify, which is there. That risk is already there. And by the way of detection risk, which is ensuring controls, you may be able to bring it to a reasonable level or a tolerable level. Risk of material misstatement is also has two components, which is inherent risk and control risk. Inherent risk means it is there, irrespective. That uncertainty is there. That risk is already there. If there is a complex derivative contract, there is an inherent risk that you may not understand this contract correctly, and accordingly you may not be able to account correctly. Let's take an example. The CFO has left. There is an inherent risk in those financial statements. Correct? And you would have faced this. Can anybody give me one more example, like a CFO has left or a derivative contract? What could be a inherent risk? Certain sectors have inherent risk. Real estate sector, jewelry sector, where you know there could be other components of a transaction. Like that, what according to you? Anybody over here can give an example of inherent risk? Let's say there is a change in ERP package. That would be an inherent risk in that particular period. So inherent risk and the control risk. Control, if you understand the risk, controls try to mitigate that risk. And both are the same sides of the coin. If there is a risk, there has to be a control. The fact that there is a control, which means that there was a risk something because of which you implemented that control. So you have to understand that relationship. As I said, risk of material misstatement determines the nature, timing, extent and further audit procedure. आपको क्या चेक करना है, कितना चेक करना है, कितना डिटेल में जाना है. Whether you need to rely on the actuary or the actuary has taken 4% salary growth, whereas the actual salary growth is 15% for last 5 years in IT sector. So there is a huge gap. There is a huge gap between an actuarial assumption versus the actual pattern. That's your risk assessment. Yeah, trying to identify that and then challenging that actuary. Okay, can you change if this salary growth is changed from 4%? Traditionally 4% was used because LIC used to consider it for factory workers. But with the service sector going up from 1991, that 4% salary growth which LIC took no longer is valid. Yeah? So these are the things which you will have to look at. Incorrect risk of material misstatement will result in a poor audit quality. It will result in a lapse. It will result in a deficiency. So be careful about it. So this is the starting point for any audit quality. We spoke about part of the inherent risk, control risk, detection risk and significant risk. For example, the fraud risk and the revenue risk are considered to be a significant risk by the standard itself, unless you are able to prove otherwise. So revenue is always a risk area unless you have a rationale why, according to you, in this particular case, revenue is not a concern or revenue is not a risk audit area. Detection risk we spoke about, risk that the audit procedure failed to detect an existing material misstatement. I'll give you an example. Expected credit loss came in. Okay, it is a very, very different model. Till then, RBI norms were, or RBI classification criteria were the basis on which provision was made even for NBFCs. So it was standard, substandard, bad loan, and it was purely based on age. Purely based on age. Now, what is expected credit loss? तुमने लोन दिया तो दिया वो एक्टिविटी में भी रिस्क है, तो डे वन से there is a risk associated with non-recovery, a probability of a non-recovery, and that needs to be provided in your accounts from day one. Now, if you do not understand the concept, ECL is also not easy. Like actuary, there are models, and if you do not study those models, or if you don't apply your basic intelligence to question the ECL model, how many years data is taken, what is the probability of default, what is LDG, if you're not able to understand all that, You may not ask the right questions to the management, and that's a risk of a detection that ECL has gone wrong. And ECL is very important for NBFCs and banks. Control risk is the risk that the entities control fail to prevent or detect a material misstatement. Here I have a point. There is another report which the auditor has to give. Which one is that which has a direct connection with this control? IFC, you're right. Internal financial control over financial reporting. If you have already given a clean sheet there in terms of your steps which you have followed, then generally this is taken care of. Otherwise, there could be issues in the control risk itself. Controls which are there to avoid the risk. Revenue recognition cutoff failures, BRS controls not operating effectively. You would have seen this, at least if some of you are also internal auditors, you would have seen that BRS is not taken seriously or the cutoffs are not taken very seriously. The first one, inherent goodwill impairment testing. I think a lot of discussion did happen. On the goodwill impairment issue. I'll give you a very, very simple example. ये साल आपने goodwill assessment किया कि goodwill is not required to be impaired. That is based on a future projection. Next 3 years का projection लिया. Based on the next 3 years, next year the revenue was supposed to be 100 and the profit was supposed to be 10. Come next year, the revenue is only 80 and the profit has become a loss of -5. What is your role? आपने 3 साल का फ्यूचर प्रोजेक्शन के बेसिस पे ये कंक्लूड कर लिया कि इंपेयरमेंट की जरूरत नहीं है. बट ईयर 2 when it actually translated your projections which the management gave. Now when you ask this tough question, what answer will you will get? Arey, we were going to launch a product that got delayed because approval did not come. Now these are red flags. Yes, okay, product did not got launched, you did not get approval, but when you gave me the projection, you should have provided enough contingency. Now you cannot use an answer that year when I gave 3, I thought I will get this much market share, but a new company came in and that's why I could not capture. Fine, that's a business risk. So now deal with the impairment issue more seriously. ये चीज हम लोग नहीं करते. Once an impairment testing is done, first year I can give you a benefit of doubt. Second year there is no benefit of doubt because you have the knowledge, you have the hindsight of reality versus what was shared with you in the year 1. Am I clear? Do you agree with me? आपका क्वेश्चन आंसर चालू हो रहा है, अभी थोड़ा वार्म अप हो जाइए. So that is the goodwill impairment. New ERP system implemented, derivative contract we spoke about, revenue recognition, as I said, is a significant risk, which is unless you can rebut it. What sir also mentioned about rebuttal. Yeah. I'll not go too much into this because this has already been discussed. Nature of entity, industry, regulatory and external factors have to be understood when you're doing this risk assessment. Objective strategies and business risk. What are the business risks? For example, today, because of the geopolitical, the petrol prices, there are a lot of risks which have got emerged. Now, a very simple risk. Can somebody talk about a very simple risk which has got generated due to the war? I mean, it has got concluded now, but due to the war, what do you think? What is one of the largest risks? Forex. Forex. If you have a lot of imports and you have a contract, a government contract, which is based on an import, then automatically your profitability will go for a toss. And on top of it, if it's an infrastructure project where you're following POCM, you will have a cascading effect till the end of the project. Yeah? Sorry, somebody said LPG. Supply risk. Yeah, so, but you will have to see that this industry, this sector, this company, how is it directly impacting my audit? Raw material prices बढ़ गया, but my sale price is fixed, which means there is a NRV testing even at the raw material level. See, generally raw material is carried at cost and you do not provide for it unless the end product out of that raw material is going to result in a loss. So these are the things which we will all look at. Labor code somebody spoke about. Yeah. So these are the things there is a very important part in that labor code, just to explain you a little bit, where people make mistakes, sir. It has a reverse definition that everything is wages except 11 components. And it says that if after that what you arrive, wages, if it is less than 50, then you assume it to be 50. So you have 100 rupees, you can minus 3 items, 10, 5, 5, 20 minus kiya, bacha 80. Then 80 becomes your basic. Then 80 becomes the base for your gratuity calculation. Had the resultant been 45, you would have superimposed it with 50. Now people make this mistake. People think mera to already 50 hai. My basic is already 50, so I don't need to worry. No, that's not the correct answer. Your basic could move up from 50 present to 60, and 60 could be the base on which your gratuity has to be computed. So unless you understand this, and this understanding, as somebody did mention, different lawyers are having different views, interpretation, but these are the risks. And if you find that there is a large organization and your capability is insufficient, first understand that my domain expertise is lower than what this demands. If it is lower than what, क्या करना चाहिए? किसी और के पास जाना चाहिए. Simple. Take help. Take your professional brethren help. Take an expert help. Take a lawyer's help. किसी का भी help लो. Don't shy away. Don't close your eyes because it's a difficult question to answer. Yeah? Are you all with me? The tea has worked. मैंने नहीं पिया चाय सुबह से. So the rest of it, I think we can skip that part. We understand that part very clearly. Risk of material misstatement is at 2 levels. One is at the financial statement level, and one is either a transaction or a balance level. Are we clear at this? कौन से 2 level है? एक micro level है और एक macro level है. Which are the 2 levels? So one is the financial statement level, one is the assertion level. Financial statement means going concern ka issue hai, which means it affects all the items in your balance sheet because your asset has to be at a recoverable value, your liability has to include contingent liability based on probability. So it's a all pervasive. That's your financial statement level. Weak control environment closely linked to fraud risk. And requires overall response. Again, this is another thing. You know, sometimes we fail to understand the company and put the right resource within our team. I'll tell you, when there is a time short, I put 2 people in my team because I know कि वो पूरा रात जाग के काम कर पाएगा. So you also have to select your team accordingly, those who can stretch without the quality getting impacted. Assertion level, specific to a class or a transaction, account balance and disclosure. Identify the relevant assertions which are getting impacted, for example, existence of inventory or valuation of receivables. Directly drives nature, timing and extent of the test of controls and the substantive procedure. Assessment may change as evidence is obtained. This is what is very important. I'll give you another example. During COVID, there was this waiver for liquidated damages for government contracts. Yeah. Now, it can't be a completely unconditional waiver, right? There were few cases where the government department may not have waived off even to MSME because there was a genuine delay prior to COVID. Now the management may say, now liquidated damages are waived, so I will not account for it. So those are the risk of material misstatement. You will have to deal with that. Again, as I said, any issue which you identify, and this is what I tell my clients also, if you have identified in Q1, time is generally a constraint. By Q2, it should get resolved. If it's in Q2, it should get resolved in Q3. But if it's in Q4, it has to be resolved in Q4 because there is a limited review and there is an audit. Yeah. So understand, and that's where your educating your clients is very, very important. It's not a one-way thing. you will have to tell, and as people mentioned, those charged with governance has वो ignite हो गया है. The right type of questioning or the right type of, including audit committees are asking, what are we supposed to do now additionally than what we were doing earlier? They are asking us only that same question. Risk assessment procedure, inquiries, analytical procedure, observation and inspection, discussion with the audit team, because audit team is junior, quality of the audit team is not relevant. When you are signing, you can't cry and say, अरे वो आदमी मेरा जो था वो बीमार पड़ गया तो इसलिए मेरे को, no, that's not allowed. And just to tell you, on SA 600, somebody asked the question, it's very clear, it's your extended team. SA 600, as per the revised NAFRA circular, it's your extended team. It's like your audit team. जैसे आप audit team का responsibility लेते हो, same way you will have to take responsibility for your component auditors. Plant visits, walkthrough, MIS contracts, legal cases. Nowadays what I've seen is the younger generation also has some advantages. With due respect, what they do is they use AI to read long contracts and make summaries for the financial perspective. So there are good advantages of AI, where AI as a tool should be used to shorten your audit time. If you have not discussed with the audit team, if the engagement partner has not spent that time, then obviously that's a issue which is not correct. So some of the risks which are generally there, operating in an unstable region, going concern and liquidity issues, constraint on availability of capital and credit. This is very important. Constraint on availability of capital and credit. If the borrowings are there, or they are not able to generate enough cash flows, new product, new lines, new locations, larger acquisitions. So if there is over leveraging, obviously that's a red flag. Larger acquisitions, reorganization and usual events. Within the group also nowadays I see that a lot of acquisitions happening. Try to understand what is the reason behind this acquisition. You have a group entity, you have a subsidy gets merged, and then after 2 years again a division of this gets demerged. अब ये सब का क्या मतलब है? Must be some objective. Try to understand that and look at it from an audit perspective. Complex alliances, joint ventures and off-balance sheet structures. I'll tell you, I had done an audit where the contractor was exclusively doing work for this particular company, and there was a minimum guarantee and a cost plus arrangement with them. Now, those are all obligations. Those are onerous responsibilities. You will have to account it even before they come. Yeah. So try to look at it from that perspective. Somebody questioned about the materiality on a quarter versus materiality on a yearly basis. I think it will still have to be a single number. And what is relevant is for that quarter, and that there are no prior period quarter items. So quarter 2 में quarter 1 का कोई item नहीं होना चाहिए, quarter 3 में quarter 2 का item नहीं होना चाहिए. On an annual basis, it's not a prior period. But when it comes to a quarterly reporting, it's still a prior quarter item. So be careful about these things. Control deficiencies not addressed by management, departure of key executives like finance person. And that's where, the HDFC example, sir, what you gave about interest. There was another example. The senior guy over there left raising concerns, some doubts. He said because of the culture mismatch or something. I don't remember his words. But those are definitely red flags. The auditor of that year will have to address it. He will have to speak with those charged with governance, who will then have to share and give the comfort to the auditor. It's possible nothing comes out of it. But nonetheless, litigation, contingent liability and prior period items. You will always find few clients who are always litigative. Kuch bhi chota hota hai, they want to litigate. So be mindful of these type of people. Why do they want to litigate each and everything? Yeah, there must be something. Based on your preliminary discussion, based on the information which you gather, you will have to respond. You will have to decide your test of controls. You will have to first decide high, medium, low, which is what we saw in the quadrant over there. And the risk is impact of two things. One is the probability or the likelihood of that happening and the amount to which it has a impact value. So when you multiply that two is where the risk becomes higher. So if the probability of something happening is high and the impact of that in value terms is high, it's a high risk. And same way, if the probability of something happening is low, और इसके लिए मैं एक आपको एग्जांपल देता हूं जो मैं बहुत ही पहले देता था. Latur had an earthquake, if you remember. So there is a seismic zone, and based on a seismic zone there is a probability whether an earthquake will happen or not. So Latur was on a high seismic zone, so the risk, the probability of it happening was high. Yeah, so that's where it becomes very clear that this is a risk prone zone. So if you have a data center there, obviously it's a problem. Sorry sir, you were saying something? Yeah, please.
If towering personalities like Ambani, Adani, if for the sake of raising finance, IPOs,
Yeah.
if they effect merger or demerger or acquisition, what objections auditors can take? Now, I have not seen any objections.
Sir,
taken
I'm
for
not
the-
saying you take any objection. I'm saying just try to find out the reason behind it and see that is there any other motive and is there a risk associated with that transaction? Is that transaction, what happened in Enron? Just to give the example, the complete bad loans were transferred to another entity where employees were the shareholders and promoters and it was not consolidated.
It
This is
means
what happened in Enron. So,
Yeah.
I'm not saying you doubt it.
Yes.
But try
Auditors
to,
have auditors
but
have
look
no
at the
role to-
governance process now.
Yeah.
Look at what discussion happened at audit committee level. Today audit committee is also becoming very intelligent. I had a case where the related party transaction, they said, no, I want a valuation report and I want everything to be documented. So the audit committee is also becoming more aware. Independent directors are becoming more aware. Related party transactions are being questioned. Like a transfer pricing, which is there in income tax, it is now there in accounts. It was not there 5 years back, 10 years back. 10 years back कोई पूछता ही नहीं था क्या रेट पे ट्रांसफर किया. ठीक है ना, कंपनी को कुछ फर्क नहीं पड़ता है. So nature, timing and extent, larger samples if required, shift procedures from interim to period end, more reliable external sourced evidence. This is again very important. What happened in Satyam? Satyam में क्या हुआ? जो PDF फाइल था उसको ऑल्टर किया हुआ था FDs का. So you ask for a direct confirmation ना. उसके बाद when PwC Satyam happened, after that all auditors have become vigilant and they ask for direct confirmation from the bank. So these are processes evolve. This evolvement helps and it improves the audit quality because you have now found कि अरे PDF फाइल भी अगर अमेंड होता है तो क्या चीज पे रिलाई करने का, which means you need direct confirmation. हाँ. Now, so this is the, if you will have to identify the risk. Do you see any risk? There is a listed EPC contractor executing multiple large infrastructure projects. Several projects are in different stages of execution across locations. Project plan and commercial terms were updated during the year. Management performs periodic review of project performance and profitability. The company has significant borrowing from lenders. These are the facts based on your past previous year's audit experience. आपने last year audit किया, उसमें कुछ information आया, second year है, और अगर आप बोल रहे हो first year है, तो first year your detailing has to be larger. If you think your first year audit and second year audit you can follow the same process, you are wrong. First year will require more bandwidth, first year will require more senior time, first year will require a little more extra checking. Nobody talks about it. Yeah.
Auditors were behind regarding Satyam, you have rightly pointed it out. But the other factor is also that the auditors were behind the bars for 2-3 days, and Raju has
Sir,
enough time to make changes and destroy records and destroy evidence also.
So let's not go into that political discussion.
No, but that is also risk, na? Risk that is also there.
अभी वो तो ललित मोदी is somewhere else, Vijay Mallya is somewhere else, वो सब चलता रहेगा sir. Let's not, as auditors, let's not get distracted by that. We perform our duty. We stick to our basics. And if we find that things are wrong, we refuse to sign. And how can you refuse to sign when you don't have dependency on one single client? First, you need the knowledge. No, no, there are a lot of firms who have single client focus, and then they can't refuse. That's a problem. And all this is documented. Sir, all these threats are documented in the auditing standard also. Whether you talk about SQC 1 or other places, I think a lot of people are trying to. Anyway, so let's go ahead. So, sorry, you all have not answered, but you will be able to relate to the answer. Judgment in project revenue recognition is an area. POCM inherently has a risk. क्योंकि POCM में, just to explain you a little bit, contract का revenue fixed है, contract cost तो estimate है. अभी वो estimate 5 साल का estimate एक तो आपको समझता नहीं है engineering. You are not an engineer. उसने दिखाया 20% मार्जिन है. 4 साल तक आपको पता ही नहीं चलेगा कि वो 20% अचीव होगा कि नहीं होगा. 5वें साल तो मालूम होगा. So that's your judgment about the management. But it's a risk. So try to find out how do you counter that by taking architect certificate, by taking engineer certificate, by visiting the site, whether actual work is progressed or not. There are multiple ways where you can try to corroborate, or at least if it is zero होगा तो मालूम पड़ेगा ना. अगर वो बोल रहा है 25% काम हुआ है और जाके देखा कुछ भी नहीं हुआ है, उतना तो मालूम पड़ेगा कि नहीं. तो करो ना, पहले उतना तो करो, फिर आगे का देखेंगे. Estimation of project cost and profitability, changes in project plan and commercial arrangement. If you see, there has been a change. Now, whether the documentation is there, whether that change, how is it initiated, whether you have got the right approval, will there be an escalation, will the escalation be approved or not. Try to look at all those things. Ask the management. Na? Control is reliance on project review and monitoring control. Now, here there is a very large risk because management can override that control. Okay, there is an over dependency on management. So, what you do is at different point of times ask little more intelligent different questions to different team members and see whether any inconsistency is emerging or not. Assertions impacted, occurrence, cutoff, accuracy, valuation and completeness. Recalculate assessment and audit response is to recalculate the project stage of completion, challenge cost estimate judgment, test significant project changes and contract to revenue. One thing which we do and we try to do, इसके जितना balance revenue है उसके सामने balance cost क्या है उसका एक BOQ मांगते हैं. Yeah, balance revenue versus the balance cost which is left out. It's a reverse checking. But again, even if that is not done correctly, you will very difficult for you to know. So if there are technical matters, you will have to take some help somewhere or ensure that you report it appropriately. That is why if you see, there are a lot of audit reports where you will see that this being a technical matter, we have relied on management. Because there is no option. I'll give you an example. I was doing for a jeweler. अभी diamond दिखाया, वो diamond है कि कांच है, crystal है, आपको पता कैसे चलेगा? So what we do, we take out a sample from there. We go to an independent valuer. We match the independent valuer certificate with the value which was assigned to that by the management. And if that sample is correctly done, we say, okay, we are relying on it. But अगर आपने वो नहीं किया, तो कल उठ के वो डायमंड की जगह पे कांच आया तो आपको ऑफिस की जगह पे कहां जाना पड़ेगा आपको मालूम है. ठीक है, जाऊं आगे. Okay, okay. I started late, sorry for that, but sorry, sir, you were saying something. Which evidence? Artificial intelligence. I think so. Some sort of a tool you will have to take assistance of. we'll go to the next case study. There are 11 case studies, and then I have to wrap up also. So this is a case study from NAFRA, just for your information. It's available on the website. It is staff series. So I will not elaborate this, but understand what it is trying to say. There were 4 risks. These are the 4 type of risk. This is the inherent risk. Control risk is further bifurcated between a manual risk and an IT risk, IT environment related risk. Fraud risk, which I spoke about 240, and the overall risk of material misstatement. So इसके बेसिस पे आप करेंगे कि ये 2 आइटम जो है, इस पे आपका अच्छा स्टाफ लगाओ, इस पे आप खुद एक बार रिव्यू करो, so that there is no risk of material misstatement. So this is an example, as I said, from the staff series. There's a detailed example which is given through and through. So please read through that. This is a third case study. Company has implemented a new SAP HANA ERP system during the year. Revenue, inventory, costing, procurement, and financial reporting processes are now highly automated. Historical data, master data, and open transactions are migrated to the new system. Business and finance teams were extensively involved in the implementation of go-live process. Year-end financial reporting was completed using the new ERP environment. चलिए अभी एक जन अभी रिस्क बताते जाइए. लिखा है, इसमें ही लिखा है. Migration risk, absolutely. Workflow control, yeah. They were busy in implementation, तो possibly दूसरे जो areas को focus करना है वो उसको शायद sideline हो गया होगा. हाँ तो these are the points which are there. So let's look at the answer also. More or less, it is the same. Completeness and accuracy of migrated data. Somebody spoke about migration. Reliance on automated processing and report. So this is where sir was also saying that वो जो डब्बे में से आ रहा है अगर तुम उसको एक बार भी चेक नहीं करोगे तो प्रॉब्लम आएगा. So try to do alternative procedures. Try to get help from somebody if you don't have a capable team. Tie up with somebody. Tie up with an IS auditor. और थोड़ा तो समझेगा अपने को. See एकदम 19-20 का फर्क अलग बात है, बट 0 और 20 का फर्क होगा तो तुमको समझ में भी आ जाएगा. हम लोग कंफ्यूज क्या करते हैं, अरे 19-20 में मेरे को फर्क नहीं मालूम है. अग्रीड, बट कोई आपको 19-20 का पूछ भी नहीं रहा है. पहले आप जो ब्रॉडर मैक्रो पर्सपेक्टिव है वो तो देखिए. फाइनेंशियल रिपोर्टिंग थ्रू न्यू ERP, so that's a significant risk. Ineffective ITGC and automated controls, assertions impacted. So then how will we address this risk? So that will come in the response which will come in the next box now. Test data migration accuracy. If you don't have time, ask the management to give you a data migration study, a report. Parallel run किया था कि नहीं किया था. Evaluate ITGC. अगर ये आपसे नहीं हो रहा है, आप इंटर्न ऑडिटर को बोलो ये स्पेशल एरिया करने को ये साल के लिए. You will have to dictate that to the management and the intern auditor कि आप ये 2 चीज एक्स्ट्रा करो ये साल. आप हमको तकलीफ है तो आपको भी तकलीफ थोड़ी तो होगी. Test key automated controls and validate system generated reports. Yeah. So these are the responses. Yeah.
That is training to staff.
Yeah.
Because many times we observe that there is a big resistance to change.
Yeah.
So how to address that?
वो तो डिसिप्लिन मैनेजमेंट टोन एट द टॉप से ही होगा ना सर. एज एन ऑडिट पार्टनर इफ यू आर साइनिंग यू विल ऑल्सो हैव टू एंश्योर दैट योर टीम इज कंटिन्यूसली गेटिंग अपडेटेड ऑन ट्रेनिंग ना. अगर SAP है और SAP नया नहीं आ रहा है तो सीखना पड़ेगा.
Correct.
उसमें
Because many time it happens कि all system has been turned into disaster due to non support of staff.
क्वालिफाई करो. I have seen companies doing it. I'm not joking about it. It's listed public domain.
Right.
ERP implementation resulting in a problem. They've sent it the letter to stock exchange. I'll show you.
Thanks.
See, what is correct answer is available to all of us, but we don't want to hear that answer. अभी तुमको क्या सुनना है और मेरे से? कोई जादूगर तो हूं नहीं. Mid-size NBFC with significant wholesale real estate loan portfolios, several large borrower accounts were restructured during the year. Red flag. Restructured. Credit exposure is concentrated in limited number of borrowers. Again, your dependency on the borrower. Management performed year-end credit impairment testing using historical and forward-looking information. Senior management was closely involved in the impairment review process. So it was all, if they wanted, they could have looked at it in a different way. So let's look at, because we are already discussing a lot, I'll go to the answers also. Concentrated exposure to large borrowers, restructured loan exposure, these are the risks. Significant judgment in ECL estimation. Control risk is impairment review controls may not identify all credit deterioration indicators. Yeah. Assertions impacted is basically all the numbers and the occurrence. Let's see how do you address it. Test ECL assumption and data, review restructured exposure, assess borrowers credit quality, and evaluate ECL disclosure. Here I'll give you an answer. Reserve Bank of India is also doing lot of, in the last, after that Paytm instance or 2 years back, Reserve Bank of India is on top of ECL. They have people who are knowledgeable on ECL. They ask the right questions. So what you should do is, you should also go to the right person to get the right advice on how ECL should be computed. That's it. ECL is the heart of any NBFC. ECL मतलब जितना लोन दिया है 1500 करोड़ 2000 करोड़ उसमें से कितना पैसा वापस नहीं आने वाला है, उसके अलावा पूरे बैलेंस शीट में और कुछ है ही नहीं. आप उसको एड्रेस करो ना बराबर से. लास्ट ईयर से ये साल कुछ चेंज हुआ, ग्रोथ हुआ, डीग्रोथ हुआ, आपने परसेंटेजेस में कोई चेंज किए, वो सब थोड़ा पूछो, ऑटोमेटिकली आंसर मिल जाएगा. Promoter group and related parties, I think family promoted auto component group with operation across multiple entities. Significant volume of sales were recorded with customer added during the year, particularly in the last quarter. Now this is another analysis which a lot of people miss out. Okay, is there dumping at year end? Is there inflation of sales number at year end? Sometimes we know about it also. Sometimes we know about it also. Again, what do? I'll come to that a little bit, hold your thoughts. And subsequently क्या हुआ है, depending on when you are doing your audit. There has been cases sir जहाँ sales हुआ है, subsequent quarter में reverse हुआ है, फिर भी auditor ने ignore कर दिया है. तो वैसा तो नहीं होना चाहिए ना. So it doesn't necessarily mean, but if the subsequent quarter it has got reversed, and if you then do not take that into cognizance because and you are signing after that return date, then it's a problem. The group entered into several transactions with entities operating in different business segments. Certain transactions involved movement of funds between entities with. Sir, आपका वो Reliance का देख के मैं चक्कर ही आ गया. मतलब unbelievable, right? How do you expect anybody? That itself means that they don't want you to understand. How can you make it so complicated? Unbelievable. Revenue recognition from significantly new customer relationships, substance and business rationale of group transactions, complex related party transactions and relationships. What happened? I mean, we know some of the other things where a lot of inquiries have happened. There is also whether it is a related party, a person who is outside India. Right? We know about it, one of the largest group. Inadequate identification and monitoring of related party. Significant risk is unusual RPTs. Assertion impacted is more or less the evaluation and the completeness. What do? Identify and evaluate related party relationship. Test significant unusual transactions. Assess business rationale and substance. Review approval and related disclosures. आप at least audit committee approval तो देख लीजिए. Then the role is of the audit committee also, right? It can't be just one way. They will say two-way communication, but there is also two-way responsibility. It's not only a two-way communication, it's also a two-way responsibility. So it can't be a one-sided thing. Manufacturing revenue growth of 20% despite industry-wide slowdown. I think sir also gave a similar type of example. Annual earning targets achieved, 30% of annual sales recorded in the last month of the year. Inventory increased 25% compared to previous year. Certain senior financial and have administrative access to the ERP, super user जो बोलते हैं. A significant portion of the management compensation is linked to EBITDA and profit targets. Now these are the facts. Now you know what areas you will have to audit. So then based on that, decide the revenue growth inconsistent with industry, significant year-end sales concentration, inventory growth and slowing market conditions, elevated risk from privileged ERP access. That's the control risk. Significant risk is revenue recognition susceptible to management bias and fraud. What do? Test revenue recognition and cutoff, assess inventory valuation, review ERP access and override controls, test control unusual journal entries and management bias. ये इधर लिखा है इतना सिंपल नहीं है, इतना ये 4 पॉइंट लिखा है, ये 4 पॉइंट को जेन्युइनली करने में 4 मिनट नहीं लगेगा, 40 दिन लगेगा. तो पहले सोचो, लिखना तो इजी है मेरे लिए, या सो यू कांट जस्ट डॉक्यूमेंट इट एंड देन नॉट demonstrate that you have done this activity. ये भी बोल रहा है, I don't understand. Company has significant investment in subsidiaries, associate, joint venture and other financial assets. This is another area which I have seen, you know, a lot of wrongdoings are happening by way of parking debit items into investment rather than in P&L. और ये अपने को तो सबको मालूम है, हमको तो we are born with this language. जब से हम सीए बने ना 3 साल में हमने वो लैंग्वेज सीख लिया है. The group operates across multiple industries. Certain investees are in expansion and growth plans, while others are in mature business segment. During the year, investment undertook restructuring initiatives and strategic business. Updated business plan and long-term forecast were prepared by management during the year, and management performed annual review of investment. Fair valuation of investment is mandatory. M2M is mandatory, even for unlisted companies. Huh? So if a company has an investment, especially in this scenario, लेकिन कितने fair value reports को समझते हो, उस पे जो assumptions है उसको challenge करते हो? Do you take just because? So should it be a registered valuer? Should it not be a registered valuer? What has been the experience of that person? Try to look at it a little bit ना. वो मालूम पड़ा वो उसको 1 साल हुआ है क्लियर होके, और आप 25 साल के एक्सपीरियंस वाले हो, और फिर भी आप बोलते हो आई एम रिलाइंग ऑन दैट 1 year क्वालिफाइड वैल्यूअर. तो इनपुट्स दो, मेंटोरिंग करो थोड़ा. Valuation dependent on forecast, and I think I spoke about this in terms of estimate uncertainty and from business and strategic changes, complex assessment across investees and geographies. Material investment are wrongly stated is the risk. Evaluate impairment indicators, challenge key assumptions, benchmark forecast, use valuation specialist and test impairment. You know, if you have an ODI, which is overseas direct investment, you have to also submit your business plan to the Reserve Bank of India. उसके साथ कंपेयर करो ना कि कैसे जा रहा है परफॉर्मेंस. और somebody spoke about the component auditor. Let me tell you, the Indian auditors are very intelligent to even challenge auditors anywhere in this world. I have done it, and that's why I'm saying. I have spoken to the US auditor, I have spoken to a UK auditor, and the basic things remain same. It's a question, are you asking the right questions or not? So you can do it. In fact, we have found mistakes in those auditors. Yeah, and I don't know why, but they were lenient about it. We'll quickly go through, I think this slide, heightened skepticism is something which you should keep, especially when you find unusual or, you know, large IPO related transactions. External utilization certificate by operating agencies is another way you can respond to it. Challenges, assumptions, test valuation models, involve valuation specialist. We'll directly go to the response. Consolidated financial statements, assess significant component, oversee component auditors. Nowadays, where I am a component, my principal auditor is doing an online meeting and he's recording that meeting as an evidence that he has spoken to me. This has happened because of NAFRA circular, not earlier. Earlier phone उठा के बात कर लिया, WhatsApp भेज दिया. अभी वो recording कर रहा है, तो meeting चालू होने से पहले बोलता है पहले ऑफ मीटिंग एजेंडा लेते हैं, कैसा चल रहा है, क्या चल रहा है, फिर अभी recording चालू कर रहा हूँ. So now this will be an evidence, audit evidence as far as the my review of you as a component auditor is. So these are small steps, but very important. Challenge assumptions, recalculate forex gains and losses. This is geopolitical, we spoke about it. Assess operational impact and review disclosures. Copy paste risk assessment was one of the items which was identified. Generic item revenue may be overstated rather than going into specific. आपको accounting standard, sector, product सब में detail में जाना पड़ेगा. No linkage to the procedure. So risk register is there and the audit program, they don't speak to each other. They are two independent documents with no cross-referencing. Internal control understood on paper only and not tested for effectiveness or otherwise. Q learnings from QRB. Planning risk is not the communicated risk. जो आप planning risk डाल रहे हो और आप dose charge with governance से actually जब presentation बना रहे हो वो दोनों में difference है. TCWG communication informal, so now that has got changed. Now minutes are being prepared, sir, for each and every TCWG meetings, and we are keeping the minutes of those as our file record. Because one is having a meeting, but if it's not minuted and it's not signed by both parties, how do you again say that TCWG meeting हुआ है? Revenue presumptions under evaluated, no evaluation on which revenue stream transactions or assertions carry 240 risk. You have said that it is not a significant risk, but the basis on which you did that. So para 47 document the reason is missing, the rebuttal. Yeah, are you all with me till now? Sure. यही इंटरेक्टिव कर सकता हूँ अभी मैं. लंच टाइम ओवरशूट हो गया है. Generic tools, thin documentation, standard checklist not designed in detail. Yeah, I think, but somewhere there has to be a balance between the documentation and the understanding. And actually, you know what it starts with? It actually starts with a KYC of a client and continuation of a client, which is there in SQC1. Okay, 2 साल के experience में, do you think we should continue as an auditor? वो क्वेश्चन तो हम पूछते ही नहीं. हम पूछते भाई फीस कितना इंक्रीज हो रहा है. फैक्ट ऑफ लाइफ, राइट? लेट्स नॉट शाई अवे फ्रॉम द फैक्ट्स ऑफ लाइफ. या बट इफ यू वांट इन द लॉन्ग टर्म व्हाट इज गुड, दैट्स अ शॉर्ट टर्म व्यू. व्हाट्स द लॉन्ग टर्म व्यू? इट विल नॉट सस्टेन, राइट? Revenue fraud presumption rebutted casually, team discussion not held, risk assessment never revised, and documentation gap. These slides will be available to you. There is a lot of, in fact, I had made more detailed slides which I have cut down already. So we are coming to a close. So thank yourself. Pre-engagement, carry forward, acceptance, continuation insight. This is what I spoke about. In fact, update prior year knowledge for changes, preliminary, analytical and draft numbers. जब भी ऑडिट क्लोज करते हो, नेक्स्ट ईयर क्या देखना है उसका एक डॉक्यूमेंट बना के रखो. प्लानिंग, टीम डिस्कशन विथ फ्रॉड लेंस, स्ट्रक्चर्ड अंडरस्टैंडिंग, वॉक थ्रू ऑफ सिग्निफिकेंट प्रोसेसेस, one register per engagement, risk, assertion, magnitude, likelihood, significant, control reliance, planned response, link each line to the program steps. Execution, perform responses, revise assessment where evidence contradicts it, accumulate misstatement and reconsider risk. Completion, final analytics, confirm assessment still supports the opinion, communicate significant risk and deficiencies. Sometimes these risks can also form part of your key audit matters. Yeah. So remember that. There is a section called key audit matters which you have to report, which is what you think are the risks and how have you addressed that risk. So, and if it's greater than that, then it can go to EOM. If it's greater than that, it can go to the qualification. And that has to be the journey. This is a toolkit risk register. This is inherent risk and control risk, the significant risk, and then the planned response. Test sales plus minus 15 days at year end. Evaluate models and assumptions for ECL. We already spoke about all the three of them in a way. This is the last slide. After that is only thank you slide and question answers. But this, let's take 2 minutes to digest this. क्योंकि हमने बहुत चीज़ बोल दिया. We've spoken about a lot of things, but what does it finally? You have to translate that into action. So ROMM is the engine of audit. So remember, you can't do audit unless you have done your risk of material misstatement. Every procedure should trace back to an assessed risk. Any additional procedure, आपने decide किया मैं 100% physical count करूँगा. आपने क्यों decide किया आपने 100% physical count करूँगा? Because कुछ और आपको मिला. Assess at both levels, that is the financial statement level, demands overall response, assertion level, shapes specific procedures. Higher risk of material misstatements requires stronger audit procedures. फीस नहीं बढ़ेगा, वो पहले से सोचना था. नहीं सर, ये इंपॉर्टेंट है. लोग बोलते अभी, और यू शुड हैव द गट्स टू गो टू द मैनेजमेंट दैट I have to perform this additional test and you will have to compensate me for it. Treat significant risk including 240 presumption with consideration the standard demands. Risk assessment is continuous. Revise it when evidence contradicts it and document the revision. Implement traceability, understanding risk register, audit program, evidence, and finally the opinion. Because जो भी आप कर रहे हो, ये सब किया, the end outcome is your audit opinion. This is a journey. This also is important, but the end product is the opinion, so keep sight of that. जैसे बोलते हैं ना, end in the beginning. Thank you very much. Thank you. Questions है कुछ और? हाँ, बोलो. Yeah.
So suppose we have reversed it also in the last quarter, I mean by journal entry, okay, then still it need to be qualified or
no, if it is reverse कहाँ सवाल आता है? आपने एंट्री पास किया, आपने रिवर्स खुद ही कर दिया है, तो जरूरत नहीं.
No, but there is element of I mean there is some manipulation kind of thing.
नहीं, क्या मैनिपुलेशन है? बैंक को जो स्टेटमेंट दिया उसमें कोई गलती है कि वो जब बैंक को दिया तभी वो देखे, सो दो सेट्स बन रहे क्या, दो पैरेलल सेट्स बन रहे क्या, तो वो आपको ही इवैल्यूएट करना पड़ेगा. Two balance sheets are, there are few companies which do two balance sheets, one which goes to the bank and one which goes everywhere else. ठीक है. Any? Yeah.
Your market is low. I don't not understood it. Inventory valuation.
So that must be that specific case, but inventory valuation is definitely a risk which you will have to look at. So maybe it is coming from the system, maybe based on the prior year's experience. So inventory valuation, we are all good at costing in terms of raw material price, the overheads, the normal capacity. So वो testing करने के बाद you should evaluate it, and then the NRB test.
Okay.
Yeah.
So,
thank you.
Thank you so much. Sir will be with us for the lunch, so you can have one-on-one question answer with sir. First of all, big round of applause for Milan Modi sir. It was indeed a wonderful session. I know you all are very happy after listening this session because
Hungry also.
no, the practical insights and the practical case studies were so apt and so precise that I hope you all have gained a lot of knowledge. So indeed this session was enriching. Once again, I request all of you to please give a big round of applause for Milan Modi sir.
Thank you.
I also express our gratitude to NFRA for collaborating with ICI and organizing this important workshop for us. And with this, we'll have a 30 minutes lunch break. Thank you. Yes.
Hello. 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 Good afternoon. येतोय येतोय ना येतोय येतोय म्हणतोय हां येतो Hello, good afternoon. Good afternoon. Testing. Audible? Last. Audible, right? Okay. आता बंद करता का परत ते आता किती वाजता चालू होईल माहीत नाही किती वाजता चालू 5 मिनिटं थांबतो
Good afternoon. So hope you all had a great lunch. So we'll resume session 3. Today we have eminent faculty, CA Abhijit Bhagwat sir. I request Abhijit Bhagwat sir to kindly be on the dais. CA Abhijit Bhagwat is a managing partner of PG Bhagwat and LLP Chartered Accountants, a firm established in 1938. He has over 15 years of experience in statutory audit of large listed and unlisted Indian and foreign companies across engineering, projects, and various other sectors. His areas of specialization include Ind AS, IGAP, standards on auditing, internal financial controls, and Companies Act 2013. He leads the firm's strategy, technology initiative, professional development, quality management framework, and audit quality across the organization. So we welcome C. Abhijit Bhagwat sir.
Thank you.
And I would request C. Abhishek Damane, Regional Council Member, to kindly felicitate Abhijit sir.
इथे कसं लागेल ते हा इथे कसं लागेल ओके पुढे जायला हे मागे जायला ओके हे माझं आहे Okay, good afternoon, everybody. This is a very tough session, not because of the topic, but because we have all had lunch. So the pressure was on me to make it much more interesting for all of you. Very important topic, and before I dive into the details, there are three points which I want to put across to set the tone. Number one, audit, especially statutory audit, has today become a niche area. See, audit historically was considered to be an area which any chartered accountant who passed could carry out. It is not about the capability of the chartered accountant, mind you. But today, in this complex economy, complex financial statements, complex transactions, you need a whole ecosystem to do statutory audit. Let me give you an example of a surgeon. You consider a neurosurgeon or a heart surgeon with 15-20 years of experience. He is great, there is no doubt about his capability. But can he do the surgery without the diagnostic help, without the machinery, without the operation theatre, without the nurses, without the systems and processes of that hospital? Similarly, the engagement partner can have great experience, but he not only needs a team. Today, he needs the whole ecosystem, which has been defined in SQC1, now SQM, which will be effective. There needs to be leadership in the firm. There has to be a committee which is looking after the independence and conflict issues. You will need a appropriate and well-equipped HR department to ensure that you have the right talent to do audits. You need a quality department in the organization to make sure that there is a bouncing board for the engagement partner to bounce off complex issues that he comes across. And then all of this has to be monitored by somebody. And therefore, today, especially doing audits of larger companies, the risks that we undertake can be mitigated by having this ecosystem. And it is absolutely important to have this ecosystem today. The other point which I want to start with is audit quality. Everybody describes audit quality in different ways. But audit quality is not a singular event. You can't say that I did one audit procedure well, or I did one audit procedure well today. It has to be done continuously across processes and it has to be done diligently. There has to be consistency and there has to be diligence at the same time when you are talking about audit quality. So audit quality is not an isolated event. It is not a one-time event. It is a continuous event over a period of time. So this has to be understood. So one can say, I did this engagement well, great, but that is not sufficient in statutory audit. Right from your junior most level person to the engagement level and the quality partner and experts, all need to do their procedures consistently, diligently to obtain the audit objective that NFRA, ICA, AI are all talking about. Okay. To address and then we can move ahead is the use of technology. Today, using the word technology also is not enough. You necessarily have to use the word AI. Right? Any client you go to, unless you use the word AI, your pitch is not even heard. Because everybody wants to know whether you are using AI in whatever service you are giving, including, of course, statutory audit. AI is real. AI is here. AI is here to stay and become better and better. The onus is on us as professionals, how we are going to use AI to make our work more efficient, quality more better, and therefore all the mundane tasks that an audit has, basically your vouching, to a certain extent your data analytics, your stat due checking, all of this is eventually in the years to come, in my opinion, personal opinion, going to heavily be done by AI or bots. And therefore, the only thing that is going to remain is the topic that we are going to discuss today, where we are going to assess, understand, estimates and judgment. Estimates and judgment are not going to go very easily away to a machine or a software or an AI. Because the auditor, statutory auditor's prerogative or his professional judgment is still going to remain to a large extent. And therefore, that makes this topic much more important and interesting, because that is something that is going to remain with us. With these 3 points, the 3 points were how audit has become a niche area, how an ecosystem is required, how quality is not a singular event, it is a continuous event which has to be consistently and diligently performed, and how technology, AI, software, whatever name we give it, is going to impact, how we need to embrace it rather than shy away from it, and what is probably going to remain largely with the human brain. So this topic deals with what is going to remain with our human brain. With that, let us get into the topic now. Mr. Modi has taken the topic of ROMM very nicely. So once the risks are assessed, right, which, let me tell you, 9 out of 10 times will have a significant risk related to estimates. Without significant risk on estimates, no procedure of identifying risk of material misstatement is complete. So with that, let us go into what we are going to discuss. So this is what we'll cover in the next 60 minutes. I'm not going to go into each of the point right now. It is in front of you. The high-risk frontiers, the SA 540 architecture, professional skepticism, indicators of management bias, obviously what are the observations of the regulators, and some Q&A obviously. And all of you have the right to stop me and ask if you have certain doubts or you have any questions which you would like me to address. Now, these are the 6 single most largest estimates in an Ind-AS environment or large complex financial statements that define the modern audit risks. That does not mean that estimates are not there in other FSLI. In fact, estimates are there in each and every FSLI. You change 1 or 2 parameters and it becomes an estimate, right? So ECL, fair valuation, impairment, provisions, useful life, and defined benefit obligations. Here I'll give you a practical example. How many of us are actually challenging the life adopted by the company for its assets, which is defined in Schedule 2 of the Companies Act? Anybody? Has anybody challenged the management on life adopted by them as per the Companies Act Schedule 2? If Companies Act Schedule 2 says machinery, 2 shift, 3 shift, whatever, 15 years is the life, we have used 15 years, there is no need to challenge. But Ind AS 16 says that this assessment of life has to be done every year, right? So estimates are everywhere. We discussed an example of revenue, which is not there on this slide. POCM or POC revenue recognition has tremendous estimation involved in the denominator, which is the budget. The budget is the single most, single most largest figure in that computation, which has tremendous amount of judgments and estimates made by management. Cash sale versus credit sale. As soon as a cash sale becomes a credit sale, risks estimates start getting attached to it. Because whenever there is a credit period, there can be a financing component, there can be an impairment, there can be many other things. So remember that estimates in a financial statement are almost in each and every financial line item, barring a few. I can see cash, right? For example. So let's move ahead. Let's talk about the highest risk frontiers for an estimate. There are two things which define how an estimate will play through. One is the quality of information that the management has, right? If the quality of information the management has is incomplete, uncomparable, not verifiable, subjective, then the chances of that information being used in an estimate, the risk is going to expand. Similarly, estimation uncertainty. First of all, can anybody tell me what is actually an estimate? In simple words, what is an estimate according to you? What defines an estimate? Anybody? Sorry? Probable life. So estimation is defined as measurement uncertainty. Now, how much that uncertainty is there, that call we have to take. So anything which has measurement uncertainty is an estimate. Okay? Now, information quality, the grade of that information and the grading of your estimate probably and leads to a misstatement risk. Okay? And obviously it gives a color then of management bias. Right? So the two risk frontiers which lead to misstatement and or management bias or probability of management bias are quality of information and estimation uncertainty. We are going to discuss what is estimation uncertainty in detail. Now, are all estimates equal? The answer is no. Just because there is an estimate does not mean it leads to or carries a elevated risk or high risk. There is a spectrum, and there are factors which define or which we need to consider when we are auditing to decide in what spectrum is the estimate there. There are estimates which have very low degree of uncertainty, okay? Because the data, quality of data that is available to assess that is concrete, is verifiable, is complete, is comparable. And then there is information for certain estimates where the information or the data used is not complete, is unobservable, there is no comparison to it, then it becomes a challenge. So there are 4 factors which usually go into the auditor deciding on which spectrum will that estimate be there. And those are the judgment dependency. Now what is a judgment? Can anybody in simple words tell me what is a judgment? Yes, sir. It's a decision. Correct. It's an opinion. Based on certain things, the management is taking a decision. So that is the judgment. Like an auditor takes a judgment, right? So dependency on the judgment while calculating the estimate, that is an important factor that an auditor has to consider. The sensitivity to the assumptions that are used by the management in making those estimates. These are very important, which we need to look at. The forecast horizon. If the forecasting is for a year or 2, the risk of uncertainty of that getting fruitified is different from when a business valuation has a horizon of say 8 years. Who can predict what is going to happen 8 years later, right? And as I said, we have discussed observable inputs. Are the assumptions that are used in that estimate observable by us or they are unobservable by us? So this understanding as an auditor on which spectrum does the estimate lie is very important to plan the audit procedures surrounding it. Now let us take some examples, practical examples, for me to explain the spectrum. The first example is a simple one, warranty provision. Everybody has come across somewhere or the other warranty provision. Now let us, if I had to put on the spectrum warranty provision, where do you think it lies? I've written some answers also, but if you can, it's at the lower end of the spectrum, usually. See, there is no one simple rule. But usually, if you take this example, that you have data of 5 years claim of the last 5 years of a company. There is a statistical, analytical model on which the provision is being made, right? It is checkable. It is actually verifiable, right? Then, obviously, the risk of uncertainty and leading to a misstatement and our audit procedures are going to be on the lower side, right? Next, we will take an example of defined benefit obligations, which is basically your gratuity or pension or leave encashment. This is on the, not on the lower spectrum, maybe the middle spectrum, because it has a lot of assumptions, right? It has mortality rates, it has discounting factors, it has attrition rates, it has salary growth rates. Out of this data or assumptions that are being used, number one, the data that is sent to the actuary can definitely be checked by us because it is from the payroll of the company or the policy of the company. So it is observable, checkable data. Second, we come to these 5-6 assumptions. The salary growth rate can obviously be verified by the company, that is actual salary rise, whether they have used it right or wrong. So it's again observable, verifiable data. The other factors also like discounting rate, these are also can be mapped with certain rates in the market. And therefore, this has a degree of estimation, in fact quite high, but the data can be verified. Next we come to the ECL model. ECL in itself actually is a very large subject. And I'm not very sure how many people actually have had the exposure of implementing an ECL model in its true spirit. On the banking side, it is much more complex because there is staging. And in the company, the normal trade receivables or lease or contract assets are done on simplified ECL lifetime expected losses model. So I'm not going to go in detail. I'm just trying to say that they come on the higher side of the spectrum because they have forward-looking estimates involved. Every ECL model has a factor of, if a simplified model is used, a historical figure and a forward figure. And therefore, it is on the higher spectrum of the uncertainty. And next, we come to a level 3 fair valuation, like a business valuation or a CGU valuation, right? Where first of all, there is forecasting. That itself is, a data which is full of judgment and estimates. Then the growth rates that are used, right? The capex that has been used, the terminal growth rate that the management uses, the discounting factor, obviously, that is going to be used. So all of these factors take it to the end of the spectrum of estimate uncertainty, and therefore we have to be wary here. So this was the attempt to explain to you what is an estimate. There is a spectrum to the uncertainty involved in estimate, and therefore you need to, as an auditor, judge whether this estimate is on the lower or higher, what is the risk that I am carrying. Okay, so this was one part of estimates. Yes.
Value, in this case, I remember that we used to value gratuity, our own this actuarial valuation, and against NIC valuation. And NIC valuation used to be always higher. This one, because they may be interested in more cash from company.
So that may not be the case necessarily, because see, the actuary, so the estimate that you made is an estimate which is based on the company's factors. There are several factors which we don't consider when we make those actuarial estimates, right? So a mortality rate data, a planned asset return data, there is discounting factors which are benchmarked, right? There are now, actuarial gains and losses which are there. So it's quite complex, the estimation that goes there. Okay. Now, once we have addressed the issue of estimation and estimation uncertainty, and we took some practical examples also, let us now go to SA 540 architecture. Okay, I missed one point in estimates, which I just want to highlight from practical experience. See, IGAP and Ind AS, there is one very important change in the principles. IGAP, and historically every chartered accountant or auditor always believes and follows the principle of being conservative, the conservative principle. In Ind AS, this concept has been replaced by something known as neutrality. Neutrality means being objective and not being biased. Why am I telling you this? Because many times we as auditors are very happy when the provision is excess. Correct me if I am wrong. ज़्यादा provision बना है, ठीक है, great. Sorry, just because the provision is excessive does not make the financial statements true and fair. It has to be neutral. The aim should be to try and reach as close to a reasonably accurate estimate. No estimate is going to be 100% accurate. Like we have been taught, no inventory valuation ever is going to be accurate. Correct? Similarly, no estimate is going to be accurate. But this principle is important, that excess provision showing lesser profits necessarily does not give true and fair financial statements. So you have to be wary of that, and this is a change, this is a principle change. If you go to Ind AS and see the framework, there is prudence. Prudence is different from being conservative. Okay? So please understand this one point. Now we will move into this SA 540 architecture. You have the steps in front of you. I am not going to go into a lot of details of each of the step, because I don't want this session is not a checklist based kind of a session. I want to dwell on 2 points here. The whole session is concentrated on explaining 4 very, in a way, theoretical. All the guys who have undergone peer review or QRB review or SQC, very difficult to answer how the firm maintains professional skepticism. This is a question, and then theoretically we have to write something, because, you know, how do you write? How do I be objective? Similarly, people don't understand, I won't say understand, but apply probably when it comes to management bias. What do you mean by management bias? So there are 3-4 concepts which I want to concentrate and also practically explain them to you. One was obviously estimates and its uncertainty. The other is professional skepticism, which we will cover. And we are going to cover what is management bias. And third, there are 2 things in this which most of the observations of QRB, NFRA are coming out on, are no look-back procedures. What is look-back procedures? So we'll focus on look-back procedures. And finally, to conclude, how to set a range. Because as I mentioned earlier, an estimate figure from the management, from the auditor, and by an expert, all 3 are going to be different. Please mind you, it is never going to be the same. The inherent definition of estimate is that. So, how does an auditor conclude? So, there is a quantitative way also, supported by qualitative way, one can conclude as an auditor on, okay, I find this estimate to be reasonable. Okay? Okay. Professional skepticism is not being suspicious. Okay? Like the line says here. It is the discipline of not being the last person to ask the very obvious question. The last speaker also spoke about common sense. This is something like that only. So it is, nobody is asking us to be suspicious. As statutory auditors, at least we are not supposed to be suspicious. As a forensic auditor, maybe. But you need to possess the common sense that some of the speakers spoke about, and you should have the discipline of asking the right questions. What are the 4 traps that blunt the challenge? And mind you, all of us sometimes fall into these traps. Anchoring. What happens in practice is, most of our energies are going into ensuring that the management's estimate is right. We are collecting evidence, this, that, trying to prove that the management's estimate is correct. Whether it is a business valuation or whether it is a ECL provision, we are not independently challenging that estimate. So this is a trap which we get into. The other one is confirmation bias. We are not making the effort to get contrary evidence. Okay? That is creating a gap. Expert difference, already spoken by the earlier speakers as well. We need to assess the capability of the person from whom the management is taking any type of expert advice, whether it's derivatives or not. So as auditors, we go in, we ask them questions, we also don't understand, okay, it must be fine. You know, we should not fall for this. There needs to be an effort to understand the effectiveness in a cash flow hedge, in a swap rate contract. These are very complex things, and companies are using them because there are financial institutions, they are selling them. I remember in 2008, there was a huge, huge issue in the Indian, most of the corporates here, because they had got some very complex derivatives. And finally, after 10 years, it was decided by court that they were co-complex. The banks also didn't understand and the buyer also didn't understand. That was the situation. And then in this, we have to audit that. So this trap is a real trap, we need to be careful about it. So I'm just giving small examples. The team tests management's 14% WACC and concludes with 0.5 of the anchor. No independent build was formed. So the files don't find that independently you have calculated WACC. That is a gap. Confirmation bias broker note supports 6% growth. Consensus at 3%. The consensus was 3%, never reaches the document file. Expert difference we have already spoken about. Actuary certificate file untested. The report assumes 2% attrition against the entity's own 11% attrition. See, this is checkable data. Attrition rate in a company is checkable data. A salary growth rate in a company is a checkable data. If you are not going to make the effort to check it and then put it in your work paper, then we are going to be in trouble. The last I said, surrender to a complex financial instrument. Now, we are discussing, by the way, professional skepticism, just to remind you where we started. What are the questions? So practically, trying to make it practical, as an auditor, as a professional skepticism, as part of professional skepticism, what is it that you need to be asking? Questions sometimes to yourself and your team, and sometimes to the management also. What would have to be true for this number to be correct? This is a question you need to ask yourself or ask your team. The other question would be, what did the last year's estimate look like? Asking this question is professional skepticism. Which single assumption moves this number the most? And the last one is, why did the management reject the alternative assumptions? How many times are we asking these questions to ourselves, to the management, and further recording them in our work papers? Let's take an example for these 4 questions. The scenario is a manufacturer's gratuity obligation booked at 38 crore. Simple, I have not taken a very difficult one. So we need to ask the question, what would have to be true for this 38 crore to be right? Where the salary escalation is 6, attrition is 8, discount rate is 7.2. Now the 6% escalation is the weakest link. You need to ask this question. Actual increments have run at 9% for last 2 years. So because the management wanted their liability to be lower, they have put in a 6% salary growth rate instead of 9. So the question that was asked was, what would have to be true? The 6% would have to be true if the 38 crore provision was going to be right. Now, the next question which we discussed was, okay, what happened to last year's assumptions? Let me go back. This look back thing is a very doable thing. A lot of auditors are not doing this, right? Because even if the projections are for the future, nobody stops you from check what happened last 2-3 years. And this applies to all the estimates, whether it is a warranty provision, whether it is a provision for doubtful debts, whether it is a business valuation, look back procedure or value in use. It is applicable for all. So in the given example, FY25 also assumed 6% escalation. Actual increments came to 9.1. So the audit team has to go and look at this data. Which assumptions move the number most? This is a question we need to ask as auditors, which basically is the sensitivity. 1% escalation adds 2.6 crore to the defined benefit or reduces by 2. So escalation is dominating factor in this assumption. Why was 8% rejection escalation rate rejected by the management? If the policy is to give 8%, why was that not, the alternative was not considered? So asking these questions demonstrates professional skepticism. And this is what is lacking in our work papers. Any questions at this point of time? Okay, let's go ahead. Another important part, topic, management bias. In some ways, it is covered where we are trying to check the management override of control. Management override of control is more a process-related issue, which obviously has an impact in the financial statements. Management bias is more on the qualitative aspect of it. Okay, so let us try to understand the concept of what can we do in management bias. Okay, let's cover this. And these are there in the standard. They are not that, they are not specifically mentioned. I have even given the references here. What are you looking for? Once you have the professional skepticism mentality in you, you are going to be looking for this, the management bias. Convenient changes. Estimate or method changed on a subjective claim that circumstances have changed. So you should be looking for this, right? A convenient change that the management makes without substantially anything else changing. Off-market assumptions. Their own assumptions with the management's made. For example, Sir just now said we made an estimate, LIC made an estimate, they were vastly different. So if the market observable rates are not matching with the assumptions taken by the management, then you have to try to detect whether there is a management bias. Constructed convenience. Assumption constructed to yield a point estimate that is precisely favorable to the management. When we see the next slide, you will find the practical examples for it. And patterns over period. A point estimate fitting a pattern of optimism or pessimism across multiple reporting periods. The retrospective review is the primary tool for detecting this. Okay, so these are possible management biases. What? Convenient changes made by the management in the calculations of estimates. Off-market assumptions are a mismatch. Constructed convenience. I know I want a valuation of 100 crores and therefore my growth rate has to be 20%. This is what it basically means. And patterns over period. We'll check in the example. These indicators, as I have said, are not necessarily misstatements, mind you. But they need to be evaluated, and this evaluation has to be in your work paper. Let's take now quick short examples of what I'm trying to say. Useful life extended from 15 to 20 years because a key debt covenant was not being met. Debt covenant also has now, as you know, from 1st April come into prominence. If a debt covenant is not met, you have to show everything in current. I hope everybody is aware. That is a new change that has come in. Right? Earlier you used to get waiver letters before signing and we used to say, okay, still this loan can be shown as non-current borrowing. That has changed. The circular says that you have to get the waiver letter, if at all, before 31st March, if there is a covenant breach of any debt. Otherwise, apart from the penalties and the interest rate change from the bank side or the institution side, your ratios are going to go for the company's ratios are going to go for a toss because immediately that bucket from non-current will come to current. Okay. So, convenient changes. Why was the life? Nothing has changed. Nobody has done an assessment on that plant. Suppose, imagine it is a large plant, not a single machine, CNC machine. The life is set at 15 years, but out of the blue, the management says, for this year, the life of this asset is going to be now 15 years. So you need to, through the first two sessions, understanding the risk of material misstatement and your strategy, you will have, when you do the preliminary analytics, right? In the month of Jan, Feb, you take a December financial and make preliminary analytics. In that, you already know that the debt covenants are on the border. Okay, this has to be done at the planning stage of the audit. And when March comes, the March figures get finalized, you will realize that there is a breach of those covenants. And then what does the management do? The management says, okay, we will change the life of this plant from 15 years to 20 years so that their EBITDA or will change. Understood? So this is the management bias that we need to look for. Investment carried at management at 40% CAGR. Growth rate assumption, the entity's most recent funding round implies a valuation of 30% lower. So you need to check what is happening in the market. This we already discussed. Constructed convenience, right? The terminal growth rate was set at 5.2%, the precise rate at which the value in use equals carrying amount. If you have any time reviewed or done a business valuation, you will realize in a discounted cash flow method, the terminal value growth rate is the single most sensitive rate in the whole valuation. And playing with that is what usually management does to get the value in use that they require. So as an auditor, you need to be skeptical to identify this management bias. A provision released every Q4 for the 3 consecutive years. So these are patterns. We spoke about another pattern where we said revenue was recognized in the last quarter. Similarly, there can be situations where a write back is coming every last quarter. So these patterns need to be studied on the cost side also and on the income side also. So indicators identified may be evaluated for implication for overall audit response. Okay. Okay. So we have covered 3 concepts as part of judgment estimates topic, SA 541 was, first one was, that was second. The first one was estimation uncertainty, right? What is an estimate? We defined the spectrum and we took some examples. Then we discussed what is professional skepticism, right? And what questions you as an auditor need to ask. The third concept we discussed was management bias. And as an auditor, how to apply the skepticism in identifying what is the management bias. Okay? Now we are coming to the 4th one. This is sort of the concluding one. After that, there is a whole example where all of you have to help me do the 1 to 8 steps of SA 540. Why is this auditor's range important? The auditor's range is important because finally, after doing all this exercise that we spoke about, at the end of the day, you need to conclude either ways. And today, either ways also, there are 3-4 options. Right? Is it a CAM? Is it a EOM? It can't be other matters. Please. Okay? It can be a modified opinion, or it's a clean opinion, or it's a disclaimer of opinion. We don't have information only to check this. Right? Either of them. So, how do we finally conclude? Because as I repeated, I'm repeating, I just mentioned earlier that no estimate done by 3 people is going to be exactly the same. And it is not our duty as auditors also to, match it. Please understand. We are looking at the reasonableness of that estimates. The factors that go into making that estimate, are they reasonable or not? In one aspect of concluding whether they are reasonable or not is quantitatively looking at it. And the standard is talking about identifying that range. So how do you identify that range? Okay, I'll just put this on completely. Yeah. See, standard itself is saying a range of all possible outcomes is too broad. Right? You can't have a range where all three estimates done by all three people are correct. You cannot do that also. Just because I am saying that estimate cannot be same, that does not mean that the range can be, unlimitedly wide or above your comfort level. What is that comfort level? We'll come to. If this estimation gap cannot be brought down to performance materiality, I'm not going to go into materiality, it was already discussed by the earlier speakers. So everybody understands what that performance materiality is, right? And outside the range unsupported, then what you need to do, okay? So the auditor's range is not a comfort zone, it is a structured, as I said, it's a quantifiable, it's a structured conclusion based on evidence. Management's estimate either falls within it or misstatement must be considered for the summary of misstatements. So this conclusion, we'll take an example. There is a cement CGU, carrying value is 580 crores, management's value in use is 620 crores. No impairment is booked, the auditor must form an independent view. Now auditor's range, applying the WACC of 13% and terminal growth rate of 4, the auditor's reasonable range is 460 to 540. That is his range. Wider than the performance materiality that he has set at 30. Okay? The breadth itself signals significant estimation uncertainty. So they have said 620. Your outer range is 540. The gap itself, the range of the estimation itself is risky. Apart from that, it is falling outside the range of the auditor itself. So management 620 sits 80 crores outside the range. A misstatement of at least 80 follows, right? So impairment not less than 50 actually needs to be taken. Otherwise, it's beyond my reasonable range. We are not saying it has to be same. At least it should be closer to my outer range or lesser than my outer range. That is what it means. Now what happens when the range won't close? Management doesn't agree. So if insufficient evidence is there, no basis, you will have to look at modification. Obviously communication, now everything you have to communicate to TCWG. Okay, please do not take the risk of not telling something to the TCWG. They are our shields today with the new circular that has come. So make it a point to please tell TCWG all the areas where there is significant estimation and judgment involved. So you will have to conclude at the end of the day. What is the key principle? Not every estimate that ends in a clean number. There are three exits. Either it is below your performance materiality, you will have to communicate to TCWG, and or your modification can be, your audit report can be modified. Okay. So, how are we with time? 15 more minutes. 15 more minutes are sufficient. So my aim was in this, yes sir. Medical negligence. Hospital has to make provision for medical size. I have actually not ordered, but this is an estimate. We can, so here there has there are 2-3 factors that will have to be taken into consideration. Obviously, every medical case is going to be different. So building a trend will only give you so much of comfort because the hospital may have some sort of trend, and or one will have to study, the hospital will have to study in the particular category of negligence, what are the probability of the case going against the company or against the hospital, and what has happened as a pattern if there are similar cases available to be viewed. and on the basis of that, just like a contingent liability, sir, if there is a contingent liability of GST or income tax, how does the management decide whether to make a provision against it or not? It is going to see whether a similar case has happened in any of the courts. Is there a judgment of a highest authority on those? Historically, how the company has the company such issues have happened in the company and how their outcome was there, right? So there are many such factors. Of course, expert opinions can be taken, again, which sir spoke about. So so you have to get close. As I said, there is no accurate number. The provision that anybody will make will be an estimate, and that estimate needs to be reasonable. And as auditors, we have to see whether the application of the mind by the management on the quality of information which they have used in making this provision is reasonable or not.
Because in Western countries, there is more awareness about this medical negligence making claims. But in India, number of times these patients they are so much under tension that paying hospital bills and that
Yes.
they don't make any claim and they go.
Agreed. Professional indemnity, sir, rightly saying, it will be covered also. So from a cash flow perspective, there won't be an impact.
And
Yeah.
and apart from this, from tax point of view, I don't think this is under section 43B also. So if you make the
43B, no, but it is.
43B
It can, but it may come under contingent provision.
Yeah, contingent may.
So that is again disallowed.
If it is not coming under 43B, so there is temptation to make the higher provision. But actually,
So the case that you have selected now is very, very niche, specific, medical, this thing. Yeah, Amit. Correct.
You can do the provision. Otherwise, there is no
Agreed.
case.
But the fact that he asked the question where medical negligence has been identified.
If that is identified, that is good for the
Only
professional, that indemnity perspective, that's good. That has to be identified.
Correct.
But that is a good corporate governance per se. But from financial reporting perspective, I don't think the provision is required.
Only if there is a case. You see in newspaper, many times in the hospitals in Pune nowadays, everything is coming. So there, you're right. If something like that has happened, now what happens further? What a case filed? All of those things follow. Yeah, constructive obligation.
Provision would be required, and the lawyer who is fighting the case on behalf of the hospital can give some summary to say whether there is merit in the hospital's argument that it was not negligent, and based on the lawyer's no, you will have to decide whether a provision is required or not. Sorry.
Yeah. But lawyers can give opinion from both sides, so to be careful. So okay, we'll take a example, which is basically a summary example of all the SA 540 architecture 8 points which I had listed earlier, out of which 4 or 5 concepts we have discussed in detail. So ABC Fintech Committee Limited, the valuation of the auditor is received. So it's an unlisted fintech company, Series 8 stage, Series B stage. Strategic investor acquisition is pending. Investment booked at level 3, fair valuation in CFS. No comparable listed peer with identified business risk. The valuation expert built DCF is saying 110 per share is the value. Projection horizon is 8 years. WACC is 14, terminal growth rate is 5. Revenue CAGR assumed is 12% per annum. Margin ramp up 8 to 22%. You know what is checking the hockey stick terminology, right? Okay, I will explain. Okay, probably the red flags I should have hidden, but I have given. And the last one you can ignore because then it goes into a very different category. It has been put but let's not look into the last one. So, so FY25 actual revenue missed budget by 18%. This is the look back that I am talking about. The red flag has come out by a look back. FY26 model submitted unchanged. Valuer boutique firm, no prior engagement. Sensitivity note, a single sentence. That's the valuation report. And the last one I said, let's ignore because then it goes into a very different category. Now, if you look at this line here, understand, look back, assess is what we are doing. So something felt off. This something felt off is nothing but professional skepticism. So this something felt off is where you ask those four questions. That for the value to be 110 per share, what needed to fit into their matrix to make the valuation 110? Right? So FY25 revenue missed by, we discussed these points, right? So we are concluding here that the estimation uncertainty is very high because on that spectrum which I discussed also, it is falling in that last bucket, the higher part of the spectrum. Unobservable, unlisted company, no comparable information, forecast horizon is high, judgment is also high. So this is falling into the bucket of the end of the spectrum. Sorry. So the auditor built their own view. Respond, go deeper, set a range. So first 3 steps of SA 540 are done first. Next 3 steps of respond, go deeper and set a range is being done by the auditor. So basically he is doing his own valuation based on his understanding and the information that is available to him. So independent WSEC is built. Management rate is inconsistent. 12% CAGR challenged against 4 historical rate. Auditor's range is 84 to 96. So his valuation comes out to be in this range. The last one is the test disclosure, hunt for bias and then communicate. Right? Management is forecasting, no sir. Projection is for next 8 years.
Yes.
So that's why look back is very important. So now auditor has to decide this gap of per share, 14 rupees per share, is it outside his range of performance materiality or not? Is the management willing to accept this or not? If it is not willing to accept, will that make a material misstatement if it crosses the materiality of the auditor? Definitely it has to be communicated with those charged with governance. There is no question about it. Disclosures will have to be elaborate in the financial statements. Whether to draw attention or whether to modify now depends upon this range that is set that we discussed earlier and the performance materiality that is set by the auditor. So these factors, so obviously in an example this looks very simple and fast. It is going to require a lot of man hours. But these procedures and steps and this skepticism and this understanding of management bias as an auditor, we necessarily need to keep in mind. Okay? So with this, we complete the example. So what the management said, 110. What the auditor found, retrospective assessment was a miss. Growth was unsupported. Expert independence not established. Discount rate inconsistent. So lot of factors are going wrong. This is an example, so many factors will go wrong. But in live cases, there will be 1 or 2 cases that may, assumptions that may go wrong, which may affect, yet you need to be skeptical about them. Okay? And then finally we have to conclude that this was the range and obviously communicate with those charged with governance. Written representations, that is also an observation in QRB and in NFRA saying that specific representations for the specific rates used in assumptions were not found in the representations. Very general, our valuation is correct. We confirm that our valuations are correct. That can't be a format of the present representation that we take. Okay, and last is obviously disclosure and conclusion on the reporting. The So the price sensitive information never goes to the public before. This is insider information. I will quickly go through this. Recurring observations of NFRA QRB on, I have only taken on estimates specifically. Inflated growth rates not tested, management expert reliance blindly without checking their capability, their experience, the factors that have used, risk of material misstatement in estimates not identified. If you don't identify only in your planning stage that there was a risk involved in an estimate, obviously there will be no work performed on it. No evidence of professional skepticism in the work paper. And no review performed on indicators of bias. See, let me tell you what I have put in a very different format today is all part of the standard. So, professional skepticism and management bias has to be reflected in your work papers. The other points, no retrospective reviews done. We have covered that topic. Look back is very important. Documentation gaps, cash flow projections, beyond 5 years also accepted. 3 years, according to me, is the maximum that anybody can estimate. 5 years is a stretch. Beyond that, it is not possible to accurately forecast, close to accurate, reasonably accurately to forecast. I can make a, with some growth rates, I can do it for 15 years. But it does not make sense. And this we need to understand. Estimate uncertainty disclosures. So disclosures are weak. Stakeholders were not able to judge that there was so much estimation involved in this transaction. Especially in derivatives, this happens. Impairment testing, which was carried forward, done by the management and agreed by the auditor, was not presented to TCWG. Here I'll just, from practical experience, make a point on this word documentation. We keep on seeing documentation gap. What we need to do, and people in my organization are now hopefully getting, the reviewers need to tell me one thing, how many of your juniors, while audit is being done, have said, sir, audit ho gaya, documentation bacha hai. How many have come across this statement? Sir, audit ho gaya, lekin documentation bacha hai. See, you have to explain to them, these are two sentences which are not mutually exclusive. And therefore, as a reviewer, you need to be asking the question, can you demonstrate to me that you have done this audit procedure? As soon as your review questioning technique changes and says that demonstrate to me that you did this, he will have to put it in his work paper. What do you do when you fail a IFC control? आप क्या बोलते हो? BRS किया है ऑर्गेनाइजेशन ने, मेकर चेकर का साइन नहीं है, फेल. एक्चुअल हुआ रहता है मैनेजमेंट साइड पे. दैट टाइम यू आर रूथलेस एज ऑडिटर. You say that management's control has failed because BRS was prepared. We can see evidence, we know them that they have reviewed, but it cannot be demonstrated by them. There is no email from the reviewer that I have checked your BRS and you fail that control. But when it comes to yourself, we are not using the same principle. We are saying audit kiya hai, documentation baad mein. And therefore, as reviewers, please start using the terminology to your article or your junior manager. Please demonstrate to me that you did this audit procedure. That itself will equip them or urge them to make the work paper ready. Otherwise, sir will fail me. Understood? So this is an important point that I thought I should share to change the mentality of documentation. Sorry? Sir, speak. Internal rate of return is?
Not determined.
In which case, sir? Sorry, I moved ahead.
So you have shown the various estimates, na? That share value
Ha,
equal to
ha,
110 and all
ha.
that. So with all the cash flows,
Ha.
cash flows and these outs and profitability
Ha.
cash flows, like that equal to zero, that way of determining internal rate of return. That methodology is
Sir,
not
WACC working, WACC is, this,
no. The discounting factor will show only the plus or minus of the ultimate result. But IRR will show in such a way that the ultimate comes to zero. It is like a break-even point.
ultimately show, sir, what?
So whatever the cash flows you have determined, the vintage of which scientific calculator or computer, you can determine that. With certain percentage X is taken as a discount factor. So we find the value of the X so that all these cash inflows and outflows become equal to zero.
Become zero.
Yeah, that is the internal rate of returns.
Yeah. So that is IRR. So how to
IRR,
use it?
Yeah, I mean IRR.
But I'm still not. Can I take this up after the session to understand
Yeah,
correctly?
Okay.
Okay.
No, there is no estimate. The estimate will be the cash flow will be the estimate. But IRR determined on that base.
Offline.
No, the IRR is based on your whatever the cash flow you have given that.
So for the benefit of all, we will take it up after this.
Okay.
Thank you very much. Okay. Again, one important slide for all the auditors. Well audited, proven inaccurate is fine. What the regulators or the reviewers or the internal reviewers also or quality partners are looking for is the procedure and the process and demonstration of application of mind on that estimate. The estimate may turn out to be not correct 3 years down the line. As an auditor, when we are doing it, the information on hand that was there, which we tested as to be reasonable, is what is important. That needs to be put in your work paper and demonstrated. The regulators are looking for that. Regulators are, so a correct estimate, okay, but the work paper did not show. So audited deficiently is not good, right? So an estimate can turn out to be wrong, yet remain entirely defensible. If the file demonstrates a rigorous challenge, sufficient appropriate evidence, and a reasoned conclusion at the time of sign-off. A number that happens to be right, but is unsupported on the file is a finding of QRB and NFRA in the inspection of audit quality. Okay? What lies ahead? We have already discussed NFRA Audit Committee Interaction Series. There are several series covering this aspect of estimates itself. ECL is covered, impairment is covered, provision is covered, audit committee questions and evidence is expected on the file. So these are 3 things. On the SA 540 revision side, some ICI members will have to tell me what has happened to this revision of SA 540. The draft had come in and then later it was stalled. But now I understand there are a lot of other standards also which are under revision, if I am not wrong. So this is what is ahead, and that was my session. If you have any questions, or I can take them up now. Thank you.
Before I propose a vote of thanks, I would like to thank on behalf of Pune branch and on behalf of the entire managing committee, thank to Shri Shyam Tong sir, who is executive director at NFRA, and CA Pramod Jain sir, vice chairman Center of Audit Quality, for giving us the opportunity to hold this workshop on this wonderful topic. Coming back to Abhijit sir, thank you so much Abhijit sir for such an insightful and wonderful session with the various practical aspects and examples that he gave. I'm sure that we all are benefited with the case studies what he have taken. And also, like he said, that audit not documented, not done. That is the crux line what we can say. So we have to document the things properly along with the various judgments and estimates that has to be gone. So accordingly, we have to document those. So thank you all for the patient listening. We'll move on to the next session. I'll ask CS Sarika to take over the charge. Thank you.
So we have our next session lined up here, and our next session speaker is also with us. It is my indeed privilege to introduce our next session speaker. CA Arun Kumar is a fellow chartered accountant. He has 25 years of post-qualification experience in management, finance, accounting, auditing, information technology at the national and state levels. He is also a fellow of Chevening Financial Services Leadership Program of the British government. He started his career as a practicing CA and worked with private and public sector undertakings such as V-Guard Industries Limited, BSNL, HLL Lifecare Limited, and Kochi Metro Rail Limited. For the past 7 years, he has worked with NFRA and is currently the Executive Director overseeing Monitoring and Oversight Division. We welcome you, sir. I request our today's speaker to please be on the dais, and I also request Pune Branch Chairman CA Pranav Apte to felicitate our today's session speaker. The session is on concluding audit, evaluation of audit results, summary of audit differences. Sir, the stage is yours.
Thank you. Good afternoon.
Good afternoon.
Set up. Yeah. Before starting, first I would like to thank all my previous speakers for setting this level at this much higher level. It is so profounding sitting here watching them. Morning Amdesh ji, then Milan ji, now Abhijit ji. All of them have done a wonderful job, and somebody said some opening batsman. Amdesh ji. So all top order batsmen hit centuries and voluntarily retired. Now a bowler is on the stage trying to hit a century. So please be patient in your balls. So I'll face lightly only. And where is my speakers? They all left. At least one person is there. Yeah. I will be requiring you as impact substitute. So be there. Charger is my Also, while they set up, I have some feedback sessions, also some QA, question and answers for you, which you can answer using your mobile. Please take your mobile and take the website slido.com, slido.com, slido.com. Range is not there. But all network may not do this. Yeah. All of you having the same problem, or should I try something else? slido.com. So my questions will come into your phone and you can give the responses. Slido. I will show here. On. It's not recorded. Code. I forget the code. I will give you the code. So no need of entering your name. Let it be anonymous, so that free answers can come. Password. Two 27705. 287705. 287705. Internet connection. Two 77705. 7705. Questions will come only when I start my computer. Okay, let me start. So in the morning, we saw something on risk assessment. We saw something on estimation and also audit strategy and planning. Now we are at the stage of concluding the audit. We will cover two things. One is a small portion from SA 530 audit sampling, where how do you project the misstatement to the whole population. It's one of the requirements in SA 530. And then we will see one particular element in SA 450, that is summary of uncorrected misstatement. These two things, why it is important in practice is also I'll demonstrate through some work papers and some examples. So only these two things. There is nothing heavy, on just two things. And before I start, let me ask you one question. That question I planned for Slido, but let me ask you straight. We all talk a lot about reasonable assurance. Now, at what stage of audit you will say that we obtained reasonable assurance? Is it clearly earmarked or clear boundary where you can conclusively say that I obtained reasonable assurance? View this question in the context of sampling, because you are not doing an 100% audit in majority of the audits. You are doing a sampling procedure. Sampling always carry a risk, sampling risk. The risk that still your untested population may have misstatements. So in this scenario, how will you ensure, or how will you say that, yes, I have obtained reasonable assurance? What is the tool which you use to say that important conclusion that I have obtained reasonable assurance? Thank you. So this question might be in your phone. So this is a prescription from paragraph 5 of SA 200, which is one of the foundation of our audit, financial statement audit. It says, as the basis of auditor's opinion, SAs require the auditor to obtain reasonable assurance about whether the financial statement as a whole are free from material misstatement, whether due to fraud or error. Reasonable assurance is a high level of assurance. It is obtained when the auditor has obtained sufficient appropriate audit evidence to reduce audit risk to an acceptably lower level. However, reasonable assurance is not an absolute level of assurance. So question is, in your view, what is the most important principle of reasonable assurance described in this paragraph? And let me also say, everything, every sentence in the paragraph is important. I just want to know your perception. In your view, which is most important? Everything is important, that I agree. But still, out of all the important one, which one you consider as most important? So 69% is coming for this particular thing. Reasonable assurance is obtained when the auditor has obtained sufficient appropriate audit evidence to reduce the... Absolutely fine, I agree. The second one is reasonable assurance is a high level of assurance. That is also very important. It is not absolute, but high level. That comes second. So, but I just want to pick this particular assertion, which is also most important. This is what the question which I asked. Reasonable assurance is obtained when the auditor obtained sufficient appropriate audit evidence to reduce audit risk to an acceptably lower level. Acceptable to whom? To the regulator or to the auditor or to the management company? It is absolutely to the auditor. So how you decide that it is acceptable to me? As an auditor, what will be that important point where I am saying that, okay, I reduced my audit risk to an acceptably lower level? For this, you need one thing. What is audit risk? That you need to understand. This is my audit risk. Then only you can reduce it to an acceptable lower level. So how do you quantify your audit risk? This is the... Correct. Correct. Correct.
So with these certain multiple conditions are fulfilled within time or within appropriate levels, I can reasonably say that yes, I have concluded my audit with a well-defined acceptance of estimate. Or
absolutely, sir. I fully agree. But what is your starting point? From where do you start? Before reaching all these high-level considerations, where do you start?
The audit planning, which I...
planning, and then?
The execution part of it.
Execution. At execution, your key considerations are at two levels. One at financial statement level,
right.
Second at assertion level. That we saw at the morning. So the base, the root is coming from assertions.
Yes.
So at assertion level, suppose for each assertion or each class of transactions or each account balance, you are able to say that for this particular assertion, this particular account balance, I am able to obtain a reasonable assurance.
Right.
Then cumulatively all these factors will be considered. And
yes.
you will be finally reaching that level.
Right.
So today I am talking about that particular level at assertion level or at cumulatively at financial statement level, how you can quantify this particular thing called pardon? QR, okay. So QR, will take some time. So I'll tell you that website once again is slido.com. QR will lead you to that website only. So now this particular sampling risk or audit risk, how do you quantify? This is what the summary. When you quantify sampling risk at assertion level, you accumulate it at financial statement level, then you analyze everything. That satisfaction is there, at least you have some number. So this is something which is not fully addressed in Indian scenario so far. There are audit firms, larger audit firms, which are historically doing this for several times. From where they draw guidance. So one clue, one statement which is available in this AICPA standard, statement on auditing standards, that is SAS 39, essentially on sampling. They say some auditors, this is with respect to substantive test of details. The main paragraph talks about substantive test of details. A footnote says some auditors prefer to think risk levels in quantitative terms. For example, in circumstances described, an auditor might think in terms of a 5% risk of incorrect acceptance. So this term is very important, 5% risk of incorrect acceptance. Similarly, PCOB standard copies the same thing in their audit, AS 2315 audit sampling. Similarly, for test of controls also, the same provision is available. They are considering this sampling risk in a quantitative term. Now, what do you mean by 5% risk of incorrect acceptance, and how do you put this into practice? So here again, there is an FRC report which is available in the public domain. I will share this presentation with all of you. All these links are available here. In that FRC survey, they did a survey specifically focusing on sampling. And in that survey, what they found is that the largest 7 firms in the UK are following this methodology, which is copied from the AICPA guide. So how they implement in practice, this is how they put that thing into practice. Now here it says the CL what is CL? Confidence level. So confidence level means in the context of audit sampling, confidence level means the percentage probability that auditor is required to have that a balance is not materially misstated. So I am 95% confident that this particular assertion or balance is not materially misstatement. Now I quantified my confidence level. So if 95% is my confidence level, what is the risk of misstatement, or what is the sampling risk I am carrying? 5%. So that way they are quantifying confidence levels, and then they categorize the risk into several categories. Basically, these 4 categories are identified by FRC UK. Significant risk, auditors consider 90 to 95% confidence level. And if you see the last thing, low risk, there they say 30 to 50% confidence level. Why it is different? Why 95 and why 50? Any thoughts? So see,
I will build more confidence for a significant risk.
Correct. Exactly. Okay. So significant risk means it is significant. It is the most significant thing in the audit which auditor need to address more confidently. In a significant risk scenario, he need a higher level of confidence. He cannot go below. So he says, I need 95% confidence, 5% I can adjust, 5% I can carry with me. So that way I am okay. 95% is my highest level of confidence. So I will achieve that confidence. How? Through his testing procedures. And in a low risk, why it is low risk? Because he may be satisfied that because of the strong controls or because of his previous experience of no errors in that particular category, or because of its low significance, whatever it is. I am happy that even if I get 50% confidence, there will not be any material misstatement in the population. So this way he quantifies his confidence level and audit risk, and then he proceeds to carry out his further procedures. Now I will take you through 1 or 2 examples or 1 or 2 work papers where you will understand more how this is actually put into practice by auditors. Again, these are picked from actual audit files. So in this one, first we will see how the auditors are projecting misstatements. And in our SF 530 also, there are two things which mentioned at a very high level, statistical and non-statistical sampling. So these two things, when put into practice, it is slightly tricky and slightly complex, and it will directly connect with the quantification of that various risk levels, which I explained in the previous slide. So I will take you through an example, and then I will come back to this particular risk classification, how that is put into practice. Now, projecting misstatement happens at what stage of audit? And why it is required? Why it is required? That is a very simple question. It's sampling. Sample means it is representative of the population. That is the basic premise. So if sample throws some errors, that means proportionate errors should be in the population also. That is the basic assumption of sampling. That is why projection is required. Second question, whether all errors identified in the sampling need to be projected or not. All misstatements identified in a sampling need to be projected or not. Yes or no? Correct. It depends on the misstatement which you found. There are different types of misstatement. We saw something in the previous session, that is the judgmental misstatement, errors. Difference can arise. What is misstatement? It is difference between the figure which is given to you and the actual figure. It should have been, what it should have been. So judgmental misstatements need not be projected at all, because it is to be addressed in a different way. There may be factual errors also. Factual errors means there is a number, there is a disclosure that is not appearing in the financial statement, factually misstated. And in factual errors, that again classified into two different categories. Intentional, it can sometimes, and unintentional also. If it is intentional, then before projecting, you need to, again, the fraud angle will come into question. Now, unintentional factual errors, it can also be a systemic error, systematic errors. What is systematic errors? Systematic error happens when a systemic flaw, for instance, suppose in a particular control or particular process, you need to take selling rate of currency. But accidentally, by mistake, somebody programmed it to a buying rate. Now, wherever this process runs, this error will repeat. So this is called systematic error. So when identifying the errors, when analyzing the errors, if you decide that it is a systematic error, it need not be projected. You will go back to the management and ask them to correct it. What we are projecting is only unintentional and random errors. Apparently random errors with no cause, no underlying cause which is identified, and it is unintentional. This is more important. And these are the only errors which you will be projecting to the whole population. So at this point, I just want to tell something. In past 7 years, I am seeing audit files, more than hundreds of audit files. In many cases, what happens is auditor identifies misstatement, and they get an explanation from the management that I corrected it, and they note that and stop at that stage. This is not acceptable, because even if misstatement is corrected, still a lot of procedures are still left. That is something which I briefly explained, and you also know very well those procedures are. So that need to be done. Not only done, it need to be demonstrated in documentations also. Now, when you project, you can decide whether you project statistically or non-statistically. This is where the numbers play. What is the difference between statistical and non-statistical sampling? This is defined in our SF 530. Statistical sampling uses the laws of probability to measure sampling risk. So connect this back to what I said in the beginning. Now here the sampling risk is quantitatively measured, and any sampling procedures that does not permit the numerical measurement of a sampling risk is non-statistical. Now let me ask you a question. Random sampling, is it statistical sampling or non-statistical sampling? Non. statistical. Random sampling is statistical sampling method only. But when you apply that into audit, if you are not configuring this sampling risk in terms of number, your auditing scenario, it is considered as non-statistical only. It is a statistical sampling method derived from statistics, but when you apply to the audit, unless you quantify your sampling risk in numerical terms, it is considered as non-statistical. So this difference is very key, because when I say every
while auditing, suppose we check every 10th document or 5th document, or all amounts are say 50 lakhs.
Correct.
Then what is that?
Okay, this is something which I forget to tell you. Before you draw a sample, you will always examine the population for various factors. Suppose you have a performance materiality. Sometimes you may also decide amount below performance materiality for this particular assessment. If you find that some amounts are above your performance materiality, sometimes you may decide to test it separately. Sometimes there may be abnormally low values which you do not expect in your population. That also you may decide to test separately. There is something called key item testing. You may pick some items which you, in your view, is significant. For instance, in a NBFC, corporate loans, high value corporate loans may be significant. So that you test individually. The remaining population only is subject to sample test. So after doing all your procedures like this, then whatever remaining, that will be the uniform population where the sample can be representative. Otherwise, your sample may or may not be representative. So now the question is, between statistical and non-statistical, which one will you choose? This is clearly a professional judgment decision. There is nothing that one method is superior over the other. There is nothing like that. Now let's take an example for non-statistical projection. This is very simple. Non-statistical projection is very simple. Percentage of error extrapolated to the population. But I just want to introduce one sampling method, MUS, monetary unit sampling, which is widely used by the larger audit firms. Because of its, there are a lot of advantages and disadvantages, but in many scenarios, it is widely used and it is easy to use. And it gives some good results in some particular scenarios where overstatement is more expected. Now, I am taking an example based on MUS sample. So what is the difference between MUS sample and our normal other samples? In MUS sample, what is sampling unit? Sampling unit. Suppose you have 10 transactions, 10 fixed asset transactions. Each transaction is a sampling unit. You pick 2 transactions or 3 transactions, this is your sample. In monetary unit sampling, the sampling unit is each rupee. Suppose for this 10 transactions, the total is say 1 lakh. So your total population is 1 lakh and sampling unit is 1 rupee. Each 1 rupee is a sampling unit. So every rupee in the population has equal chances of selection. This is the advantage of monetary unit sampling. Now here in this particular example, to verify valuation of PPE is the test objective, assertion is valuation, population is the total value of PPE. That means in this case 50 lakh. 50 lakh is the total value of PPE. It may consist of 100 items or 120 items, doesn't matter. For us, this is the total population. Then there is something called sampling interval. What is this? You divide the entire monetary value into equal intervals. And from each interval, you pick a sample. This is the basic thing. I will explain this when we take up that work paper once again. So then, in this case, sampling interval is 2 lakh. And 25 individual items are selected for testing. That means 25, in this particular case, 25 sampling intervals are there. 25 into 2 lakh will give you 50 lakh. Then 4 misstatements were found in the test. So I have listed 4 examples. In the first case, the accounted value was 10,000. Difference found is 2,000. The percentage, tainting percentage or error percentage or misstatement percentage, whatever you call, is 20%. How do you project this? Last column is projection only. How do you project this? Because monetary unit sampling, I said, sampling interval is 2 lakh. From each 2 lakh, you are projecting a sample. So for each 2 lakh, one unit represent one sample. So for 2 lakh, you found 20% difference. So the total difference is 2 lakh into 20%, 40,000. Similarly, the next one, it is 40%. Now you are projecting, it is 80,000. Like that, you are projecting for all 4 identified misstatements, and you are summing it up. That is your projected misstatement. Done. This is simple and done. 3,60,000. Now what you will do? You projected. Now what you will do? Correct. Compare your materiality. Then if it is above materiality, decide it. You can also increase the sample size to understand that the error rate is what you found is correct or not. You can do further analytical review procedures. A lot of things are there. Finally, you will conclude whether this is required to be addressed or not. In any case, you will carry this to the summary of misstatements. Management will correct this. These are factual errors. Usually management will correct. If these are below materiality or in the last stage of audit, sometimes management also may choose not to correct. Depends. So all those analysis follows. I am not going into that. I stop at this level, and the question is, after analyzing everything, do you have that confidence to say that I obtained reasonable assurance? If you are confident, go ahead. There is nothing wrong. Now come to the second case, projecting in a statistical manner, statistical projection. Same example, same monetary unit sampling, same sampling interval, same samples, same 4 errors also. Now this is a 3-step process. Now earlier I said statistical sampling, you need to quantify sampling risk. Now here we will see how that quantification happens. So in 3-step process, we have first step is something which is called, you need to determine something called basic precision. What is it? Imagine you done a sampling test and no errors are found. Still, can you say that, that the sample is free from material misstatement? No, because it is sampling. It can still contain material misstatement. In statistical sampling projection, we factor that into account. That means even if there is no misstatement in the population, we will estimate a figure that will give you an idea of probable misstatement in the population. So this is called basic precision. Is this clear? Okay. So this is calculated based on quantification of our sampling risk. In this particular example, the auditor considers it as a low risk case. So he take a risk of incorrect acceptance of 37%. That means what is the confidence level? Risk of incorrect acceptance is 37%. What is the confidence level? 63%. So it's low risk. He is taking. He is saying, I am okay with the 37% of even if it is 37% misstatements, I am okay. Now he need to identify something called risk factor. Here I mentioned something about table C3, which is drawn from AICPA guide. Now how he will decide the risk factor? Here comes the first thing which I mentioned in the beginning. Now if you see his confidence level is 63% here, low risk. This is what available in his firm's guidance. Now he will see the table which is given by AICPA in their sampling guide. This is specifically for monetary unit sampling, and he will pick the confidence factor. Confidence factors, these tables numbers are derived based on statistical principles, Poisson distributions, etc. So, and now you will understand why it is 90, 95, 80, 85. Why not it is between, see, if you see the second thing, high risk, 80 to 85. after that it starts at 75. So what will happen between 85 and 75? These questions may come. Answer is in the table C3. If you see here, this particular table gives risk factors, risk of incorrect acceptance for these values: 5%, 10%, 15, 20, 25, 30, 35, 137, 50. So you will see corresponding confidence levels here. For all those values, corresponding confidence levels are here. That is why the firm determined their confidence level in this particular numbers. It is derived directly from that table. Now, in this particular example, since the risk of incorrect acceptance is 37%, he will take the factor from here, 37%, factor is 1, against 0 misstatements. So basic precision is all about 0 misstatements. %, 0 misstatement. That is how the factor is coming as 1 here. Now multiply it with the sampling interval, you will get the basic precision. That means even if your sample test did not identify any misstatements, there is a probability that your population is misstated by 2 lakh. Now coming to the second step, here we call something called incremental allowance is calculated. The principle behind incremental allowance is that now zero error, forget about it. Suppose you found 1 error in your sampling. So what is the probability that your population will contain more errors? There is a basic probability, say you can say 10% or whatever it is. You found 1 more error. So whether that probability again increase or decrease? The probability that your population will contain errors will increase only, right? So for every additional misstatement you found, this probability is going up. This factor is translated into numbers in this particular step. This we call incremental factor. Incremental factor means 0 we found. Now we are finding the first error. And for the first error, what is the incremental factor? The values remain the same. My risk of incorrect acceptance is 37%. Earlier for 0, we found the factor to be 1. Now for one error, you found to the factor to be 2.14. Incremental is 1 is increased to 2.14. Incremental factor is 2.14 minus 1 is 1.14. That is how in the first row I put 1.14. So this is your incremental factor. Now earlier your projected error is already there, 40,000, which we projected non-statistically. Multiply that by 1.14, that is increased to 45,600. This is your new incremental projected error. Similarly, for every other errors, you find the incremental error by subtracting it from the factor just above it. So 2.14 is 1 is detected from 2.14. For the second error, it will be the next factor. Like that, you found the incremental error, that is the difference between the new figure and the old figure. Now we reach the final step where we are calculating the upper limit of tolerable misstatement. Upper limit means this will be the maximum limit of your expected misstatement, that is the projected misstatement. Simple, you sum it up. 3,60,000 was your non-statistically projected error, 2 lakh your basic precision, and 42 is your incremental factor. You got 6,02,400. Now you found the difference. We have considered everything, every possibilities in this particular consideration. We quantified everything. Now you got a number. The analysis is same. In the previous one, whatever you did, compare with performance materiality or increase your sample size, everything is same. There is no difference. Only difference is the application. Now this is how I connect back to my first question. Reasonable assurance at assertion level is quantified. Now we will see a sample documentation, how this entire thing is documented by an auditor. This is a very simple Excel we have prepared. So I will not spend much time on this. All these things many of you know. Here, this is already covered. ROMM assessed is very low. Now, these are the two assertions which the auditor is testing here. So everywhere there is connected work papers. This is not a work paper to show your risk assessment. There are other work papers available for that. So risk classification is low. Control reliance, obviously yes. That may be one of the reason why risk classification is low. Assertions covered are accuracy and classification. These are the only two assertions covered in this particular test. It is on substantive testing for revenue from operations. Now, what are the audit procedures? That also it is mentioned here. They obtained the revenue dump, and then they found that revenue has three components: building rental, utility rental, and service charges. Revenues booked through invoice. So those process, they are summarized here. Again, for all of this process, there are detailed work papers which is referred here. Now, sampling method. This is one important thing which I just want to say. In many cases, we miss this particular thing. I have briefly only mentioned here. Now, why MUS is selected? Why not random sampling? Or why not any other judgmental sampling or half-hazard sampling? Why not? So this is where the ET engagement team documented their professional judgment, why I choose this particular sampling method. In this case, they have considered several factors, and then they decided that we will use MUS sampling, and they also have an advantage of a validated Excel utility provided by their firm to use this MUS sampling. Now, sampling considerations. What are the particular considerations going into this particular sample? Sample selection, first total population. Sir, the question which you asked, items over performance materiality, nothing here. High value items, low value items. So after eliminating all these things, in this case it is nil. The remaining population only is tested. Because again, why this 63% or 37% is coming, that reason is noted here. Because we assessed control risk and risk of material misstatement as low, and performed a number of analytical procedures to test the revenue. A 37% of risk of incorrect acceptance was appropriate for our sample. This they decided. Now they documented the performance materiality, and importantly they documented a tolerable misstatement for this particular test, a level below the performance materiality. And the reason is importantly why we picked this particular 55,000 as a tolerable misstatement for this particular test. Again, they are referring their firm's guidance, etc. In this case, as per our firm's guidance, in such cases, we may consider approximately 75% as the tolerable misstatement. Then this is their expected misstatement in the population. Why it is low, that is also they are mentioning. Now, coming to the calculations, ratio of expected to tolerable misstatement is 0.2. Tolerable misstatement by population is this. And confidence factor, again, they took from table C3. That is how they calculated the sampling size. In my previous example, sampling size was 25. That was calculated based on these values. Now, based on that sampling size, you decide the sampling interval. Divide your population by your sample size, you will get the sampling interval. That is how 25, in my example, 25 into 2 lakh became 5 lakh. Then they do the MUS sampling test. Since you have a utility, the tool will do that test. MUS seed is something which is a number which is going into your tool. If you put that number, you will get the same sample every time. If you change that number, the sample also will change. And they are referring to firm's guidance also for sampling tables. Now, most important one, the completeness of the population. I think today morning sessions, it was briefly covered. Here, the auditor is testing the completeness of population before they draw the sample. This is one crucial step some auditors at least miss. And in this part, they are testing into two parts. One, they are tallying it with the financial statement. The schedules are tallied with the financial statement. Second, they are tallying even the numbers also. The invoice numbers are tallied. And fourth, they are saying our IT team have performed GITC and cleared data accuracy for the dump from SAP. This is also most important. Their IT team got, they have a separate or outsourced IT team. They gave a clearance. Now complete. Pardon? Relevance of green note. What is the relevance of credit note? That, as an example I took, sometimes revenue may be reversed or adjusted using credit notes. So that in this particular company, if you see the understanding portion, revenue is booked through invoice booking through some application, credit notes through some application. So it is part of their understanding. Some entries in revenue happens through credit note. That is why it is taken as a separate, because it is a separate process. The revenue process is different, the credit note process is different. So these are all coming from part of your understanding. Now they tested the population completeness. Now in this particular case, since it is a population which can contain in a particular Excel sheet, they copied the entire population here. It is again a choice. There is no need that you should copy the entire population into an Excel sheet. You can keep it somewhere else also. Now, based on this, the MES utility, here they have given revenue from operations, samples from MES utility. So their Excel utility has given this 119 samples. Then they document the building rent. Building rent is tested in this particular document. I am not giving the whole details. I just will show you how they calculated the project, how they done the projection. Misstatement is identified. Whatever we saw in the previous example, everything is documented here. Confidence factor is documented here. Incremental allowance is documented, and this is again an important professional judgment which they are making, because the upper limit on misstatement is less than the tolerable misstatement. We conclude that the sample results support the conclusion that the recorded amount of the building rent revenue is not materially misstated with respect to assertions, value and classification. Now you saw how they quantified and how they got that level of reasonable assurance at this point. Then attachment. This is again SA 230 fallback. You need to document what? Very basic. All audit procedures, all conclusions we saw, and all audit evidence obtained, and significant professional judgment. So we saw everything. Professional judgment is documented, evidence is documented, procedure is documented, conclusions are also documented. Similarly, they will conduct for other components of revenue also, and finally there will be a conclusion. So after doing all this test, their conclusion is again precisely not recorded here, and finally they conclude that revenue accuracy and classification is fairly stated. So this is conclusion of one particular test only. There will be further conclusions that I will take you in the next slides. Until this point, is it clear?
I just wanted to ask one.
Please. Please.
Sorry, suppose if you use this AICPA tool,
guide, yeah.
and you use your alternate judgmental method.
Correct, yeah.
So for example, let's say you have 30 samples,
and
on 30 samples you say if the error is 1 out of 30, 2 out of 30, 3 out of 30, based on that I will decide whether what is the next procedure which I need to follow.
Correct.
And let's say if the out of 30 error is 1, which would say high level of assurance. Again, if it is 2 errors out of 30, then it is medium level of assurance. And then I further go ahead in terms of projection as well as the next process. Would that be a sufficient in your view, or you definitely need to use a tool like this for large assignments?
So then what is your basis? What is your whole basis for the...
It's a judgmental, it's a professional judgment that if
so
out
that-
of 30, if there is only one error, because see, these are...
That is fine, in so far as it is the accepted and approved practice in your firm.
Okay.
So you need to have a quality policy. No.
And that should define that.
It should define all these parameters.
Sure, thanks.
But it is non-statistical. It is not statistical. Yeah. Now just one question. To understand whatever we discussed so far, please take your phones. Select all correct options. Statistical sampling helps the auditor to what? Design an efficient sample or measure sufficiency of the evidential matter, evaluate the sample results, or quantify sampling risk. Statistical sampling helps the auditor for what? How many participants here roughly? Not 14 in any case. Only 14 answers are there. Huh? Yeah. 17, yeah. No, I'm not NFRA now. I'll be NFRA after coming there. Oh, so that disclaimer I forget. Views are strictly personal. So all these answers are correct. Actually, all these answers are correct. Your statistical sampling method help you to do all of these things. So that is why it is slightly, I will not say superior, but it is widely used by larger firms. Now we will go to the conclusion part, where essay 450 we will briefly touch upon. It covers all these things, but today I will take the last one, evaluating the effect of uncorrected misstatement through summary of uncorrected misstatement. Why this is important, that we will also come to know through an example. So what is this summary of uncorrected misstatement? It is an important document you need to mandatorily prepare because of SA 450. It contains the effect of all uncorrected misstatements. Uncorrected misstatements which are above CTT, clearly trivial. Now it will also include current year impact 100%. It will also include previous year impact also. How will you come to know about previous year impact if you are the first auditor? And why it is important, previous year impact? Because when it comes to account balances, it is important. That error still is carried forward. Now you accumulate it with a new error, it may go above your materiality. So it is important, but how will you come to know about this previous year errors? Pardon? Opening? OB testing, you may not go into that much details. So you may not come to know about the errors in opening balance because it happened at transaction level. Exactly. Previous auditor might have communicated it to the management. So you obtain that one. Then you will come to know about the previous year errors. Then next important thing is, in the previous one also this is covered, you analyze the impact of errors. Earlier in a previous work paper, we just analyzed it with respect to that particular assertion. Now here you are cumulatively assessing, holistically assessing. Suppose one error is found, what all captions or what all parameters it is impacting. So in this particular cases, it may impact your equity, your capital, it may impact even debt governance, it may impact profit, whatever it is. So wherever it is hitting, that you need to identify and document. Then is it a fraud risk? That is also an important analysis which you are doing. And then you document it. Document it means it is not a mechanical documentation. This is your actual analysis. Here, the work happens here. It is not an additional work which we are doing. Work actually happens here. The previous work paper also, which if you carefully saw it, it is not a mechanical documentation after doing all the procedures. The work happens there. Here also the work happens. Now you, in this particular example, uncorrected misstatement. The first case is company failed to recognize a provision for lawsuit, where a settlement is probable and amount is quantifiable. Somebody mentioned about the provisioning. So this is precisely the definition of a provision. Now this is a factual error. Classification comes here. Impact on financial statement. Litigation expenses is impacted. Provision is impacted. What are the related accounts affected? That is noted. And reasons for not correcting, because this remains to be uncorrected. Why management is not correcting that? That is something which is important. Management determined it is not material. Now implications. What are your implications? Audit opinion may need to be qualified if the total uncorrected misstatements are material in aggregate. For this particular one, there is nothing required. Now he is going to analyze the next misstatements also. If cumulatively it is material, then only some qualification is required. Fraud risk, no. Then he goes to the next one. It is a judgmental misstatement or a judgmental error, shortfall in ECL provision. There the auditor concludes that it is not material, so he is not doing anything, but he is also noting this could indicate a control deficiency in ECL process, revised control testing. So this is how quality comes. He actually revised control testing, because when he found this one, he went back to his drawing board and he did a revised control testing. Now, this is what SA prescribes, summary of uncorrected misstatement we saw. But actually in practice, many auditors expand this beyond uncorrected misstatement. They analyze the corrected misstatement also from a reporting point of view. That comes in the second part, corrected audit misstatement, which are listed here and analyzed. Why it is analyzed? Because it may have implications somewhere else. In this particular example, it is a control deficiency. Misstatement is corrected. It is not a qualification matter, but a control deficiency. Whether deficiency will amount to a material weakness or not is a different analysis, but in this particular case, he identified it as a control deficiency, and the next one, there is no impact. Then finally, the third part, he is evaluating, cumulatively evaluating the impact of everything which is listed, corrected and uncorrected. And here he is asking the question where prior period audit misstatements are considered. Here in this case, no such items. Then he is writing everything. Finally, implication on audit report. ICFR modified due to unremedied control weakness. So they identified a control weakness that resulted in an ICFR modification sign off. So this is how it is documented. Again, this is simple example, simple documentation. There is no predefined structure for this. Now this I briefly covered, why past errors still matter. And then after concluding everything, this is the final mental work, which somebody mentioned, sir, you mentioned in the beginning. So here all those analysis happens. You conclude each of the procedures, there will be a conclusion documented. You conclude for the particular account balance and class of transactions. You conclude for the financial statement as a whole, take it to the summary of misstatements, and then finally you decide whether everything is acceptable or not. If the aggregate differences are not material, quantitatively and qualitatively. Qualitatively is very important, because in the previous session we talked about debt governance. So, breach of that governance. Even an immaterial misstatement, insignificant misstatement can lead to a breach of that covenant. So qualitatively also you need to assess, both quantitatively and qualitatively it is immaterial, then it is acceptable. Otherwise you need to again apply your judgment. So this is an AI generated slide which summarizes everything, but one thing is missing. AI is not perfect, I understood. AI took all type of misstatement, factual, judgmental, projected, etc. But misstatement arising from analytical procedures, that is completely missed. So this is the summary. You analyze all the misstatement, classify, find the reasons, check whether it is below or above your CTT. Then identify systematic and random errors, identify intentional errors, reassess planning materiality, reassess your risk assessment if it is required, request management for corrections. Then wherever it is unintentional random errors is, finally document all your conclusions and communicate with management and TCWG wherever is required. And one last question. Try to answer. True or false? Simple question. The auditor shall communicate with TCWG the effect of uncorrected misstatements related to prior periods. Assume that this auditor was not the previous auditor. It's a new auditor. Whether there is any requirement for him to communicate the uncorrected misstatements of related to previous periods to the TCWG. Exactly. Thanks. I'm so grateful to you. So yeah. Thanks. So I am done. Thank you for a patient listening. And, thanks. So, feedback. Shall I continue? Huh? Okay.
On behalf of Pune branch of WRC of ICI, I express my heartfelt thanks to CA Sri Arun Kumar ji, who is ED of NFRA, for the enriching session on concluding audit, evaluation of audit results and summary of audit differences. Sir, your practical cases, the case studies which you have referred are really helpful. I am sure that each one of the audience will be greatly benefited out of this. With this, the session is concluded. I thank everyone for the patient hearing. We have one more session. Before we proceed for the last session, we have to proceed for the Slido feedback session on the session of Sri Arun Kumar ji. I request everyone to proceed for the same. Thereafter, we'll have tea break. Let me know if you are really interested in having tea break right now, or after that we'll have we'll continue with the last session, and thereafter we can have high tea. So, do you expect tea break right now?
5 minutes.
Okay. We'll have 5-minute tea break, but before having tea break, we'll proceed with the Slido feedback immediately.
So this is a feedback of the entire session, right from the morning, not from. So I kindly request you to participate, because this is very important for NFRA. Our next sessions are based on your feedback only. So please take your phone. You will get some questions. Just answer it. It is very quick, very quick. First is the structure of the workshop is appropriate. So you can see the numbers there. I need some good numbers. Kindly give your honest feedback, because this will decide the future workshops. 12, 13. Let's do it quickly. Just it's a multiple choice question, so you can do fast. 18, I think I will proceed to next question. 20, good, very good. Contents and presentation in the first technical session, audit strategy and documentation. Again, this feedback will go to the presenters, and it will help them to improve their sessions if required. 26 feedback already came, 30, 33, very good. Now, contents and presentation, technical session, risk of ROMM, risk of material management, misstatement. $34, thanks. 35, should I wait? 40. Okay, good. Now the third session, contents and presentation in the third technical session, accounting estimates. $36, $37. I'll move when it touches 40. Stopping at 39. 40, good. So, contents and presentation in the just concluded session. Concluding audit evaluation, concluding audit and evaluation of the statements. Yeah, my session. 40, good. Now, suggestions. This is a free text. You can type anything. Your name is not noted. You can type whatever you want. Suggestions for additional topics, inclusion in the future workshop. So this, actually we record all these things in our file. We have all the suggestions. So we proceed based on that.
So those who give suggestions, Pranavji will be giving a suitable reward.
But it is anonymous. Then how will you identify the person?
He has ways and means to, No, we know who will write what. Behavioral judgment is there with the chairman. He knows everybody will be here.
It's a dangerous statement. That's right. That's right. Should I move or somebody is still typing? Yeah, yeah. So should I move? Last one. So this is visible to everyone. It's your overall rating, Zomato rating.
Good evening, everyone. I hope you all have enjoyed the tea. Now, let us proceed for the last session of the evening. Before we proceed, I would like to introduce the faculty, the panelists for today's panel discussion. Uh, Firstly, I would introduce Sri Shyam Tonk. He is an MBA and has over 25 years of combined regulatory experience in EPFO and NFRA. For the last nearly 5 years at the National Financial Reporting Authority, his work bridges the core areas of regulatory enforcement, audit quality, and financial governance. Currently, he leads investigations in NFRA's investigation division. He is also Chief Vigilance Officer of NFRA, overseeing the authority's ethics and conduct framework. Our second panelist is CA Praful Chajad, sir. Okay. I request Sri Shyam Tong sir, please come on the dais. I also request CA Praful Chajad sir to come on the dais. CA Pramod Jain sir and CA Nikhil Kenjare to please come on the dais. CA Praful Chajad is a fellow and practicing member of the ICAI and member of CPA Australia. He has done LLB General and holds ICAI certificate on forensic accounting and fraud detection and certificate on business responsibility and sustainability reporting. He was the president of the ICAI for the year 2019-20 and was vice chairman of WRC of ICAI, was chairman of WRC of ICAI in the year 2007-8. Presently, he is serving on the board of State Bank of India as an independent director. He is deputy president of Confederation of Asia and Pacific Accountants, Malaysia. He is member of Professional Accountancy Organization Development Group of International Federation of Accounts, that is IFAC, New York. He is a member of Board of Management of Mumbai School of Economics and Public Policy of University of Mumbai. He is also governing council of member and chairman of Banking, Finance and Information Technology Committee of Maharashtra Chamber of Commerce, Industry and Agriculture. Our next panelist is CA Pramod Jain. He is a commerce graduate from Sri Ram College of Commerce. He is a fellow member of the ICAI. He is a fellow member of the Institute of Company Secretaries of India also. He is a fellow member of the Institute of Cost Accountants of India. He is a Bachelor of Law. He is qualified as an Information System Auditor. He is also member of All India Management Association. He is also an insolvency professional. He has also passed the certificate course on CSR of ICAI. He has also passed the proficiency self-assessment test for Independent Directors Data Bank. He has passed certification course NCFM of National Stock Exchange of India, that is NSC. He has also done certification courses CAAT and post-qualification certificate course on valuation of ICAI. A big round of applause for CA Pramod Jain sir. Our next panelist is CA Nikhil Kenjare. He has got a diversified experience of more than 25 years in the areas of audit, assurance and risk advisory. His specialization includes assisting the clients in systems, processes, internal controls and complex financial reporting topics. He is experienced in leveraging data analytics in various forms of assurance services and has conducted many workshops and trainings on the use of data analytics in audit and financial reporting. Let us have a big round of applause for all of the panelists. Before we proceed for the panel discussion, I request our chairman of Pune branch, CA Pranav Apte, and our regional council member, CA Abhishek Dhamne, to please come on the dais and felicitate the panelists. Sri Pramod Shyam sir. Praful sir. And lastly, Nikhil ji. With this, I hand over the charge to the panelists.
So very good evening to all of you. Good evening. So you heard all the star batsmen's bat, right? The Vaibhav Suryavanshis, Virat Kohli's, Rohit Sharma's, and our own Sachin Tendulkar, right? Yes, sir. So now I am also very eager, as you are, to listen to the mentors and coaches who, mentor those star batsmen, right? Yes. So I'm extremely honored and privileged to have such a distinguished panel of leaders, I would say. I hope you all will agree, right? Yes, sir. Chajed ji, past president, Pramod ji, Accounting Standards Board chairman. He's into so many activities. Nikhil ji with such great body of work behind him, right? I'm truly privileged and honored to, have a discussion with this esteemed panel. So the panel discussion is on strengthening audit quality. The next part is very important. How can we do that? One of the ways is, let's look at what are the global best practices, right? So we are going to hear the panelists enlighten us as to how we in our country can improve the audit quality, right? So my first point of discussion to initiate with the panel to define the core metric based on your experience and expertise. What does audit quality truly means to you? Chajed sir, you can take this.
Thank you. Before I answer, let me also, on behalf of the ICI, of course, President, Vice President has thanked, but on a personal note, let me thank Sham sir, Arun ji, entire team at NAFRA, including the chairman sir. As we always say, now we are talking about the audit quality, and everywhere now the NFRA came out with the two-way communication. A simple communication, we met them in one of the function, it was informal, it was not a formal, in one evening we met and we just discussed, sir, your aim and our aim is same. We are catering to same fraternity. Why we don't want to, why don't we join hands together and, try to give something to back to the fraternity. That one conversation is today's seminar is result of that, and therefore, sir, I am really thankful to you, because as a chartered accountant, let me be very honest, sometimes we feel, when regulator is there, so there's some pressure is there, but this kind of approach from the regulator, that friendliness is there, which is totally reflected. Chairman himself traveling, coming here, spending his, most of the time with us, understanding what we are, also doing at ICI level and all those things. So, sir, please accept my sincere thanks to you and your entire team. Not only this for seminar, sir and me were constantly, right from designing to implementing, because it is not easy to get chairman NFRA, president ICI kind of thing. So I'm really thankful from ICI side, Pramod Bhai and everybody has contributed, and of course all the speakers. So with this note, I'm really thankful. So now, coming to the panel, everybody was telling okay, these views are my personal views and all those things. I don't want to say my views are my views, okay? But my disclaimer will be, now Pramod Bhai is the, you can see biodata was very, very long. And currently from here also what I can see, Vice Chairman for the Center for Audit Quality Committee of ICI. So I expect lot of technical answers will be given by Pramod Bhai. I will be just, since I am sitting here, ball comes first to me, but I will, pass on to Pramod Bhai for those answers. Now, having said that, sir, audit quality is really, really important. And I think today's workshop is also talking about, ecosystem, how we can do the better ecosystem. And of course, there is no proper definition as far as the audit quality is concerned. It is, I think, for everybody's how they look at the things. So investors want 100% reliability. As the regulators, they want compliance to various things, be it to standards or be it to any regulations. Government or MCA wants again that compliance kind of thing. The firm, when they do their internal assessment, they want the best quality in terms of whether they are, what I can say, adhere to all the standards which is expected. So quality, I think, is a judgmental thing from everybody's, point of thing. And there is, enough of material which is available, which talks about generally, not the definition, but generally about the audit quality and all those things. So IFAC, International Federation of Accountants, their statement is there, and they talk about right people, right governance, right regulations, and right framework which can, contribute effectively this ecosystem which they are focusing. So when it comes to the people, I think people from both the ends, from management side and from the auditor's point of view, they should be well qualified. They should understand the business, what they are auditing kind of thing, because now the businesses are also evolving. We find the startups having losses into huge, but their valuations are again skyrocketing kind of thing. So we need the auditors and this entire ecosystem which can strengthen the ultimate output which is expected by the various stakeholders, be it the government or be it the investors, which can give. And there are a lot of things which according to me can constitute the audit quality. And for that, as I said, we should have right skills. We should be able to, as auditor, we should be able to ask difficult questions in times when it comes to, if you sit on the, as a independent directors on the boards of the company, especially on the audit committee, you should challenge what management is trying to tell. And if we do all those things, I think whatever results will come, that can give the good, output, which according to me can be good audit quality.
Wonderful. Pramod ji. Yeah.
Thank you, Shyamji. In fact, namaste to all. And in fact, it is a momentous occasion that for the first time, both the regulators, ICI and NAFRA, have come together for the single purpose of creating a better financial reporting ecosystem. And the work of this panel has been actually eased by our moderator for this session, Shyamji, because he said that technical would be the all earlier sessions, it will not be technical. So what my president sir said, that nothing technical in that, so we'll be just talking generally. So putting about the audit quality, my personal view, again personal view, nothing from NAFRA or ICI, that if I talk about audit quality, when the financial statements are prepared by the preparers in true and fair, and the auditors give their opinion that it is true and fair, and ultimately the stakeholders believe and they are more confident that yes, they are actually true and fair, that is a pure audit quality. That I will, in a crux that I would say. Thank you.
Your comments please on this.
Thank you. Good evening everyone. I, like an true auditor, I will try to look at this question in a different way. Rishikesh Badwe, I think he is not there. So he is a good singer, classical singer, and one of the famous percussionist in India, Pandit Suresh Tarwalkar, he mentions that Shastra, Tantra, Vidya, Kala, these are the 4 elements. So if we know why we are doing something, that is Shastra. That's the starting point. Tantra is whether I use analytics, substantive, etc. I should have hold on. I personally did not do it. I should have capability created internally, externally through consultant, etc. audit ecosystem. Then the Vidya is syllabus, which is checklist, auditing standard is all there. Right now problem is not of a syllabus. Syllabus is enough. The enforcement and all these three factors pulled together in a context is an art. So audit, whether science or art, both the answers are true. Every auditor is an artist. But if we forget that artist element, we have documentation which is in form complying with something, but in substance it's not. So bridging that gap is the audit quality, I would say.
That's a wonderful way of putting across and anointing all the audit professionals as artists. Thank you for that. And wonderful foundational insights from all the panelists. So quickly I'm moving to the next topic for the discussion, which is in our title, Global Benchmarks. Right. So the international landscape, as we all know, is changing, tremendously fast, and the global benchmarks define the, audit quality today. And I want to ask the esteemed panelists as to what can we learn from them. We in India. Yeah. Yeah. Sorry. So what can we in India learn from those, global benchmarks?
So, sir, we are talking about global benchmarks, but I think all our even Indian benchmarks are now, fully aligned to, the global happening. And I think I'm really proud that being a member of the ICI and the great work which ICI, along with the support of NFRA in terms of, setting the both standards as well as, the accounting standards and the auditing standards, where that endeavor is that our standard has to be world-class standards. It is not only from the quality point of view, but also our, now we got so many Indian entities which are listed abroad. Their shares are being listed on various exchanges abroad, overseas. So many overseas companies are coming in India, setting up offices in India. And today, Honorable Chairman was talking about the Vikasit Bharat. So kind of thing. So this is the journey. And I think whatever global best practices are there, India is in a now unique situation, which, we are trying to capture. I can tell you, this IFRS Foundation, this IFRS, and I do not know current position, maybe Pramod can help me, but when I was in the active mode, and that particular time, even the Japan, they could not adopt the IFRS because that, who will translate? Because all these global standards are in English and they want everything in Japanese. So again, while accounting standards are standards, so in standard you have to be pinpoint what is the exact meaning. And that particular time, I am talking about 3, 4, 5 years before, and that particular time that convergence was not there. So I think we are in a unique positions where, the global benchmarks and Indian benchmarks are absolutely world class. And as he was talking, it's not about the standards, but it's about how we implement and how we educate, and collectively we put all those things into this thing. But again, talking, again, there is a IFAC and there is the international AASB, what we call accounting and auditing standards board kind of thing. They come out with various frameworks and they come out with the various this thing. Now again, focus is from shifting towards the risk based. The focus is shifting towards the quality measurement kind of thing. So it is gone are the days where we used to say, when I did CS way back in 90s, the approach was totally different, tick box approach and sampling kind of thing. But now all those you name the area, and there are some global and Indian benchmarks are there. So I think there are enough of material which being they are all chartered accountants, I did not talk about them, IQSM and all those things kind of thing, but those are enough material. If people can add something.
Yeah. Thank you, President sir. In fact, yes, very rightly said. Yes, Indian standards, Indians are actually at the global benchmark. I agree. And yes, the bigger firms have already done it, but yes, the smaller and medium firms have to catch up. Yes, they have to enhance, no doubt about that. And they have to shift from the reactive and checklist driven approach to proactive and risk management based, and embed the technology out there. And the main thing, if I tell about the small and medium firms, they need to enhance and benchmark them, not only globally, but firstly I will say, because globally it is already there, from the bigger firms. And for that, But the Center for Audit Quality has already brought one very excellent tool, I would say, not tool, but yeah, maturity model, the Audit Quality Maturity Model version 2.0. I'll request each and every firm to self-evaluate them, because they will come to know what are the benchmarks. So unless they know what is to be done, they won't be able to do. So these, on that level, when you self-evaluate, you'll come to know, okay, these are the areas which the bigger firms are already doing, let us also do that. So at least when you know what is to be done, that can be done. So bigger firms, India already doing, the small and medium, few are doing, but I'll request everyone to do, so that when we say Viksit Bharat 2047, then everyone has to be to arise to that level. Only that part I'm saying. Thank you.
So whether what is the current status? Whether Japan has adopted IFRS or
currently also not.
Currently also not. That is their problem, sir. That I cannot answer. But the current situation is that the IFRS standards are not yet. Japan could not adopt because they could not translate.
No, actually, the problem is when you have a standard, you translate, it may lose its essence. So that essence has to be. It has to be very, it requires a lot of, and that amendments are too frequent. Amendments in the India's AS is too frequent. So every country has its call.
There's scope and potential to help the Japanese on that count. Yeah, Nikhilji, your take on this?
No, all points are covered. Only I will supplement that if you see PCOB standard 5, that is covering the internal control part for SOX listed entities. And because of that standard, they have mindset of doing integrated audit. I think we have that in form of IFC guidance note in India, but whether the audits are really happening in that integrated form, that my control assurance determines my level of substantive testing, that's something will require a global benchmarking or comparison at least. That's my view.
Wonderful. Wonderful. Thank you for mapping this, how the global landscape is shifting towards greater transparency and rapid tech adoption, I believe, right? So moving forward, I would request the panel to dwell and give their views on what are the gaps in audit practice, or I can put it the other way also. What is the scope for improvement for the Indian audit practitioners? How do you look at it?
In terms of improving quality, I think they need to invest a lot into both technology and also enhancing skill sets of this thing. Problem with India is, compared to the West, when we talk about global is dominated by big 4, big 6 and big firms. In India, 70-80% of the concentration is into very, very small proprietorship kind of thing, or very small, partnership kind of firm. So that kind of capital which is required to, give tools and all those things. So that kind of hand holding, that capacity, I think that is missing, and that is very, very important, because, doesn't matter whether you are a small firm or a big firm. The expectation is same. Your quality has to be the best. Tomorrow some problem comes, there is a equal, oversight by all regulators, right from, you name the regulator and that oversight is there, including ICI and all those things. So now one cannot say, okay, oh, I am running a small firm and these are my constraints. So I think India needs to invest a lot into this thing, and once we are at one level, I think then quality is just, what is quality ultimately? Everybody is a skilled chartered accountant. Everybody has undergone into whether they are working with the big firms or small firm. Same equal examination will be passed. What we lack is, unfortunately, that capital in terms of human capital, in terms of technological, capabilities. And I think once we bridge that gaps, and as today we are coming together, ICI is also taking a lot of time. He mentioned about some tools, etc. ICI is also developing some of the utilities, not in terms of only, what you can download from the website, but actual tools which the bigger audit firms have in their possession, kind of thing. So this is the journey, and I think in times to come, that gap can be minimized in terms of the quality. This is what.
Yeah. Thank you, President sir. In fact, if I talk about the audit quality in India is good, no doubt about that. Otherwise, about all business entities, corporates, PSUs, banks, etc., they all have been auditing, and they together have brought India to the 5th largest economy over the past 75 years. If the audit quality was not good, it would not have happened. Right, but that, yes, it is not that there are not frauds in India or abroad. Abroad also there are frauds. It is not there. If there were no frauds or there were no non-compliance, globally there was no requirement for any regulator. Agar fraud ही वहाँ नहीं होता, there was no requirement. There is also there. So saying that only India has, other countries is not having, that is not correct. But yes, improvement is required here too. If we see just a comparison, actually what happens, annually I would say there would not be more than say 100, 200 frauds which are reported out of 60 lakh audits of financial statements done in a year. If you take a percentage, that is less than 0.002%. But actually what happens, I was having one of the sessions with one of the fraud investigators, and there they were saying, when I showed them the audit report and reasonable assurance, Pramod, you are talking about only chartered accountants. But I'm not, it is not about that. So I just asked them one single question. Sir, in your view, all the IOs and all, they were there. How many companies are there in India? They said 2,000 to 3,000. I go, no sir. At that time they were 18 lakh. Just because the cases which come to them, which are a fraud, they feel that every auditor is wrong. Same thing actually happens with every regulator. Say, in ICI we have got disciplinary committee. In disciplinary committee, over the past 6-7 years, we have decided on around 1,500 cases. Out of which 700 we have punished. So if we see, out of which maybe 200, 300 would be related to audits. So if we sit there all day, we say, "Arey, sare ye galat kar rahe." Because the cases which come to us are only of those persons. So that mindset sometimes comes with all regulators and investigators, right? But yes, again, gaps to be filled, very, very important. Again, as I said earlier also, if India has to become Viksit, it won't be able unless our SMPs rise to the occasion. And yes, they have to their own good practices. And because what is happening, from our smaller firms, articleship is done by the chartered accountants. And if they are not strengthened, the CAs who become, the articles who become CAs from there, they go to the industry and the bigger firms. So their level is not up to date with the bigger work they can do. So in my view, these SMPs, every SMP has to strengthen and improve their audit quality. Because ultimately, they would be serving to the higher ones or going further. And of course, just to give an example, we had today's session talking about ECL. Yeah. SMPs, they don't know, because many, apart from say 27, 28,000 companies, all other 60 lakhs, I would say, have to follow AS. So ECL, those who are following, they may be doing. But in the AS system also, there is a system of provision for doubtful debts. So at least if that is done at the ground level, they will get into the habit of a better representation in the financial statement. So that I feel should be done at the ground level. And also just want to say that various tools free of cost has been issued by the Center for Audit Quality, like simple materiality, determining materiality, download free of cost. Download it, put certain figures, the materiality levels would be there. And of course you can change. Then you have got a tool for engagement letters. Actually you have it. Why I'm talking, because it would be there later on also on the ICI TV and the YouTube. So anyone can see, please download those tools, engagement letters, you type certain particulars, and on a click of mouse you can have 100 engagement letters ready. Of course, that can be very dependent on case to case of the audit only. Then we have got a very important tool for all the standards of auditing review and compliance. A beautiful tool. Why I'm saying, if that is done at the SMP level, the bigger firms are already doing. If it is done at the S&P level, my audit quality will improve and enhance like anything. And of course, AQMM, I already tell, even the basic certification, because it has to be inbuilt into our minds. A tool for issuing of certificates. That is the basic, now which we try. And everyone relies on a chartered accountant certificate. So please download those tools and give a strengthening to our assurance practices. What we have seen in FRRB and others also, QRB also, QRB I would say specifically, where the listed companies are not being reviewed. Even if the audit is done by the top 20, 50 firms, and audit is of other than listed entity, there is a variation in audit quality. So what I want to say that please have integrated that habit that every audit has to be taken to that level. So only if that is done, then the audit gaps can be actually bridged. Thank you. Thank you.
Wonderfully you put it, Pramodji. Nikhilji, your views are very important because you have, experience at Big Fours and, internal audit. I think you are a board member there.
Yeah.
So how do you look at this? How do we bridge?
It's a challenge that all these points are covered now. So I will have to bring some different dimension. See, there is a fear in people's mind, especially the entry-level auditors, that it's a risky profession. First thing, largely at the profession level is, audit is a noble profession and it's an interesting, enriching profession, because only profession where we have access to a security guard as well as board member. Correct? So and for me at least, when I was part of my employment, you earn and you continuously learn, because the systems and procedures which I have seen for, I can name those entities like Tata Motors, Airtel, all big entities. One serious thought given in one audit of Tata Motors helped me do in consulting about SAP, internal controls around SAP systems, how rejections are tackled, all the business angles of it. You have got that much potential of enriching yourself if you pay attention to it. So the point is, it's an interesting profession and we should invest into that interest element. That will help.
Sometimes jokingly he said, mention noble profession. The outside world also takes us the noble profession. So when it comes to fees, they say you are in a noble profession. So they don't pay us also. And I think there, sir, when
That's
you are also, now this is a collaborative, this thing. So we should have oversight on those also, whether they are, one of the, key when it comes to the audit quality, it is directly linked to what I get and how much time I am going to give. So you cannot expect me, now there are some of the, PSUs, etc. There are standard fees which you are going to get, say bank branch audit, for example. This much advances, this is the only fee. And doesn't matter whether in that particular branch you have to spend not 3 days, but, 10 days. Because so many issues could be there, so many NPS could be there. So I think, now this is the ecosystem, which I am not saying to you per se, but this is the collective. Now, if we want to build India and if we are expecting, and as you were saying, sometimes people are now scared about, the coming into now chartered accountant. They got various options. I can do the tax practice also. I can do the, attest function also. So every time government brings new regulator, people feel, अरे ICI था, अभी NFRA भी आ गया, अभी practice नहीं करने का, अभी दूसरा कुछ करते हैं. So there are few people also, but I think this kind of, and I am really thankful to you, not just because we are having this program, but the approach of the regulator of NFRA and ICI, that now we are coming to your doorstep. Doesn't matter whether in Pune we got 10,000 members, but there are only 40 members or 50 members or 80 members. But this approach, at least that beginning, sir, you are done. Yeah. And this, I think, will, in times to come, it will prove that again the golden days for the, the people's, whatever they used to feel about the threat in terms of continuing as the auditing profession, I think it will go away and it will really help, sir. And that will improve the quality of audit also, sir.
Wonderful. I think what a candid assessment from all the three panelists, and I compliment Chajed Saab, being past president, that there has to be a balance struck between the public interest watchdog and remuneration. There's no doubt about it. And we are talking about quality. So they are an integral part of, those things. And also acknowledging that, there is scope for improvement is the first step, right? As Pramodji said, we are also doing well in India. There's no doubt about it. But to acknowledge that, we have certain higher benchmarks to be met keeps us going and achieve that quality. And this requires a collective push, I think. And today's joint workshop also, serves that purpose, isn't it? To equip the SMPs in terms of upskilling, and improving their skill sets, the knowledge bank. So I think the workshop also serves a purpose in improving the audit quality. So to conclude, Chajed Saab, Pramodji and Nikhilji, now there are a lot of expectations from the stakeholders, right? And change needs to be a coordinated approach, right? And today's experiment is one of that, right? So I want to know your specific, what could be the ways and means to satisfy these stakeholders. It all again boils down to the quality and the aspects that we spoke. So what else can be done to, ensure that the stakeholders, whether they are the users or the investors, creditors or regulators, how they can be, made to understand that yes, the practitioners have it in them and they are the best in the profession.
Absolutely, sir. So there is a lot of, I have to be very clear, as we all said, and that is a clear message that we just can't blame that there is a lot of expectations by the society from the auditors. I think if we are into this particular profession, we need to be, the best in the world, at least best in what we are trying to do. It is not like that, I am running a firm, so that's why whatever audit will come, whether I understand that business or not business, I will accept that. So whenever it starts from accepting the assignment. So as a fraternity, we should also be very clear that if I am taking an assignment, I understand that business, or at least I will put sufficient time into that. So this is one side where we will also have to match the expectations of the various people. But secondly, sir, now through your help and through the, there is, all these accounting standards, auditing standards, or any standards for that matter, if you speak, they cannot be, foolproof guarantee of what we are doing. So every standards at the end, they talk about a reasonable assurance. But unfortunate event, suppose something happens, that reasonable assurance everybody forgets, be it SFIO, be it ED, be it CBI, and they forget that there is a reasonable assurance attached to this particular thing. So I think there also collaboratively we will have to educate, first and foremost, we will have to educate the chartered accountancy. I am not blaming the other people. Suppose if I am expecting something from the other regulators when they are looking at me, first my house should be absolutely clear, and that's why my request and ICI is also trying to do in terms of, enabling good networking guidelines, providing free tools kind of thing. But I think at the end of the day, it is the quality, it is your commitment, it is your efforts, and it is your seriousness, and it is how you look at that particular assignment that is going to determine, at least to your satisfaction and to the greater satisfaction of these first-hand user of those audit committee, or if they are listed companies, audit committees, unlisted companies, to the management. Yes, my auditor has done, thorough job. Many times what happens, even when we talk about quality and all those things, we talk about independence and all those things, but ultimately, the work is beyond, or to the technically it is the shareholder which approves kind of thing, but ultimately it is the management's proposal of alerting the audit. Sometimes, especially for the smaller firms, if the client is big, so sometimes they are scared of asking difficult questions, especially about the related party transaction, especially about, intergroup, whatever they are trying to do, or materiality kind of things, sometimes revenue recognition, which model is good, not good, sometimes the client books some revenue and some under that pressure. So I think we'll have to come up to that expectation level. Having reached up to that, I think then collaboratively we'll have to give education to various stakeholders in terms of my limitations. And I think it is a joint, if country wants, if Prime Minister, Honorable Prime Minister want that Indian firms should come up to that particular scale, it will happen only when we have that confidence, we have the love, respect towards entire ecosystem. And I think, again I am telling, this kind of programs is the first baby step into that particular direction. I am quite hopeful. I had seen the profession from very closely, being associated for very long years. Sir, your support will definitely fill that particular gaps or bridge that particular gaps. This is what I take as this.
Thank you, President Sir. In fact, I'll just supplement what Professor said. All these fraud investigators, actually, what is feel, again, personal views of people, that when they see that, okay, that auditor is not colluded with that fraud or NPA, they try and find out something into the auditing things so that they can tell someone, okay, some action has been taken on someone. It should be basically, if they are involved in fraud, to that. Otherwise, all audit, ICI, NAFRA, they are there. Of course, they pick out that and then send to the ICI, NAFRA only. But again, their role should be post fraud. Actually, otherwise, the fear is too large on the members. Now here, just to say further talk upon this subject, from the stakeholders, we need a very good support, especially the central government. Why? Now, what is happening that many of our members do very good audit. They even qualify. When they qualify, say suppose of a company, I'm not talking about the other proprietorship, partnership, LLP and others. So if they qualify in a company, then certain non-compliance is there. So what action has been taken on those preparers by the relevant regulator, I would say regulator, Ministry of Corporate Affairs? To our knowledge, to my knowledge, I have not read anything. Despite issuing qualifications, if an auditor issues an MOC in the bank, what is actually experienced by others? The next year, either he will not be given that audit, or the audit will be given, the fee would be lower. So that discourages, that will not lead to good audit quality. That will not lead to good audit. So that hand holding is required. Even if I talk about whether it is ICI or NFRA, where it is the auditor is held guilty for not reporting that the financial statements were not true and fair, the auditor is punished and should be punished. No doubt about that. But what action has been taken on that company? I have not heard. ICI has sent to the ministry, but we have not heard. We are not aware whether any action has been taken on those preparers or not. I don't know about NFRA whether they have sent and they have received any communication. But again, when auditor is held guilty by the preparers, they should also not be punished, whatever is the law. Whatever is the law. Not beyond that. Not beyond that. But again, we require that strength. If auditor is doing good work, should be appreciated, and because if any action is taken on those preparers, the message will go loud and those preparers would be taking audit very seriously. Today what they say, kar lo na, qualify karoge, jo hona tumhara hona, hamara to kuch hona nahi. So that is the biggest, I would say, take if you can take that. Yes. And also, many a times what happens, a case is held that the audit of a listed or a PI has been done by a person who has just qualified, say 1 year experience, and they said nothing is to be done. There is a provision under the Companies Act, section 139, subsection 11, read with the rules, rule 3, that the board of directors or the audit committee, wherever it is, they have to look into the experience and qualifications or the expertise required, which is commensurate with the commensurate with the scale of the company. So, where did in those cases seen that where did the management saw that experience and the expertise commensurate? because it is that responsibility. No, these things, if the central government looks, I am very sure the things which are happening, it can be further improved, right? Then again, last point into this. Currently, everything is very fine, but in the coming years, there could be a issue. What issue? Up till now, basically what is there, that every entity have to follow the prescribed accounting standard and the auditing standard. Companies, we know two set of accounting standards, Ind AS and the Companies Accounting Standard Rules 2021, all others the accounting standard issued by ICI. Now, various acts which are now established, which are now made in the parliament for particular sectors, those acts says that we will have our own accounting and auditing standards. Like currently LLP, then I've found multiple cooperative societies, electricity. How many set of accounting standards and auditing standards would be there? How will the preparers and the auditors do that audit? Then where is the standardization? The standardization could lose. We have to tell to the parliament that every act should not provide their own accounting and auditing standards. Sir, then worldwide it is nowhere. Here, I have seen in various acts, they are having their own. Till date, they have not prescribed, but they have started asking the questions. When it came to us, when I was the ASB chair, or in the other, I told them, sir, you need not have your own accounting standards or auditing standards notified. Have that of...
You have put forward your thoughts, Pramodji. Nikhilji, your take on this, please.
Yeah. I will try to address the client side of stakeholders.
Yeah, certainly.
When I was doing this England and Wales Chartered Accountancy, what changed my perspective is, if the requirement of a question is you draft a response to company CEO, I can't use language of understatement, overstatement, etc. I have to speak the business language. So learning that business language beyond my auditing jargons and accounting jargons, that is something going to help us. Why? Because for a question of 10 marks, technically you can get 12 marks in ICAEW because 2 marks extra awarded for your skills, which demonstrated that you address some of the concerns which CEO may have. So learning that language beyond accounting and auditing, that's something which, if it is practiced, that's the big help.
Beautiful. So I think the panel has put forward the roadmap wonderfully well, and I think what comes out is it is not the regulators alone. You know, I think the board is also a partner. Even the investors, you know, staying vigilant also contribute, isn't it? So I think that has come out wonderfully well, and no doubt that NFRA and ICI have their task cut out, right? And the collaboration that we are forging, as Chajed Saab has said, I think it will go a long way. I fully agree with you, and I sincerely thank our panelists to have given their candid views on the points that we discussed. A big round of applause for all of them, please.
Thank you, sir.
It was wonderful, and
I'll just like to add. So when, as an auditor, or as a chartered accountant, we always feel NFRA is doing something or oversight is on us and etc. But I think they are equally doing lot of work from the company side, so that your and my life is, you know, becomes easier. Lot of guidance in terms of audit committees also given by NFRA. So it is not only they are focusing on the chartered accountants. NFRA is also fully conscious that who prepares the accounts first. So account preparing job is of the company. So there is a lot of, sir, I must compliment. You are not only focusing on chartered accountant, but also giving a lot of guidance to the audit committees. And I think that is how we can, you know, together we can make this journey. And we are really thankful, sir. You thanked us, but again, one more time repeating, I must thank you personally. He has taken a lot of time. You know, each and every agenda, sir used to, as we have seen his profile, he's doing a lot of vigilance work and all those things. But for every small thing, I think we had the Zoom call also, what is to be there, how structure will go, and each and everything. So thank you so much, sir.
Thank you.
So
It's
please
a
accept
joint
it. Absolutely.
responsibility, and we commend the ICI, the past leadership and the present leadership also, as well as the professionals coming forward, and lending their hands in furthering this cause, right? So thank you, and I wish to now give my comments. I have been asked to give a valedictory also, so without wasting much of my time, so I would like to complete from here. So fair enough. So I think we enjoyed the program. How about the participants? Can I have? How was the program? Was it, or can I put it this way? Were there actionable takeaways for all of you?
Yes.
I think that sums it up, right? So I thank the NAFRA chairperson, I thank ICI president, vice president, the local chapter, Pranav ji, Abhishek ji and their team for putting up a wonderful show here. I also am grateful to Chajed Saab. You see, small dialogues and small meetings end up, bringing up beautiful results. This is one of those, right? So I thank you for taking that interest. Pramod ji has been instrumental. Behind the scenes, what goes on is not visible to all. So he is one of them. Behind the scenes, a lot of activity going on to, conduct this program. I would also like to thank the NAFRA team, and I request a big round of applause to Arunji for, the planning stage, the curating the presentations and everything. I would also place on record the contribution of Vidyadhar Kulkarni ji. So he has been instrumental in all these activities, and today's program also he has been very important player. So I thank him. He was with us till this June 9, and the technical sessions, I think I told you they battered like Vaibhav, Kohli and everything. So I, on behalf of NFRA, ICI and the local chapter and all the participants, extend a very big gratitude to all four of them for being part of this knowledge sharing exercise. A big round of applause to all of them. I request all of you again to give a big round of applause to the esteemed panelists also for sharing their wisdom, right? So, many बताए ना, they are the coaches and mentors, right? So thank you to the esteemed panel, to the local branch, Pranav ji and your team, wonderful. To all the masters of ceremony, thank you very much for taking us through the program. And as we look forward, NAFRA and ICI stand together in achieving the common objective, that is improving audit quality. And we thank the esteemed participants. I think a big round of applause from our side to the participants. Thank you for being there. So we, NAFRA and ICI, are working together, and we hope to deliver in the coming days many more technical sessions, and your valuable feedback will be taken into account in formulating the next sessions. Thank you. It has been wonderful. Good day. Yeah.
I also, on behalf of ICI, the Center for Audit Quality Committee and the Pune branch, and of course all the members, participants here, thank actually NFRA for conceptualizing such a joint program for the first time, and which will take us to in the long run on a very positive note, especially the chairperson of the NAFRA, Nitin Gupta ji, and of course Shyam Tong ji did a splendid minute to minute, second to second. He was working, Arun ji, again the whole NAFRA team. So on behalf of all of us, we really thank you, and thanks to all the speakers and the organization. Thank you very much.
What a wonderful deliberation and discussion it was. So I'm once again thankful to each one of you. Let us stand for the national anthem.
अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंधु गुजरात मराठा द्राविड़ उत्कल गंगा विंध्य हिमाचल यमुना गंगा उत्कल जलधि तरंगा तब शुभ नामे जागे तब शुभ आशीष मांगे गाहे तब जय गाथा जन गण मंगल दायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Thank you.